Okay, guys. You guys, sorry for the delay. We had microphone issues. Both of us did. Can you guys hear me okay? Just put something in the comments. Just put a number 1 or something if you guys can hear me okay, or if we need to adjust the audio. And yes, Joel, this will be a replay too. It's live, but it will be able to replay if it's too late for you to watch tonight. Completely understand it because it's very late, and this is, I think, the latest I've ever done a live stream. But just getting everything worked out and stuff. But anyways, you guys hear me okay? Welcome. Nice to see you. You guys just put something in the comment before I get started. I want to make sure you guys can hear me.
Is that sure? Okay.
Okay. Is the audio okay, guys? Okay, good. All right, we're going to cover a few things tonight. It's probably not going to be very long, but a few things. Basically, I'm going to show you guys like an audit, Experian Business Credit Report, full report of one of my mentorship students. And I'm going to show you guys like the positive things, the negative things, the neutral things when it comes to scoring on the Experian Business Credit Report, and things you want to look out for as well. So I guess without further ado, let's get into it. And for anybody that's just tuning in and never been here before, make sure you hit the subscribe button if you're not already a subscriber. If you're trying to build up any business credit, this is the right channel for you. I don't gatekeep anything like other channels, and I actually show you the steps you need to take to build up business credit to be able to achieve results like this. This is just a couple stacks. I have so many, but I've got cards pretty much through every possible underwriter you can think of, even say one underwriter, FleetCor. I have like 7, 8 cards directly with them under different brands, and teach you guys also how you can use fuel cards to leverage not just your business credit, but how you can use those high limit fuel cards to purchase real estate. It's not something I can just teach in a live, but for my mentorship students, I do teach that once they get approved for, say, Speedway Super Fleet. It says multi. Multi means it can be used for anything. It's not just fuel only, like most of the gas cards are. You can only use them at the pump or for fuel only. So also want to show you guys the slide here that I have. This is our new client portal. Basically, this is just like a demo of it. I'm not going to cover this too much because I've already done a live on this the other day about this. But I've been building this client portal for over, I think, 14 months now, and invested over 6 figures into building it. It's a long time in the making. I'm actually coding it now myself. I had a staff of developers from Ukraine building it, but then I took over because I wanted to actually learn the updated new code in Python and also integrate AI into it. So all the students, and not just students, but we're going to be offering a course too that's more affordable that anybody could actually sign up for. It's likely going to be available in May, where you just sign up, connect your accounts, say Experian, Equifax Business, Dun & Bradstreet, and we also have Credit Safe. And then AI will actually analyze your reports and tell you basically what you need to do. And it's not just generic AI. Anybody can do that if you just use ChatGPT. This is actually my human AI version of basically my business credit brain. So I have over 600 videos on YouTube, And out of those 600 videos, I downloaded approximately 300 of them, close to 300, and transcribed the audio into text and then upload that into an AI server. So it compiled all the business credit videos that I've put out there along with past lives and analyzed it all. It took it about 13 hours to analyze everything and build a Josh credit knowledge base, basically. So it really is custom. Everybody's using AI. So even people look at it like, oh, it's automated. Anybody can do that. It's technology. It's the way things are now. So if you don't use AI, then you're going to be left behind, regardless of it being business credit or real estate or any business. So I've been integrating this, and that's actually what's been taking longer because, like I said, anybody can connect an API with ChatGPT or Gemini. I didn't want to do that. I wanted to make it customized. Just the AI platform alone is like almost $9,000 just for this knowledge database that's basically extracted my brain of business credit knowledge, and compiled it. So you can ask it questions in the client portal, anything you want, and it's actually going to give you not generic response. It's going to give you the correct responses. There's not going to be any other business credit AI model out there as good as mine, you're not going to have to do the guesswork, because if you just go and use ChatGPT right now, I've seen this a lot, where you can ask it, what are the 10 things you need to do building business credit, or what trade lines? And then 5 minutes later, you can ask it the same thing, and it's going to give you different answers, and it will contradict itself constantly. And that's what I actually do not like at all about ChatGPT. So I use like Gemini, and actually coded it. I coded it in with ChatGPT, OpenAI, and Gemini, and Grok. Blended all three of those AI models together to get the proper responses along with my knowledge base. So it's going to, if you were to ask, like, I need to get $100,000 credit line within 30 days, what's my best opportunity or chances to do that? It's going to analyze your business credit reports, and it's going to ask you questions in real time that you, like a conversation, basically. Credit Josh AI. And it's going to ask you a few different questions, and then it's going to come up with a executable plan for you to possibly get that 100,000. It's not going to be like these other people on YouTube saying, oh, you can apply for this or apply for that. Yeah, you can do that, but I took out a lot of the guesswork because the APIs are with the AI and my knowledge database. It's going to know by analyzing your business credit reports. It's going to tell you exactly what gas cards that you're going to be able to get approved for, down to probably like a 90% accuracy rate. And even prior to using AI, I could probably only give one of my students a 60 to 70% accuracy rate just by me manually doing an audit, like odds on getting a Fuelman MasterCard, right? But with this new Credit Josh AI database that I've been working on and building, it kind of takes the emotions out and analyzes everything, your reports in real time. And it analyzed over 400 of my past students and their results. And we're going to get into that here in a moment. I'm going to show you guys one of my other students. I think she's still here right now, but one of my current students, her report, and how AI can actually take her report analyze it and give down to almost 1 to 2% accuracy rate on what she could get approved for, you know? And it's not just about that, how to actually execute once you get approved for certain credit lines, how to use those. So regardless, if I didn't integrate this AI, then others would, and they would do it wrong and probably give you bad results to the point where like Red Spectrum and Biz Credit Central, there's, I don't want to, slander companies or anything, but there's Strategic Network Solutions, Sima Office Supplies. There's so many of these starter vendors and Net 30 vendors that charge a lot of money. It may be only like $50, $100, $150 to get the trade line, but that adds up. And if you use AI or you listen to, say, even Nav, they have a whole list of trade lines. They're telling you to get those trade lines because they're getting paid. They have affiliate earning deals worked out with, like, say, Sima Office Supplies, Strategic Network Solutions. So if you listen to, say, certain blogs and certain creators, you're going to waste roughly $500 to $1,500 just on nonsense trade lines that do not even report to any bureau. And if those do report to the bureau, they're not going to report to the bureau that is going to help you, and actually getting too many trade lines for a new business can actually hurt you more than it can help you. Like, it's much better to have 5 to 7 Experian trade lines, say, in the first 3 to 6 months, that are quality trade lines, and they're mixed accounts, like, say, paper products, computer products, packing, services. You want mixed accounts. If you just have a whole bunch of these Net 30 starter vendors show up right away, for one, that doesn't help you. It's not actually showing that $50 trade line being reported. That doesn't demonstrate that your company is healthy, and you can pay $1,000 or $2,000 car payment or a loan or whatever. Like I always try to tell students and viewers, I'd much rather have 3 Experian trade lines, and out of those 3, have at least one that shows and reports a balance of over $1,000. It may hurt your score a little bit by having that usage, but scores don't matter. So get the scores out of your head. What matters the most is the type of trade lines and the balances being reported. So if your Experian profile has payment histories of, say, 3 or 6 months, but they're like 5 trade lines, and the highest credit that you've ever had been reported on there is, say, $100 or $150, that doesn't demonstrate that your company is healthy to take on, say, a $20,000, $30,000, $40,000 loan or a $10,000 limit gas card or whatever, because that doesn't show, that, like, basically anybody, single man operation, could essentially afford to pay $250 to $500 a month for 5 trade lines, like $50, $100 for each one. That doesn't demonstrate that your company is healthy. What does demonstrate that a company is healthy is, say, 3 to 4 trade lines on Experian, and the balance is being varied, like I say, a $800 balance being reported, a $1,000, $1,200 balance being reported, and then having some of the service trade lines being reported is fine. Like, say, Fair Figure, Nav, CEO, Creative, those are fine, but that's just kind of like a foundation staple point. That's it, But that's not what's going to get you the approvals. That's going to help, establish your commercial credit activity, but you can have an 800 personal FICO score, but if, say, Fuelman, they're only looking at, say, your Experian Business Credit Report. If it's too thin, you're going to get an instant denial. It's like, or they're going to require you to do an actual personal guarantee. And just so you guys know, anybody that's trying to get these gas cards, almost all now require you to do a personal guarantee, or they do a conditional approval. And this just started like 2 weeks ago with Fuelman and all Fleet Core cards. But basically, if your Experian Business Credit is not very strong, and when I say very strong, it needs to have like at least a minimum of 5 trade lines, and they need to be mixed trade lines, and you need to have quarterly payment experiences, quarterly payment trends, meaning you need to have at least 3 months of those trade lines as continuance payments. So each trade line needs to have a monthly activity being reported and updated. So, you know, a lot of the people think they can just get a starter vendor or a U-line or something and use it once and not use it again, and that's actually going to help you. It's not at all. Actually, that screams red flag that you're trying to manipulate the bureaus and get credit. Now, it's not a bad thing to say get some of these trade lines and use them, you know, once every 3 months or once every 6 months, just like the starter vendors. I don't recommend anybody to say use coast to coast office supply, use it long term. You know, use it 2 or 3 months, and then that's it. That's fine. That shows you like a quarterly payment trend. But other trade lines, say a gas card, say you get a low limit Fleet Core gas card. Say they only give you $500, or say A to B give you $300, $500, whatever. That's a trade line that you can actually use because you're using the gas already for your own personal use or your family or whatever. So why not make it count and get credit for it? You know, anybody, even right now, if you're just starting your business, or you already have business credit built up, but you don't have a gas card already, and even if you have bad business credit or not established, go to A to B, okay? And you may not get approved for their unsecured card, but they can give you the prepaid card, and it reports to Small Business Financial Exchange and Experian. So even on the personal level, almost everybody, unless you have electric vehicle, almost everybody has use for gas, diesel or normal unleaded, right? So if you're not using that to your advantage, it's just a waste. Like, even if you can't afford certain trade lines, you can afford gas to drive to work or whatever you're doing, right? So if you're not using that to your advantage, then like you're not serious about building business credit, right? So it's a minimum of $35. That's all you need to do is $35 on ADB. They don't charge you a fee though to get it. They issue the card, and you just need to load a minimum of $35. You can load it by a debit card, ACH, whatever. You load that, they send you the card, and then you use that card. You can put $35, $50, whatever, just $35 is the minimum. And then they report every month to Experian and Small Business Financial Exchange. And it's reported as a commercial card, like a commercial revolving card, even though it's only a net 7. And how that works with it being a net 7 is, yeah, even though it's prepaid, a secured card, say you put $100 on there, whatever you use, say it's $50 you used out of the $100 that you loaded on the card. Well, that following Monday, then they're going to debit, or you have to have that other $50 repaid, even though it's your own money. But it's much better to do something like that than it is to do, say, a secured credit strong business loan. I know a lot of people, and a lot of the recent students that we've signed up got a credit strong loan prior to joining the mentorship. As soon as they join the mentorship, I tell them to cancel that, because if you're trying to get funding in the next 6 months, that credit strong secured loan is going to work against you big time. So if you're not looking for funding at all in the next, say, 12 months, then yeah, you could use credit strong and it's fine. But if you're trying to get approvals in the next 6 months, if you have credit strong right now, I would go and call them tomorrow or whatever, tell them that you want to cancel. They're going to try to retain you, but just tell them you want to cancel and you want a refund. So it's a secured loan. So it doesn't matter how much you paid into it, they will refund you. I think it's like $30 fee for you to cancel it, but they will actually say you paid $700 into the $10,000 secured loan for, say you had it for a couple months. Call them tomorrow, cancel it. They're going to refund you minus like $28 or $30. I think it's about $28 is what they actually charge for the cancellation of the contract. And it's through the trade line that would be reporting would be Atlantic Capital Bank. That's what you see on your business credit report. Well, you don't actually see it because they hide it, but it's Atlantic Capital Bank. It's the underwriter for that secured loan. It has its place. Now, if you're not looking to try to get major funding anytime soon and you already have credit strong, I would say keep it, you know. To give you an example, one of my students had it. She joined the mentorship. She already had it for like 3 months. And we even did a personal guarantee, even though I try to have all my students do no personal guarantee. But I wanted her to get a relationship with American Express. So she never had an American Express relationship. Her FICO score is around 680. So I had her apply and they denied. And she had, you know, she said, maybe it's the credit score. No, it's not the credit score. It's, even though it's personal guarantee and American Express looks at your personal credit primary for the like 80-90% of their factor, but they will look at your business credit as well, only on Experian, because they pull soft pull or hard pull your Experian personal, but they will look at your business credit if you have some established business credit. So if you have minimal trade lines and then you just have a credit strong secured loan, they don't look at it as secured. They look at it as like a normal outstanding loan. So you're like over leveraging, overextending yourself. So then she got the denial. What's nice about American Express is you can reapply and it's not going to affect anything at all, right? So I had her cancel that, and I believe it was like the 22nd of the month when she applied, and Credit Strong reports and updates on like the 25th, if I'm not mistaken. So I had her cancel it right away. And I said, just wait like 3 days for Experian to update for the Credit Strong, right? So we waited for that to update, and I think it was like the 27th or 28th. I had her reapply for the Platinum American Express card. Instant approval. Congratulations. No preset spending limit. So it does matter. And I've had that same exact situation happen with like 4 other students. That's why I'm telling you guys, don't keep the credit strong if you have it and you're trying to get funding anytime soon. Now, these are things that I've learned on because I've had firsthand experience with. And there's a lot of things that I know with the underwriters, not because I just talk to the underwriters, even though I do, and I have relationships with the underwriters, but I have that compiled data. And even my Credit Josh AI knowledge database, like I told you guys before, it analyzed the outcomes of my students' client portals, the old ones. So it analyzed the outcomes based on what they did and the different tasks and actions that I assigned to them. And some of the students, they'll upload their approval letters or their denial letters. And I uploaded, I think, around 130 different students' denial letters over the past like 3 or 4 years for, say, Lowe's or Home Depot, Fuelman, all different underwriters. Synchrony, business information is unverifiable. That's a common one with Synchrony. But uploaded all those actual PDF denial letters, and then the AI model that I had coded analyzed that, and that's how I'm able to know a lot of these things too. It's not just me building up business credit for 20 years, but it also has analyzed the combined data. So like real case studies, that's what I'm going to show you guys tonight. Sorry to ramble. I have ADHD. If you don't already know, it's, I've even used AI about how to increase my retention rate for normal videos, right? And it told me to stop rambling because it analyzed my videos. Tells me to stop rambling. Well, you know what? I did that and did, like last month, put out a couple of videos, didn't do intros, and dropped. And then AI reanalyzed it, and then it says, okay, just go back to rambling. So it knows what it's talking about, because things did pick up and spike. And that's why people contact me on a daily basis. Like I'd read you several text messages of people saying, they appreciate and like my style and my honesty. And I think there's a couple of people here right now that text me, but, I don't want to get sidetracked, but like this person said, you're the most realist, honest, sincere guys on YouTube. I love what you stand for. I'm not tooting my own horn, but that is the truth. I hear that constantly, things like that,
Yeah.
And I would actually challenge anybody, if you're, say, on the fence about not, say, just joining my mentorship, even if you don't want to join the mentorship, but if you're on the fence about any of the videos that I've put out and what I'm telling you to do, or my recommendations in the free content, if you're on the fence about like, is that true or something, or should I actually apply for this? I would challenge you to find anybody else in existence, period. Like Google or any YouTube creator, anybody. And you're not going to find anybody that can even come close to the knowledge that I have when it comes to business credit. There's a reason why several underwriters, I've had a couple underwriters fly out here to the Philippines, Manila, and have meetings with me because they want to pick my brain. And they're actual underwriters, So basically, the point I'm trying to make is, because I have so many accounts with pretty much every possible underwriter out there, personal guarantee and no personal guarantee, and there's been a lot of fraud out there, especially during COVID. That's why underwriters, I don't want to say hire me, but in a sense, I have had a couple pay me a consultation fee, basically to help them and their algorithm on the risk exposure, to how to basically spot things that their system can't spot to lower their risk exposure. So these are things that I publicly won't necessarily tell people, I'm going to tell you exactly what you need to do to get approved for this particular gas card. And I'm not going to tell you things to lie, like there's other channel out there, one in particular. I'm not going to mention his name, but a lot of you guys, I'm sure, have seen him. But he flat out tells you how to commit fraud with business credit, and how to do things that could possibly get you put in prison, for lying and basically intent to commit fraud with business credit. With business credit, it's not federally regulated, and there's a lot of gray lines of areas that you can actually, I don't want to say lie, but you can kind of stretch the truth a little bit. But I would never recommend somebody to set up an ADP payroll account and make fake paychecks or whatever, payroll, make fake ones just for like $15 a month. You can do that or whatever on ADP, but make fake ones. Like one content creator tells you to do that. And he made another video the other day telling people to do that too.
Yeah,
And he's he's telling people to do that because he's getting paid for you to sign up with ADP. We have set up with ADP as well. If you just go to, let me, one thing at a time, because I want to, show you guys this dashboard, and then I'll get over and show you guys the websites on the case study and one of my students' reports. And she actually authorized me to be able to show you guys, because I don't like to, show personal information. That's why I always use sample reports, but she agreed and she's okay with it. But anyways, as you guys can see here real quick, I'll just touch on the new client portal. First, my current mentorship students, they're going to have first access to the new client portal. So as you can see here, you're going to see the dashboard, and then the tasks, and then credit reports. And then you can actually integrate the business credit reports and the personal. And it's not handled directly through us, okay? So it's a third-party company called Array. So same as like Credit Karma, they use a company called Array, array.co. So it's basically embedded finance. You're going to see that basically with all the fintechs that provide, say, your business or personal credit scores, even like Credit Sesame, any of those ones that provide, say, free Vantage 3.0 personal credit scores, they're all using this company called array.co. So it's basically called embedded finance. That's the terminology, technical terminology. So I pay a fee to Array, and it's quite expensive. It's like $9,000 a month, or $8,500 a month. And that's just to have access to the API and the embedded finance. So we code, basically, they give us the code, we embed it into our platform, and this is optional, but for anybody that wants to see your personal credit information, because the more information my platform has, the better the AI is going to be able to advise you, even though it's all no personal guarantee. But, with pretty much all the no PG fintechs, they won't pull your personal credit on a hard pull, but they will do a soft pull on your personal credit. And even if you have bad personal credit, it's not like it's like definitely you're going to get a denial. But my point is, the more information that the getbusinesscredit.com new client portal, more information it has, the better and more accurate it can give you when it comes to the tasks. So you can see the tasks here. These are assigned manually, but once this is all integrated with, say, the Equifax, Experian, Dun & Bradstreet, Credit Safe, and Boostify. And then also you have the option to connect Plaid. So it analyzes your business checking. It looks for anything that it could be, say, a red flag on that. Like if something doesn't match, it's going to analyze your business credit reports all together and look for anything like, on Dun & Bradstreet, your address is slightly different. Like, say, it says STE for suite, STE123. But then on Experian, it has suite spelled out, suite 123. Even though that's no nuance and it's may seem like it doesn't matter, it's just abbreviating acronym or whatever. Little things like that do matter. Do they matter like massively? No. But why not have a place that you can log into, see all that across the board, and have everything match? Consistency is key. Consistency across the board when you apply for anything, especially no PG. Sometimes they will look at 2 bureaus instead of just 1 bureau. If your file's thin on, say, Experian, they may pull Dun & Bradstreet as a backup secondary, and they're going to want to see if things match up. If things don't, that rich filmographic data, the key personnel, the sector industry codes, website, email, all those things matter. But if things don't match up, that could affect your starting limit or a denial. So these things are minor steps, but people want to skip so many steps. They don't take the time to build the foundation, so people wonder why they don't get approved, because they're rushing things. They get an iPostal address because it's cheap, $7.99 a month. Well, you know what? A lot of my students, they joined the mentorship and they had the iPostal, and we get them to change that into a premium address. And I find the premium address, and this premium address is virtual address, only costs like anywhere from $50 to $99 a month. But it also gets reported as a trade line, and it comes with live phone answering. So it sounds professional. So if your company name is, say, ABC Plumbing, you'll have that number with your address provider, the premium location. And say somebody calls, an underwriter calls or something at 10 o'clock in the morning, they'll, a real live human's going to answer it and say, thank you for calling ABC Plumbing. Can I help you? I've tested this out with a lot of my students that had these addresses, because you don't want a generic live answering service, because then you want optics. You want everything to look like you're 10 times bigger than you are to the underwriters, basically. So you want to show those like high corporate optics, because it's all going to lower the risk exposure to the underwriter. These are humans that are making the decision to either approve you or not approve you. Things aren't completely automated like they are with personal credit cards. You do an application and then it's just based on your personal credit file, right? No, on business credit, especially all the no PG, no personal guarantee options, underwriters, that's why you rarely will ever get an instant approval when you fill in an application. I think Divvy Bill is about the only one that does an instant approval. All the other ones, they will say they'll get back to you, and then it's usually a rep that's, they call it a rep or account executives that will reach out, maybe ask you some other questions, but they're not really asking those questions to get your business. They're doing that to minimize their risk. Like they'll make small talk with you on the phone. Hey, where'd you go to high school at or something? Like they ask these questions and they're not doing it to be nice and friendly. They're doing it to gauge. Unfortunately, they could stereotype or discriminate against you. And I'm not saying it's a race or anything like that. I'm saying, for instance, West Virginia, it's a, low income area, and say it's a high methamphetamine area or whatever, the county or whatever. They will take notes of this during the call. And then when you get off the phone, they're going to look up and say, oh, where did he say he went to high school? They look at this data and they use CreditSafe to actually look up the data to say, okay, this person the family linkage. This person is from this area or whatever, or grew up in this area or went to high school in Detroit or something. They will use some of those things in tandem if your business credit is not already very strong and your personal credit's not strong, and say it's just fair or between fair and good, just on the edge or brim or whatever. Well, their underwriters are going to use those questions against you. So that's why I like my one-on-one business credit mentorship students, whenever they get those emails that say, hey, let's schedule a demo to show you how, say, Expensify, how their platform works or whatever. Use the calendar to link it or whatever. So I tell my students when they get those type of messages from my account rep, I tell them to forward them to me. I already know what they're going to say. So then you schedule that appointment with, or you book that calendar, say with account executive at Ramp or whatever, or ClearCard. I'm going to prep you on the phone. I'm going to tell you the night before what they're probably going to ask you. I'm going to tell you how you should respond to these questions. So there's no gotcha, because that's what they're going to try to do is make small talk with you, but that small talk can be used against you for, the approval decision or the starting limit. It can affect that. But they're going to make that small talk with you. But they're also going to try to do like gotcha questions that you won't expect, and you won't be prepared for. And if you can't explain instantly what they're asking you, and you're kind of like rambling or like jumping over your words, that's a red flag. Like if you can't explain instantly what like they're asking you. They may ask you real quick, like say out of the blue, what was your profit and loss? Even though it's say a no doc or whatever, they're no doc loan, but they may ask you, what was your last quarter P&L? And it's like, most people aren't going to know that right off the top of your head, especially if you're a new business and just establishing, So if you don't know what to say right away, then it makes them feel less confident to give you, say, a $20,000 or a $30,000 no PG loan, And you have to look at it on their standpoint too. It's no personal guarantee. So meaning like say with Ramp, if they give you this card and say it's $50,000 approval, right? I'm not telling you guys to do this with any no PG underwriters, but essentially this is what happened during COVID. A lot of people did this, and a lot of this one in particular channel that I'm sure some of you guys know about was basically telling people that they could do this and get away with it. And he wasn't wrong on saying you can get away with it. You can, but it's not good to do that. That's something you have to live with. But essentially, you could take a no PG card. If you Ramp approves you for $50,000, you could liquidate that, take the $50,000 out on day one of you getting the card, and then people just close their bank account. Even it doesn't matter to close the bank account or whatever. And then when say Ramp tries to pull the $50,000 out the next month, they're not going to be able to because the account's closed, and there's nothing they can do about it. And a lot of the fintechs, they kind of just give up, even if it's 100,000. Like they can't come after you personally. The most they can do is sue your business, but it can't come after you. I've even seen some, I don't want to like say that I accept students like this, but I've seen firsthand some past students that had hardships or whatever, but they had over like 150,000 across, say, 3 or 4 different fintechs, and they never paid him back. Not purposely, they just had bad business investment or whatever, but they didn't pay it back. And 3 years later, there's no derogatory on their business credit report for those particular fintechs. They contract out, say, a lawyer to try to collect, but it doesn't result usually in any type of lawsuit. But I'm not saying you guys do that. I'm explaining to you guys why the underwriters, they will try to make small talk with you and talk to you sometimes on a video call. That's why you want to be very, obviously self-explanatory, but be in a nice area. Believe it or not, I've had some students literally be smoking cigarettes in their car while they're talking to an underwriter. It's not good. I mean, I thought that would be common sense, but have a cigarette on their ear or whatever too, or I've had students where I've had to tell them, and it's not like I'm trying to insult you by telling you not to do these things, but believe it or not, I've had this. Even there's so many stories I could tell you guys that you probably wouldn't even believe that there's people out there that think this way, but I've heard it and seen it all. And a lot of the underwriters I'm personally friends with, like Matt over at Ramp, he had his first child like almost 3 years ago. And I interviewed him. We started off with just like a relationship of, I'm a content creator and teaching business credit. And I think this was back 2019 or 2020, right when like Ramp first launched. But we became like friends. And it, grew from a business relationship to a friendship, right? And then he named me as the godparent of his son. So that's what I'm saying. I built these relationships with a lot of the fintech underwriters. Now I don't have direct relationship with, like, say, Citibank and Chase and, Synchrony or anything like that. But I do know what they are going to be looking for, especially like Synchrony in particular. So I guess the point I'm trying to make, I know what they're looking for, especially the no PG fintechs and gas cards. I know what they're going to be looking for. I'm not going to, even if you're one of my students, I'm going to tell you how to defraud and abuse the underwriter, because that's going to affect everybody. Just like 3-4 years ago, there was a lot more no PG options out there. Some of them actually went bankrupt because of people, screwing them over. But that's why, if anybody is interested for my one-on-one business credit mentorship, that's the number there. Jason, where'd you go? Okay. Let's see, where's the slide at? So if anybody is interested for the one-on-one business credit mentorship, that's the number. And I just want to point that out. Basically, why I'm telling you that is, even my students that I have right now, not all of them I actually will tell certain methods to, like, say, a gas card method, how to liquidate the gas cards, right? Say you get approved for a gas card. Let me show you guys an example, because gas cards are very underrated, and they're one of the very easiest ways when you're starting to build your business credit to be able to get liquid capital quickly. So during COVID, I bought 3 multifamily homes in Greenville, Ohio, using gas cards. I had my own personal money. I could have used my own personal money. But But when I started the channel, I started with a $5,000 personal funds that I put into my business checking account and use that to pay for any expenses or say NAV or anything, right? But these are all the gas cards, right? And most of them are all the same underwriter. So let me show you guys what I mean about these gas cards on why they're so overlooked. I literally liquidated like 100 over a 3 months period of time, used one to pay another basically, but liquidated them as for initial capital to do the closing on the houses, right? But these houses were only like, one was 22,000, one was like 27.5, the other one was 33,000, and they're in a low income area north of the Dayton airport in Ohio. That's kind of where I grew up and stuff. So there's a lot of people in, say, Section 8, and it's kind of out in the middle of nowhere, a lot of cornfields and stuff. But the population's only like 10,000 people. But even if you try to get the same properties now, they're like 70,000, and they're like very bad shitholes. But these properties I got a good deal on because of the lockdown and COVID and all that. So that's why they're very cheap. And why I got them is basically because so many people back then were saying, Josh, can you get buy real estate with no PG business credit? Well, if I get a common question that's like very frequent, being asked the same thing over and over by several viewers, then if I don't know the answer, then I'm going to try and investigate and see if it's possible. So most people know you can get a hard money loan in your LLC. Problem with hard money loans is they're, one, expensive. The origination fees very high, typically several thousand, like 3,000 to 4,000 for origination fee, and then they have other back end fees and added points, and then it has to be a real good deal for them to be willing to give you the hard money loan. They have to do their own inspections. And all this can take anywhere from like 30 to 60 days to get the actual approval for you to get that. And it's not based on your personal credit at all. But however, when there's a good deal out there for a property, if it's a real good deal, you're not going to be able to get that using a hard money loan, because even on, if it was a really good hard money lender, it's still going to take them 2 to 3 weeks for them to do their due diligence, you know? So my point is like, if you're wanting to get into real estate, you need capital right away. And that's why I like all my like VIP 52-week mentorship students. They join the mentorship, not because they want to get capital right now, but they want to invest into real estate, but they know it takes time. You're not going to get like 500,000 in 30 days in the mentorship unless you already have well-established business credit and already have a lot of revenue coming in on a monthly consistent basis, you know? Like one of my students got like 800,000. I'll show you guys that in here in a minute, but got about 800,000 in a matter of like 3 weeks in the mentorship. But that's not the norm. Like she's already doing like 105,000 a month, and she had like $250,000 in her business checking account. So it's a lot easier to get approved. So that's not the norm. But you know, the highest we've been able to get, I think the highest student I've had is like 3.8 million. But back to the gas cards real quick, and then I'll get into the reports and stuff. But basically you can see how like these say fleet, right? Okay. And then you compare, so use the same one. See, they're both Speedway. They're both MasterCard. But see how one says fleet and one says multi. Okay. So you're not going to get the multi right away. They won't give that to you. And this is underwritten through the same as same exact as Fuelman. It's all underwritten through FleetCor, and their MasterCard issuer is Regions Bank. But you're never going to get the multi issued right away. Doesn't matter if you already have well-established credit. They're not going to issue it to you. It's kind of like, I don't want to say invite, but 3 to 6 months after you have the fleet card and using that card and using it healthy wise, meaning if your limit's 10,000, if you only use $1,000 a month, they're not going to issue this. They're not going to offer you the multi. It's just, they only make money off the interchange fee. So like they want you to spend a lot. And what's nice about FleetCor is you could start with a, say, $10,000 limit or a $5,000 limit and very easily not even have to ask for a limit increase, but you can very easily get it up to 20, 30,000 in a matter of like 2 to 3 months. How FleetCor works with all their cards, it's kind of like automated. So if you're, let's just use this as an example. So it's like easy rounding numbers. If your initial starting limit is say 9,500, they do weird amounts always. Like it's always like 14,500, 2,500, 9,500. It's like, why not just be 10,000 or 9,000? But they always do like weird numbers like that, like 9,500. But basically to trigger an automated increase, limit increase, you must spend on the fleet one, not the multi, but you must spend 76% or higher. So let's just say it's 10,000 is your limit, your starting limit. You're going to need to charge or use $7,600.01. Yeah, you have to, it has to be 76% over. I know this because I've dissected all these cards. I have every card they underwrite. And I've started them from even secured versions and literally got, in a matter of 3 months, all of them approved. And I don't recommend anybody to get as many as I got, but 3 to 4 different ones like Speedway or 7-Eleven. Now it's 7-Eleven, but the 7-Eleven, Fuelman, Casey's, Arco, or BP Business Solutions. I would say get like 3 of those and make sure it's the MasterCard version, but don't get them all at once. You need to time it and it needs to be strategic. But basically you'll always get issued, say, the fleet card first. If you're in my mentorship, I will teach you how to liquidate the fleet one. Even though it says MasterCard, it can only be used for gas and gas only, okay? Because it's tagged to an MCC code, a merchant processing code, right? So, and again, it's kind of by mistake I learned, and I'm the only one out there, I think, that knows how to liquidate the gas cards. And I've had over 400 students, and I'm like, wow, I'll tell you right now, I've never told it to more than probably 25 of my students. Some of my students, they don't care to learn about how to liquidate it because either they don't need to, or they got theirs, they did everything, they weren't in a rush, and they got it upgraded to the multi. So like in my case, I got all of my cards, BP Business Solutions, Fuelman, I have all of them. So BP Business Solutions, this one's multi. See how it doesn't say multi and it doesn't say fleet, right? But, and then they have Universal Premium. This one, it says fleet, right? This was initially the secured card. They give you 3 times the limit. So as you can see, I have it 1,200, right? So I put 1,200 because that was the initial limit. Now it's very high, but this was my entry card. So it's no personal guarantee. They gave me an option up to $1,500 as the down payment or the secured amount. The lowest was 300, so I choose the lowest. So 300, did the 300, and then that gives me 1,200 that I can use. So basically, 3 times what your deposit is what they're going to extend out to you. They don't do this so much now, but was basically my entry into the FleetCor ecosystem. So I got that. I didn't even use the card at all, like at that point. 2 weeks later, I applied for the BP Business Solutions and instantly approved for $6,500. And then in a matter of like 2 months, it got up to $30,000 limit. So it's like by mistake, I was able to get like, learned how to liquidate them, right? And just like, sorry guys, too many cards, but see how it's like this one, fleet and multi, so all the cards that I have, I got them all unlocked. And you'd be very hard pressed to find anybody out there in existence that has as many cards with FleetCor that's unlocked, because it's not common. Like I have some students that they've been with, say, had Fuelman for 1 year and good payment history, and they still don't get it unlocked. So, they request it, but they can't get it unlocked for whatever reason. So if you can't get it unlocked, then that's when I teach you how to liquidate the fleet version. Basically, I stumbled upon how to do that is because I'm, here in the Philippines, right? And I go back and forth to the U.S. But I had like $270,000 in limits of gas cards the first 6 months of starting the YouTube channel, the new LLC. And I'm like, I have no use for these. So I would issue cards to my aunt, my mom, and my brother. And I would have them just use $20, $50, $100, and I would just pay it myself. It's just like it's just part of doing business or whatever, just so I could start that relationship, build that up, right? But then it got me thinking, how do these people know, like, why does it get rejected when you go to swipe it for something, like, how do they know what I'm trying to buy and stuff? So that's how I learned like 6 years ago about basically how to liquidate them, because I'm like, there's got to be a way. So I don't want to say too much, but that I stumbled upon it kind of by mistake. But, I go on AutoZone on AutoZone.com because I have a dealer's license for one of my other businesses. You guys, I own like 6 different businesses right now, and I've sold several businesses over the years. But I buy cars that have been repoed, and then I have one of my students that he's one of my mentorship students, and we have a relationship for the last like 4 years. Since I have the dealer's license, I am able to buy the cars and the repo cars, the lease cars. I can buy them much cheaper at auction than what the public auctions are available. So I buy the cars. He's a mechanic. He has his mechanic shop. I buy them. He does any repairs that's needed, and then we do kind of like a split revenue share. But I use business credit to essentially buy the cars, right? So essentially use gas cards even to buy other cars. You can do it, It all comes down to assets, just like the houses that I bought. People say, well, wait a minute, you bought this 3 houses and then I rehabbed them and then I used the Lowe's for Pros. That starting limit was only like $3,500, if I'm not mistaken, when I first got it. But then I built up that relationship with Synchrony, just like the Amazon line of credit I have. That limit's $55,000. I was buying like $10,000 100-inch Samsung touchscreen that you guys can see in my other videos for teaching business credit, and like $5,000 4K cameras and stuff for the studio and all that. But basically, I built up that relationship with Synchrony, and then just like even my students, I'll teach them how to justify to the underwriter how to get the limit increase. So even if you have, like, say, a $5,000 limit with Synchrony right now with Lowe's for Pros, and they give you 60 days to pay. Same with the floor and decor. They underwrite now floor and decor. Well, those are great when it comes to if you're in real estate doing fix and flip properties, because why tie up other money when you can have 60 days for this one to pay and an 8% discount off of the materials. And then on floor and decor, you actually can get 6 months or 12 months, 0% APR, and it's a revolving card. They have 2 cards. But it's potentially 50, 60,000 in materials that you don't need to use. You could get from those cards, right? So, it's like use the capital that you get with credit lines properly. Like, I would never tell people to use a credit line if you have a trucking company. Why would you use say, a fintech card for gas? Use a gas card for that, if you're fixing flipping properties or whatever, if you need to buy carpet or hardwood floors, don't use a Corpay card or a gas card to buy that. Use a niche card, and you have time to pay, and they report to the business credit bureaus. That's further helping. Even if you're remodeling your own personal house, but you're building up business credit, get a Lowe's card. Like, even personal expenses, like, you're already spending them. I know people say, there's a lot of people out there on YouTube will say, oh, don't mix business and personal. If you're a small business owner, it's okay, as long as you don't have like 10 partners and you're doing $1 million a month or whatever. That's a different story. But if you're just starting off, it's fine. Make every personal expense that you have, even your business expense, but personal expense as well. Make every personal expense, leverage that for your business credit, and then just pay back the business credit line using your personal expenses. There's just no reason to things that you already have to pay for anyways. Like, even like the JCPenney's card, it's underwritten through Synchrony as well. I tell a lot of my students that's just to get a relationship with Synchrony, right? So, like the JCPenney's card, they don't start off very high limit. It's usually $2,000 or $3,000, but JCPenney sells everything you can imagine and think of. And you don't need to go to the store. You can go right on their website, and they give you up to 30% discount having the commercial card, and you get assigned a sales rep, account rep. And they give you a quotation. There's no minimum amount either. So, like, you could buy 10 or 15 of their clearance items and then resell it on Amazon FBA. So that's another way you could liquidate this card and stuff. I've done it myself with BlendTech $500 blenders. They were clearanced down to like $280, and I resold them less than 7 days for $570. So it's like the easiest $1,800 I made ever in like 4 hours of my work, 4 hours of working, to start to finish. But not just that, but you can literally take a JCPenney's card, say Christmas is coming up, right? Not now, but I'm saying this is what I would tell my students back in like October. Hey, Christmas is coming up. You have to spend funds on personal funds for, your wife, husband, kids, parents, whatever. Why not use JCPenney's card? Because they give you 30 days to pay. Yeah, it's not much, but 30 days is 30 days that you can have other funds, not tied up. So use that, and that's helping you further in business credit and the interbanking relationship with Synchrony, you know. So there's so many strategic ways that you can do with every possible different credit line and stuff, you know, like I have so many, you know, and that's why I started to learn how to leverage a lot of these cards. Now, I wouldn't recommend anybody get 120 cards. Like I think I have about 120, 125. Don't recommend anybody to do that. Some of these cards, they're low limits, only like 1,500, 2,000. So some of them don't, it's not even worth it or whatever, you know. That's why I was kind of the guinea pig for you guys. But you can use some initial cards to break through that barrier initially, you know. So I'm gonna shut up here in a minute and get back to where I need to go when it comes to doing the audit like I had on the thumbnail. I just want to kind of clear one thing up so people are clear on understanding this. And again, if you're just tuning in, please hit the subscribe button and hit like as well, and put any comment in the live chat section, and I'll answer those questions in a moment. It helps the YouTube algorithm as well, but please give the video a thumbs up. That also helps. But back to what I was saying, and then I'll get off this topic. People said, okay, Josh, you bought these properties, right? Yeah, okay, I bought these properties. How I closed on 2 of them the same day because it's the same owner that owned the 2 houses, right? They're like 4-bedroom houses that were split in the 80s to multifamily homes, you know. And he already started rehabbing them, like already ripped out the carpets and stuff, and he already had some materials bought, but for what I think he ran out of money, and with COVID and everything, you know. So, you know, I was lucky on that because I still invest into real estate even now, and I can't find good deals like I did in COVID era. But basically, they needed to rehab and spent about in between 10 to 14,000 rehabbing each multifamily home that I only got 3, but basically I spent almost 45,000 doing the rehabbing on all 6 units because each unit has 2 units. So the most expensive part is the kitchens, rehabbing the kitchens, because they're old, like 80s style laminate and wood grain, everything very ugly. But you'd be amazed on what $100 light fixture, new paint, monitored, rip up the carpet, put the fake hardwood floors in, the pre-go ones. You'd be amazed on minimal expenses and just cosmetically how much, you know, from the outside it looks like it's low income. You go inside, it actually looks like it's a kind of expensive house. But rehabbed them, did kits for the kitchen and bathroom, just like the Lowe's sells like kits. So it's not like custom made by any means, but I'm not expecting to get a lot when it comes to my renters because it's low income area, and it's my renters are Section 8. I put them on Section 8, and Section 8 is actually good because you're guaranteed you don't have to worry about collecting at all. I have a property management company in Greenville, Ohio that handles all that, and the property management company, they collect like $20 to $100 per month from my tenants, but the rest comes from the government, right? I don't rent them out for very much. They only rent out from $700 to $800 a month per unit. But my point is I use the gas cards to buy the properties free and clear in my LLC, right? So my students, they would say, or viewers, you guys might ask, how did I pay it back though? Because you have to pay the gas cards back, right? So how I did that, sorry guys, I want to visually show you guys. So basically, the technique is you liquidate, say, initial card, that's your primary to buy the property, right? Max limit is 30,000 for a field man. So I'm just using this example, just like what I did. The one house, 28,000, liquidated this. You always want to liquidate not 100% because that can actually do a red flag. So you usually don't want to liquidate more than, like, say, 95, 97%. So say liquidate 29,000 after the merchant processing fees, that's going to come out for the liquidation fees. That's typically going to be like 2.5%, so you're left with, right under 27,000. So you take that 27,000, that's how I was able to say close on that property. Free and clear, it's on my LLC. Then not 30 days, but about 25 days later, the statement closing date, you have to pay back that primary card. So how are you going to do that? You're going to liquidate the secondary card. So that's a 7-Eleven or BP. You liquidate that card to pay back the primary one. And again, this only works if you have multi-cards, like multiple cards. The more the better when it comes to, say, liquidating gas cards. So you're borrowing from one and then using that credit line for your investment. And then you're using the secondary card to pay back the primary. So you're borrowing from Paul to pay Peter. And with these in particular, it's the same underwriter. So I'm using their own funds to pay them back. Sorry to ramble about all this, guys. Again, like I said, I have ADHD. So some people say it's watching you, it's like watching paint dry. Apologize in advance about that. But there's road flex as well. Now, A to B is not good to liquidate because it's only 7 days. It's like, what's the point to liquidate a seven-day term card when you have to pay it back so quick? But there's Coast. Coast can be actually used for anything. They have a unlock feature on it as well. So basically, long story short, I liquidated 3 cards out of the 7 cards I had to buy the 3 properties, right? And then because they're all different limits, the second time around to liquidate them to pay back those original 3, I had to liquidate 4 to be able to pay back the initial, right? So in all, it was like 82,000, I think, for the 3 properties. I closed on the one day, and then like 12 days later, I closed on the third property. But for the first couple of months, that's what I would do. I never wanted to use my own money. So I would just rotate them. When that one's due, then I just liquidate the other one and then pay back with it. Yes, it can get expensive when you're doing high amounts like that because the merchant processing fees. But I have a link that you can get up to $25,000 in merchant processing fees with Stripe waived using our partner link. But that's just like one way, one method, right? There's Square, there's different methods, right? And again, you don't have to do this. I'm just saying that's what I did. And now people say, okay, but you're just doing that. How do you pay it back? Like, okay, well, the YouTube ad revenue that come in or sponsorship revenue, over about 6 to 7 months, the ad revenue that came in, I treated it just like a business. Use that revenue because I didn't offer mentorship or course or anything for the first 2 years of the channel. But any ad revenue or sponsorship revenue that came in for 6, 7 months, I just applied that towards the gas card balance. So it took me about 9 months to have 3 income earning properties, free and clear, fully rehabbed, and they generate around $3,200 a month after property management fees. It's not a lot, but it's an asset, and I could sell those right now for at least $450,000 because they're rehabbed. Each one of them are valued anywhere from like 115,000 to 150,000. So my point is I can turn around if I wanted to and do an equity line or equity loan against those, and then that frees up more money. But right now they're free and clear. But what I'm trying to basically tell you guys is I used gas cards and I had no business credit, built up very little, but I did things the right way, no personal guarantee, and I was pre-revenue basically. But I used that to my advantage, learning all this. And if you put yourself in my shoes and you did exactly what I did, in a very short amount of time, you could, if you replicated what I did or part of what I did, you essentially can take that and pull funds off of your equity line, and then you could use that funds to show, put it in one account and then do bank transfer, not a bank transfer, a bank wire, and do multiples of them from your secondary business bank account to your primary. And then that's going to help you get approved for the fintech, say Ramp or Build, Divvy, because they look at what's in your business bank account balance. So there's so many strategic ways that you can actually be pre-revenue and get approved for things and stuff. And I'm just going to leave it at that, because some of these things are like gray area. None of it's illegal, but like there is probably some of the viewers right now. I'm not saying all of you guys, I'm not definitely saying that, but I'm saying that will watch the replay, or there might be one person in here right now that's watching that is up to no good. There's just bad apples out there everywhere. So that's why there's certain things that I am limited on what I can say. I would love to be able to tell the methods of everything, freely. And right now I would love to do that. But unfortunately, there's bad apples out there that's all they do is look to a scam. And then more scammers out there that will end up ruining it for everybody else that is honest and just wants to get no personal guarantee business credit. And then they can't because the bad apples did fraud and had no intention to pay them back. But real quick, any wax cards, you can't liquidate any wax cards. It's literally impossible. They only have like one card you can liquidate, and that's actually underwritten through Citibank, and it's personally guaranteed. So it's like no point. But wax cards, unless you're in trucking, I don't recommend them. They don't even report consistently. So that's a card that I would not even get. Any cards that are through wax, Shell, they have so many cards, but they even have 7-Eleven, and then FleetCor has 7-Eleven. But under wax, they only have the WEX 7-Eleven, but then FleetCor has 7-Eleven MasterCard, business MasterCard. That one you can liquidate, So avoid WEX if you are thinking about that at all. But anyways, let me shut the heck up about all that and my rambling. And again, I apologize for an hour and a half of rambling about that. As you guys can probably tell, I'm pretty passionate about business credit. I'm going to show you guys one of my fintechs real quick, and then I'm going to show you guys the audit of one of my students, RNN Cares. I just have to get this code that came in so I can show you guys, because it's a 2-factor authentication. But I can show you one of these accounts that I got 95,000, I think it was. And it's also no PG. And I've made videos about Row before, but I don't think there's anybody else that's made videos about Row. But they've been around for like as long as any of the other fintechs, right? But this one you can actually use to your advantage if you can get approved, but it's not easy to get approved for this one. But it's a, I don't want to say bad words, but it's essentially a badass platform. There's so much, it's by far my favorite fintech out there, and I use it so much as well. But it's basically like competes kind of with like Bluevine, but they have savings accounts. You can issue unlimited cards, virtual, instant, 1-day use, fuel cards. You can do invoicing, bill pay, reimbursements, your full accounting. They have perks. Like there's so many integrations. So I'm going to show you guys that. And then I'll come back to the platform that's launching soon. So here it is. Why is it not showing? Oh, I need to remove, I think. Okay. So why is it? Can't really see, but you can see here it's, why is it so pixelated? Let me see. You guys, I'm trying to learn this new one here. Is that any better? No, I guess it doesn't matter. You can't see it too much. I think that one's better. But so this is my virtual card, but this is just 95,000 available to spend on this one card, you know? And I actually have two row, one for my law firm marketing, and then one for my e-commerce business, so Amazon. So, and this is just one card. I have like 6 cards that I've issued. This is my virtual one, but you can see here, I haven't used it yet this month, but you can see how it says the limit resets on the 1st of April. So this is a monthly card, right? It's like a charge card. So every month on the 1st, the limit will reset because they do a ACH from wherever your primary payment connection account is. But then it's available resets right away. And maybe I shouldn't tell you guys this, but I'll go ahead and tell you guys this is another hidden gem because I don't think Ro's going to listen or watch this whole video or anything. But basically, say you have a $100,000 limit with Ro and you use it. See how it says the limit resets on April 1st? You just need to get that initial approval. Once you get that approval, they do the ACH on the 1st of the month, right? And that typically takes 2 to 3 days. So you can liquidate it, say bill pay or whatever, 95,000, and say on April 1st, they're going to do ACH for 95,000 or $93,200, whatever it is. That's going to take 2 to 3 days for the ACH to hit my Navy Federal Business account for them to draft from it, right? So essentially, the limit's still going to reset on the 1st and be available because that is still pending for March. So, and I've tested this, not that I would recommend doing it, but when you're in a tight spot, you can do this. I wouldn't tell you to get in the habit of it, but I have a couple of students that is utilizing net 30 cards. Basically, this is a charge card, and not all of them work this way, but you essentially can take a 30-day card and turn it into a revolving card. This is a perfect example. So Ro is assuming that ACH is going to go through fine, right? The $92,700 or whatever, right? So April 1st, it's going to reset and come back available right there, right? Because they're assuming right away. So essentially at midnight or 11:59 on March 31st, that limit's going to reset. And you may not have the 90-some thousand in your business bank account for it to cover. So this is why you have to time it so fast and do it right. But you basically would liquidate or do bill pay on April 1st for, say, 93,000 or 89,000, whatever you're lacking that's in the business bank account, right? So you basically would liquidate that or do the bill pay and then hurry up and get that in there within 24 hours. So then when the ACH draft poll goes through by, like, say, usually it's 3 days, 4 days at most, depending if it falls on the weekend, which that gives you even more time. But essentially you're using the credit line, the feature of them resetting it on the 1st, and you can just basically revolve it. If you guys understand what I mean, that's a way. Again, I wouldn't get into a habit of this. Bill divvy, you could do the same thing. What I guess I'm trying to say is, even if it's say $10,000 and you maxed it out that first month, well, most of fintechs you can get away with doing this. Again, I wouldn't use it as a habit or anything, but if you time it right and do it right away, then all these limits kind of pretty much reset, and they're assuming in good faith that it's paid, like it's going to be paid or whatever, right? So they're on whatever the billing statement date is, typically say on the 1st, it's already resetting. So if you do it right away and then you liquidate it or do the bill pay, you essentially can use that to pay them back, use their own money essentially to pay them back. Because there's only a few fintechs that don't, they won't let you spend until the payment is cleared, if that makes sense. But most of these fintechs, though, like Row, they will reset your limit on the 1st, like 12:01 or 12 midnight on the 1st, you know. And even though they haven't got their money back yet, right? If that makes sense, if I'm explaining it right. So you could do it, if you do it fast enough, you can get it pulled off in enough time, liquidate that, and have that liquidation funds to pay them back basically with their own money. Yes, there's some fees involved, but most all these fintechs, they don't charge any fee though. There's no fees at all. But there is fees when it comes to, depending on how you liquidate it, like say Plastique or Melio, those can be fees involved. Usually a couple percent, 3-4%. Sometimes they have deals where you get discounts or whatever off of it. But sometimes with bill pay, there can be fees involved. But bill pay sometimes also can be free. Like Corpay lets you do bill pay using their own card. So you can actually liquidate, like they help you liquidate it essentially in their portal. You can select the Corpay card as your payment account to pay anything basically. So if you have a $30,000 limit, you can use a bill pay and put the bill pay as, say, one of your other companies or you personally or whatever. You just put an invoice and then you put the account numbers, and then they do an ACH to deposit, say, 29,000 into that company account or whatever, or you can use it to pay other things or whatever. And there's no fees involved. But sometimes there's fees depending on what fintech it is. So if you guys understand what I'm telling you guys here, there is a kind of a purpose way that I'm scattering this information. Part of it's my ADHD brain, but I'm also scattering it because I don't want other content creators. I can't completely stop them, but there's like 2 or 3 particular content creators. That's all they do is just take my content and my live streams, and then I guarantee you, like within 24 hours to 48 hours, this live stream is going to be put into a presentation or whatever, and they're going to put it out, basically just rewording things, but they just copy exactly basically what I'm saying. So I purposely scatter it so it makes it harder for them to make a video of my, hard work that I've put in learning all these things over the last 20 some years. And all these other people, they don't have all the cards and accounts and stuff. That's how you can tell they're BS and stuff. It's easy to copy people's content and say, oh, go apply for this card or whatever. You're not adding anything to value at all. At least with me, I actually have all the cards, and I've went through it, and I have students upon students, like so many students that have Row accounts and Ramp and Divi. And I have some students like even, I think Game Master, you're here, right? Yeah, so Game Master is one of my students. Natalie, am I saying your name right, Natalie? But we're going to get into your report in like 2 minutes. So she's here right now, and we're going to go over her. She's one of my students, been my student for over 1 year now on my mentorship, right? So I'm going to go over the good and bad about her business credit. But yeah, so there's a reason I was going to say about the Game Master. Oh, right. So there's some of my students, and Game Master is one of them, that I've offered certain methods to, and he doesn't want to use or do some particular methods. And that's fine. Like I said, none of this is illegal. And you don't have to worry about like anything because the business credit is not federally regulated. But at the same time, because it's not federally regulated, there's a lot of scammers out there too. But there are certain methods that I do teach only to my students because I have to make sure that, there's some students that beg me to tell them how to do the gas card liquidation, exactly how to do it. But because I don't feel 100% comfortable with them about that, because I think that maybe, I don't want to say they'll abuse it, but I don't want them to get in over their head. Like I try to help people with business advice. I've literally started over 20 businesses. Not all of them got up off the ground, but I've started so many different businesses. There's a reason I'm in Manila, Philippines, but I also used to live in Xiamen, China, and Shenzhen. And I do product sourcing and stuff too. Some of my students, I fly to China and I'll visit factories, and I will confirm, make sure, because if you're buying $5,000, $10,000, $20,000, $50,000, a container load of private label or merchandise to resell on, say, Amazon or your own Shopify store, it can be intimidating trusting just somebody off Alibaba, and they want you to do a bank wire, and there's no recourse. It's a communist country. What can you do to get your money back if it's a scam, or it's say junk? It doesn't, like, it's bad quality or something. There's no recourse. So some of my students, they will contract or hire me to fly to China because it's literally only like an hour and a half flight to Shenzhen. And that's where a lot of the factories are, in Shenzhen and Guangzhou and Changsha and I Xiamen as well, and Fuzhou. So it depends what type of merchandise, like shoes, clothing, textiles, that's Xiamen area. If it's electronics and stuff, it's typically going to be, the factories are going to be in like Guangzhou or Shenzhen. But my point is like I have done this with some of my students. They start the mentorship, but they don't necessarily know what to do because they just know they want to do business, right? And they don't even have an LLC yet. And they're like, can you help me set up an LLC? Yes, I can help you. Most of the time, you don't even need to hire a registered agent. You can do it yourself and save yourself a lot of money. And just do it through the Secretary of State. And try to avoid doing a C Corp, a INC. I'm not a financial advisor or accountant, but 9 out of 10 times, it's better just to do an LLC. It's quick, it's easy, and you don't need a lawyer to do it. You can do it yourself. It's not very complex to do it all and file it with your own state. And literally like 45 out of 50 states don't require a third-party registered agent. You can be your own registered agent, you know? So like one of my students, he paid like inc.com or LegalZoom $500-600 to register an LLC, and then charge them another $100 to do an EIN with the IRS. Well, get EIN, it's free. You can get it in 5 minutes. They will issue it to you. You just fill a 2-page form on irs.gov, and it's instantly issued. Things like that kind of piss me off. People charge fees like for something that's completely free that you can do online, and you don't need to be a lawyer. It's just ask for your name, what type of business you're in, the category, the address, and that's it. Like literally, it's that simple. Like my newsletter form is like around the same amount of information the IRS on their irs.gov. That's what it asks, basic information. And then there's companies charging $100, $150 for the EIN letter. You can do it yourself instantly. Just has to be before like I think 7 p.m. It's like 5 a.m. to 7 p.m. The IRS, like they don't allow it during that nighttime or whatever. I think that's to combat like people in other countries or something, issuing fake ones or something. But it's just simple things like that piss me off, where people are charging things that you can do for free. And those are the things that I don't want to just help my students. I want to help you, even if you're just a viewer, because I do understand that there's a lot of people that, you may have a full-time job, a W-2 job, right? But you don't want to work for the rest of your life. Like, my dad, he worked until like the family business, spring manufacturing. My great-grandfather founded it in Columbus, Ohio in 1896. So like all the Simmons and Sealy bed mattresses, the edge on the bed mattress that keeps it real firm. My great-grandfather's the inventor. It's called an edge guard. But even like the Apache helicopters, there's a spring mechanism that comes from my dad's factory. Ohio Wire Form is the name of the company, and Bloomingburg Spring and Wire Form. But it was all started in the garage, and then just, my great-grandfather and then my grandfather took it over. And then I'm the only child with my mom and my dad. But I'm the only male in the whole family tree to take it over, right? But my dad literally worked until the day he died, when he suddenly got cancer in 2016, and only had a back pain, went into the emergency room, and they said he has bone, liver, lung, and brain cancer, and had 2 weeks to live. And he actually died like 5 days after that. And he didn't even make it to 2 weeks, but he didn't even know. He was working literally 1 week before he died. He was working, but he was working like 12, 14 hours a day. He was the owner too, because my grandpa had passed, and then my uncles, he bought my uncles out. So it was 100% my dad's company. And it's like around a $12 million company. And no, I didn't come from a silver spoon, and I didn't even get any of that and stuff when he died, because my stepmother is an evil person and she forged the will. And I worked there as I don't want to say kid, because I didn't meet my dad, and we grew up on Section 8 welfare, my mom and stuff, because my mom and dad didn't marry. Just my dad was a Marine, and, but that's personal things or whatever. But I didn't know my dad until I was 15 years old, and he became like my best friend. But I had to work for him, and I worked in the factory. I don't like to get my hands dirty in like factory. I'd rather be at the desk office. And that's how I learned about business credit, is working for my dad. But I first had to work in the factory, and I had to clean the toilets. And even my dad, when week before he died, he was cleaning toilets like in the factory. But he's like a millionaire, but he would still buy the Wrangler cheap $20 jeans at Walmart and Casio watch and stuff. Like, he wanted to retire at 60. He died at 59. He only had like 6 months to go, and he was going to retire and enjoy his hard work that he worked. But he didn't always earn that money until my grandpa passed away. My dad was making, even 20 years ago, he was only making like $35,000 a year. And back then, like, I don't want to say only, but that's not very much money when you're you've worked there for 40 years and you're only making like so little. That's how my grandfather was. And my dad was the same way. He wouldn't give me anything. Like, if I needed a loan when I was like 18 years old, the company would give me a loan so I could say buy a car, because it would save almost an hour drive, because it's out in the middle of the country in Columbus, the second branches. So, they deducted out of my paycheck. So I was earning minimum wage, even though there's 40 employees, and those employees all thought, oh, you're the owner's son, you're making more than everybody. No, I even showed them my pay stub after so much, because my dad said, no matter what, they're going to automatically think that since you're the owner's son, that everything's given to you and stuff, and you don't have to work. And you have to prove them wrong. So my dad taught me I have to be the first one there before any employees get there, and I need to be the last one there. And that's kind of how I've, I guess, ran my life after I've learned, with my kids. I have 7 kids, and, as some of you guys may know, I lost my eldest daughter, and there's a video about that, but some of my longtime viewers, they witnessed some of that. But back to the business credit though, I couldn't stand my hands dirty at my dad's factory. So after about 3 years working for him, from the age 15 to about 18, I kind of threatened him. I told him, I'm not going to be the one to take over this company. I can't stand it. I don't like it. I don't like doing this type of work. I would literally have to sort these little micro springs, and they get all tangled. You pick one up, you pick up 1,000, and need to sort them and put like 10 pieces in little plastic bags. Oh, it's so boring thing to do. And then your hands, and you get burnt from the oven and stuff for the parts curing and everything. So he didn't want me to resign. So he finally gave in, and he moved me into the office. And then the general manager taught me how to do quotations. So the quotes would come in from businesses. They would want to quote for, say, like this wire product or something like this. So how this leads into business credit is I would do the quotes. The GM would approve the quotes. I would send the quotes back to the company that's requesting them. They would sign off on it. And that's how I learned about business credit and Dun & Bradstreet. Back then, we're talking in like 1999 is when it was. Dun & Bradstreet. And there's also Thomas.net. Dun & Bradstreet, there's no website back then, you know, because people think like business credit is like very old and you can just pull business credit online. You can't even pull business credit until about 12 years ago. Like you can't pull instantly. Like Dun & Bradstreet, Experian, they don't have that where it's instantly you can pull. Like if you have a Equifax account, you look at it, like I showed you guys on there, it's still outdated. Like it still looks like it's 20 years old and stuff. Equifax is very outdated on their design and stuff, you know, and Experian too. It's just very raw, basic data, right? So that's how I learned about business credit is doing quotations for my dad's company. And with that, it's like a big yellow pages type phone book, very small, like Bible print too, right? But they would send 3 of these books every 3 months. So that's when Shelf Corps, you could benefit maybe from Shelf Corps. And I'm going to bring up the Shelf Corps because I get this question all the time. And some of my students, they paid $3,000, $4,000, $5,000 for Shelf Corps. And they want to join the mentorship, but I don't accept them unless they start a new LLC because Shelf Corps don't work anymore. They reset as soon as the owner's name gets transferred. The only time they would work is if it's legitimate, like let's say it's a real business and it's in the same state and county or within the same vicinity of your home address or where you live and stuff. Like that's the only time it can work. But if it's not, and it's just like a JK Associates was one of my students that had that, but paid like $5,000 for a Wyoming Shelf Corp. But then they thought they can use that in Texas or whatever. No, you need to register it in Texas because you need to register as a foreign entity in Texas for it to be legitimate. But as soon as you do that anyways, it's reset. So it's like the same as if you bought a 10-year age Shelf Corp. It doesn't matter in business credit and in the last, say, 5 years, it's not beneficial. Like there's no point to doing it. Those people are just robbing you, taking money from you. Things like that really piss me off too. It's just like little things that people do, and they take advantage of people. You know, I understand because I've started so many businesses, and I didn't have money always. You know, I did sell my personal credit repair company, you know, and I was fortunate about selling my agency as well back in 2017. And I was fortunate enough to be able to do an exit on that. That was just under $10 million. But I started it with just $1,000 back in 2009, you know, for that particular business. And I've sold another business that I started literally with $2,500, BMW hood emblems. And I bought 100 pieces of those BMW hood emblems from China for $1.90 per piece. And I bought the domain BMWhoodemblems.com. And that's the only product I sold on Shopify, you know. And I auctioned that off after 6 months and sold that for $274,000. I got $274,000 for it because it was generating money, and I had a 3PL logistics company that I sent the hood emblems to, and they handled everything. It's integrated with the PayPal. As the payments came through, order came through, I sell them for $39.95. Then the 3PL, they charge about $11 to do everything, handle shipping, storage, all that. And then I was ranking organically just because of the domain is the exact match keyword. And that was generating, in the beginning, it was only a couple thousand per month. But at its peak, when I sold it, it was generating on average 15 to 17,000 gross per month. People say, well, why'd you sell it? I've sold several businesses because if I'm not passionate about it, then maybe it's going to go down. Like I wasn't passionate about it. I literally started it just to, it all stemmed from me buying a used BMW. I bought like a 6-year-old 3 Series BMW. And the hood emblem was like faded. And I'm like, I want to change the emblem. And I went to the BMW dealership. They wanted $250 for a piece of plastic. I'm like, there's no way I'm paying that. And then I look online and that's like a OEM. People are charging like 120. And I'm like, oh, this is cheap thing. I know I have background. I used to live in China back in like 2002, 2003 is when I lived there for a couple of years. So I found different factories and different quality, did that. And I'm like, I'll just buy 100 of them. And then they did air cargo, shipped them to me. And I put the one on my car. And after that, I'm like, I can sell these on eBay. And I put it on eBay. They were selling. But then I'm like, nah, this is kind of a headache. I want to automate it. So I set up a Shopify store. And that's the only item I sold is just the BMW hood emblem. That's it. Nothing else. And then my ex-wife at that time, when we lived in the States, she would just do the blister pack and then ship them out. I had just a little printer that automated, and then every time somebody paid, it printed out by itself on the Zebra printer, then she would send them out, and it cost only like $3 to ship out the emblem, with the postal service. But after about 2 months of her doing that, I said, no, the orders are coming in too much now. So then I reordered. Instead of 100, I ordered 1,000 this on the second order because I sold out of the 100 in the first 1 month, So I would have made more profit if I kept having my ex-wife do it. But to me, like, time is important too. Time is an asset that is the most valuable in the world. Like for you, each and every one of you guys, time is the thing that you cannot get back at all. And I'm sorry that I'm wasting I don't want to say wasting your time, but yapping too much. But all this does make sense. And I hope I'm motivating you guys too, as well, even if it's almost 2 a.m. I hope I am motivating you, or if you're watching this replay, even watching it replay, I hope it motivates you to see the success that not just myself, but a lot of my students have had. But there is a process to it all. But like even with my mentorship, I'm here to help people, not just with business credit. I will help you with just business in general. I've started so many different businesses, like even powder coating, spraying motorcycle rims and stuff. I have 2 shops. I have one in Ohio and I have one in Cebu, Philippines here. So, and I built the whole factory from the ground up. Spent about $100,000 here in the Philippines just to build the building. And that was 3 years ago when I built that. But I originally started it back in 2010 and was the first powder coating company in all of the Philippines for candy colors. And I was the first in Cebu as well for the whole country. So, and I would import from the US certain colors from, like, say, 3M. And the point I'm trying to make to you guys is I've invested into so many different businesses, and I have so many different investments into I do a lot of kickstart investments. I'm an angel investor, but I always wasn't. I didn't always have the luxury to do this, And I'll be honest with you guys, I've never really had bad personal credit. Okay, so I can't 100% relate to those that have bad personal credit, just because I've never been one to even take a chance or mess around with my personal credit. And I never really had personal credit established until you guys would be surprised on this, but I never had personal credit really established until 2014, 2015. I was too scared because I saw what so many other people struggled, including my mother and stuff, medical bills. And, so when I first turned 18, and I'm 45 now, so, that's over 27 years ago, I would go to the Gap or Structure or Target or Walmart, and, the checkout, I don't think they do it much any now, but back then they would try to get you to apply for their store card, it'd be underwritten through Community or Synchrony, but they would say you get 10% off your items today, or 15% off or something if you apply for the card. It just takes a second. So I'd always say yes, but I knew nothing about personal credit. I would just do that, So I just literally would just, I didn't even know Experian, Transient, Equifax, because personal credit is not taught ever. It's not taught. It's not even taught in college as far as a course or anything, And I think it should be, personal credit should be actually a mandatory in high school, and it should be mandatory at least in 11th and 12th grade, if not all 4 years, because you don't know what to do, and you're never going to know. There's 25-year-olds right now that have no idea anything about personal credit, but then they don't understand what a single late payment is going to affect them in six figures. Literally one late payment, and you go to buy a house in 2 years from now, say, and you're 25 years old, and you do a 30-year mortgage, a matter of, say, 4% versus, say, a 7% or 8% mortgage rate over a 30-year period of time, even if you keep the loan or not, it doesn't matter. Potentially, that one $20 late payment for a Discover card or something is costing you $50, $100, $200, $300,000. Not just that, but everything that you do affects everything in your life. And the fact that there's 15 people just on YouTube, but then that's tuning in right now, and then there's looks like 16 or 17 people on my Facebook channel. So there's over 30 people tuning in right now for most of you guys, probably 2 a.m. or 11. I mean, not 2 a.m. and 11 p.m., somewhere around there. But the fact that you guys are tuning in shows, one, that you're dedicated. So pat yourself on the back right now that you are even staying and listening to somebody that is borderline autistic ADHD. But I'm living proof that I came from nothing. I was given nothing. I didn't have any. My parents never gave me a car. I never had anything, Even my dad didn't have anything to give me because he didn't actually become wealthy until right before he died, So, my point is like, I've even been homeless myself. Even I ran away from home, and me and my dog, the one that I have tattooed on me here, we lived sometimes in people's car in Dayton, Ohio, just sleeping stuff, you know. And I'm telling you guys this because I want you guys to understand that how, if I can overcome certain things and strategies, there's no reason, no excuses for you, as long as you have the right guidance. And that doesn't mean you have to do my mentorship, even if you just listen to my free content. And then also read the book. It's free on YouTube. Think and Grow Rich, The Secret. These are free. They're books, but you can do audio. It's free. You know, they will change your life. I promise you. And that's what changed my life. I literally am living proof, you know, that, you know, you can go from eating, like I would go to Bally's Total Fitness to take a shower because my mom had a membership there, but I ran away from home, you know, because my stepdad would beat the hell out of me and throw me down the stairs, pull my hair like he was an alcoholic, you know. And I had enough of it. So I left, and, you know, my mom wouldn't do nothing about it. So, and the police back then wouldn't do nothing about it, you know, because that's, I guess, discipline, you know. Now you can't even whip your kid's butt without getting children's services involved or whatever, you know. But, you know, I was homeless for around 7-8 months, and I would eat out of the back of like Hungry Howie's Pizza. It's a pizza chain in Dayton, Ohio. I would eat like pizza, and yeah, it may seem gross, but I would eat after other people. Trash, you know, because I had no choice. I remember I even sleep in the U.S. Postal Service in the back of mail trucks, you know, and unlocked storage unit garages and stuff, you know, anywhere I could have shelter. You know, so the point is like, I don't want you guys to think that just because, you know, I don't like to use the word wealthy, but I'm okay and stuff, you know. But I didn't get it free, or nobody gave it to me at all, you know. And I didn't, you know, I failed a lot in business too, you know. Like I said, I've started over, I would say 22, 23 different businesses. And I would say 5 of them never got up off the ground. Like I started them, there's an idea, but then it never really went anywhere. It didn't really lose, but it, you know, never got out of the idea stage, but I formed the business, right? What happened here? You know, and then I would say I've had 3 or 4 businesses completely fail. Like, thankfully, they didn't fail where they were super costly, but I have lost money. I've even had one student that I invested into. He did the mentorship, and I believed in him, and I invested into his business. And I have invested into some of my students' businesses because they have, say, a good idea, or I think they're, you know, real dedicated. I don't do that as much anymore, but I have had a couple of students, you know, I don't want to say take advantage of me. Some of them did scam me, but this one student, he took me for about $80,000. And he knew I started off doing small investments with his business, right? And then he slowly built up that trust with me. And I think he knew what he was doing. And I just was kind of, I don't want to say maybe naive or something. And this is my weakness, is I trust people too much. You know, and I feel that like everybody should have trust starting off until you give me a reason not to trust you, you know? So that's how I try to give everybody. But, you know, My ex-wife, she get angry at me always before because I would like give money to local Filipinos that are poor, they'd be on the streets with their kids, like infants and stuff. And I would feel bad for them. So I would give them like 500 pesos, which is like $10. She would get so mad at me because she's like, they're just going to go buy like shabu, which is like meth, ice or whatever. And I'm like, I didn't understand that, but it's like, I don't have to answer that. You have to answer God or whoever you believe in. If you took advantage of me, that's not my problem. I'm a big believer in karma. What goes around comes around, so, but she always get mad at me and others get mad at me that I trust too much. My own mother say I trust too many people and stuff. And I do, I guess, and I've seen it. Jason, I think stepped out, but Jason could tell you he handles my accounting. I offer payment plans with my mentorship, right? And that's soon going to be going away directly. But we do have a company that we're in talks with right now for the new portal where you can finance your mentorship. So like this company, if they approve you, it's similar like a firm, but it's for businesses to businesses, and it works as a trade line too, and it builds up your credit. But like, I'll just be honest with you guys. So you guys know, like my mentorship, like, I just noticed my foam or whatever fell off. But just so you guys know, like if you guys are wondering what my mentorship costs, and I know I'll get to the actual audit, I promise, here in a moment. But I don't publicly put out my pricing for the mentorship. Just because it's not a type of thing where even if you're willing to pay me my rate, I don't accept everybody. Like Jason deals with the pre-consultations always first to weed out the people that are, say, trying to scam or they're not a good fit, or they have extremely bad personal credit, and then they have like very crazy expectations. They think I'm like, I'm not God. I can't work miracles. Like I would agree with everybody out there when it comes to even the Experian vice president on the business side even says, like, there's nobody smarter when it comes to U.S. business credit than Josh. Well, I concur, and that's not me being arrogant or cocky. It's the truth. I mean, there's nobody that even can come close to what I've been able to achieve in accounts that I have, but back to what I was saying, about the pricing and stuff and the students. So we get about 10 to 15 people a day texting that's my personal cell phone number too, the 937-423-9954. If you are interested in a free consultation, just text, and you will talk to me or Jason, and Jason's my little brother. He's also like the apprentice. Like he also probably knows more about business credit now that he's learned over the last couple of years working for me. He knows more about business credit probably than like 90% of everybody that's trying to teach it on YouTube and stuff, And then you guys also should know there's no other YouTube channel on YouTube that's strictly just business credit, dedicated to 100% just business credit. Besides, I think there's one. It's like Marco. But even he released a video couple of days ago and it only gets 100 views. There's nothing wrong with him, but he doesn't get it. He just teaches basics that like net 30 accounts, and like he doesn't do anything other than just like the very basics that pretty much anybody is self-explanatory knowledge, but I don't have anything bad to say about him. It's just like he doesn't get into the approval data points and the strategic methods and how to leverage things and everything. So, and I'm the only one publicly endorsed by Experian Business Credit as well. And they always come and comment on my videos. In fact, tomorrow we have Experian video dropping as well. That's similar to tonight's video, but it's going to be dedicated standalone video structured just all about the reports in general and how you need to look at everything. Anyways, I'll explain that, but I can guarantee you Experian's going to be commenting on that and stuff. We have very good relationship with Experian, especially their marketing team, John, that runs their Experian YouTube account. But in short, I only approve maybe about 10% of the people that contact me to join my mentorship. I only approve about 10%. And out of those 10% that I do approve, only maybe 30% of those, after I approve them, only maybe 30% of those decide to go forward once they see the pricing, okay? So say 10 people contacted me today or tonight. After we do the, say, consultation, maybe only 3 of those 3 of the 10, I would accept to join the mentorship. And then out of those 3, maybe only 1 goes forward once they see the pricing, because I'll tell you right now, don't be shocked, but my pricing is not cheap at all. But I have affordable options, and don't let the prices scare you. But if you were to do a payment plan and say it's a 1-year mentorship, then it's $12,000. And but that's only if you're doing a payment plan. So if you think about it, it's not, yeah, 12,000 seems like a lot, but it's actually not when you think about one, it's a payment plan and it's not due all at once. You know, you just do a down payment. Typically it's around 10% as a down payment. And then there's no set due date for the remaining amount. So it's not set monthly payments. You pay at your own pace. And that's what we do at Flex. But it does have to be paid up within 6 months, even though it's a 1-year mentorship. But don't think that that's my normal prices. Like, that's just for the payment plan. If you're doing a one-time payment, you get 50% discount. So it's only like $5,995. And that's only for a 52-week mentorship. The only ones that do 52-week mentorship are the ones that are into real estate, because I offer 12 weeks, 16 weeks, and 26 weeks, 52 weeks. So there's 4 options. And I would say the lowest price pretty much starts at like $1,995 if you do a one-time payment, and that gets you for 12 weeks, one-on-one mentorship. Or I think it's actually higher than that. Jason kind of handles the pricing, because we have changed pricing over time and stuff, you know. I don't do this for the money either. You know, you guys, this is not for money at all. This helps the Michael J. Fox Foundation for Parkinson's Research. I'm sure some of you guys know, I suffer from early onset Parkinson's since 2017. Unfortunately, I lost my dad. And then right when I lost my dad, it was literally like the worst time of my life, but also just a month later is when my company agency got acquired by a venture capital firm for $9.4 million. And I just would have been nice for my dad to have been alive to see that, because that was a life-changing moment for me. Yes, Uncle Sam took over $2 million of it, but still it was life-changing for me. And I'm very grateful, you know, for having the opportunity, and that was life-changing to the point where it made me be able to do all these other investments and have several different sources of revenue coming in. So I don't do this for money at all. I mean, Jason earns from it and stuff, but I do quarterly payments to the Michael J. Fox Foundation, not payments, but donation to the Michael J. Fox Foundation. And you guys can see the links too. There's some videos that have like the fundraising donation link. I don't have it handy, but you can actually see my whole story, and you can see what we've donated over the past 4 years. It's like over $500,000. I think it's close to 570, 580 now. But I try to donate as much as I can, but also still be able to keep a certain amount to cover the expenses and stuff, because I'm not doing this personally as a charity for people. I want to help people because I believe in what goes around comes around. So my other businesses tend to be more successful and do better because I don't know if it's the energy or what, but it's like what goes around is coming around. You know, before when I was like more greedy, I guess, about business and, you know, looked at business different before my dad died. It's like I was just, I was earning good. I was earning, you know, before I sold the company and stuff in 2017, like my best year, I think at one point was like 300,000, but it was always around like, I would say for the last 17 years or so, it's like went from like 80,000, 90,000, but it always went up, you know, but it never just did big jumps until I sold one of the other companies, but it still wasn't life-changing to sell a company for 274,000. And I don't want to sound out of touch or anything, but when you factor in taxes, self-employment tax, that's coming out to being like about 45% when you count all self-employment tax, federal, state, city. It adds up. So, you know, even 274,000, it was like 180 that I was left with. It can be, I guess, depending who you are, it could be life-changing, but for me, it wasn't, but I'm grateful for it. But had I not built up business credit for that business, I wouldn't have got 274,000. One of the reasons I got 274,000 is because I had a $120,000 no PG revolving line of credit, corporate credit built up on it. And that was through Headway Capital and Reliant. So regardless of what your plans and what you want to do, if you have one business or two businesses, you should build up business credit in general, not just for your company to be successful, of course, and to have the working capital, but you never know when you're going to sell the company. And if you sell the company, I can tell you right now, if you have business credit built up on the company, as long as it's good business credit, then you're going to get anywhere from a 10 to 30% premium. So if your company is worth $1 million, I'm just using it as a round number, or let's just say it's worth $100,000. You know, if two people had that same exact business and it's valued at $100,000, but then one didn't build up any business credit, and then the other one build up strategically and build up the business credit, not even strategically, just basic business credit you build up and had some trade lines built up. Well, the business credit built up, you're going to be able to get anywhere from $10,000 to $30,000 more when you sell the company than the other person that didn't build up business credit. So regardless, think of building up business credit as like an investment, like you're doing like the S&P 500, you know, it's a safe bet. And that's the other thing I want to make a video about too. I did like, again, I don't want to sound out of touch with reality, but maybe I should do this on my other YouTube channel, Credit Josh. But I really want to try to teach people so much about how to change their life, because I can tell you right now, like, just something that I did, I don't want to say by mistake, but I actually totally forgot about it. But I opened up like a Webull stock account, and I do a lot of stock investments, and I have a big portfolio with Charles Schwab. And I also use my American Express, Charles Schwab, and transfer those points over to Charles Schwab because I get almost 4%. Most credit cards, you're only gonna get like 1 to 2% cash back. Well, if you use American Express and you have Charles Schwab Platinum card, you can get almost about 4%. Instead of using their the membership rewards points for, like, say, statement credit, you're going to get like taken to the cleaners. It's like less than 0.5% as far as, like, if you convert the points, it's like very bad, But on average, it comes out to being like a 1% or so, like, depending on how you use it, or if you transfer miles or transfer and convert those into, say, points for miles. So there's different ways, but still, it's still not as good as Charles Schwab. With Charles Schwab, you can actually take that, say you have $100 worth of membership rewards points. Once you convert it over to Charles Schwab, you essentially could turn that $100 into so much more. So I'll show you guys. I'll do a YouTube short on my phone, I think tomorrow, but I'll actually show you my account on Webull. So I have Robinhood, I have Charles Schwab, but on Robinhood or on Webull, I totally forgot about this stock, but I bought NVIDIA and Intel. Okay. And this was exactly like 14 months ago when I bought these. I already have those stocks and other portfolios of mine on Charles Schwab and Robinhood, but for some reason I just downloaded Webull. I think it was because Webull contacted me, me or Jason, and wanted to do a sponsorship. So I downloaded it because I never used it prior. So I set up the Webull, and then I put in, and again, don't think I'm being out of touch by any means, but I put 10,000. I did a $10,000 wire into Webull, because you can day trade if you have higher amount. And again, I don't want to go all over the place, but there's requirements if you want to do more than 3 trades per month, and to be, like, say, an accredited investor. So anyways, I put the 10,000 in there, and I literally put 4,500 into NVIDIA, and then I put 5,500 into Intel. Now, let me tell you guys, I totally forgot about it, and literally like 3 or 4 days ago is when I was going through my phone, cleaning up all the apps because my phone was going slow, and I saw Webull. I'm like, oh, I have an account on there. So I went in, and that $10,000 initial stock trades that I bought of just those 2 trades, just in 1 year went up 187%. So in 1 year, that 10,000, it's like almost 19,000 profit. Of course, I have to pay taxes on the capital gains whenever I cash it out, but I'm just letting it hold. But my point is I have one other student that was not financially able to do very much, right? And I had her open up Charles Schwab account when she first got a relationship with American Express. And she got 4 American Express cards on the business side, right? And she's like, oh, I'm going to go back to Dominican Republic. Is she there, Dominican Republic? Or, yeah, Dominican Republic or Puerto Rico. One of those regions. That's where she's originally from. She wanted to go back. She didn't visit her family in like 4 years. So she was wanting to use the points to do flights for her and her husband. But then I told her, hey, don't use the points. It's kind of a ripoff if you do the points with using American Express to pay for the through their portal or whatever of exchanging for the flights. You can get better value putting that into stocks, right? Just transfer and so you get the stocks. She did that, and she's like, but I don't really have the budget to pay for our flights. And American Express, you have to pay back in full. No, American Express doesn't make you pay in full. They used to, but the platinum card, business or personal, there's pay over time limit. So they realize they have to be competitive. So it's like hybrid. So they will give you a pay over time limit. And I don't know if this is necessarily a good thing, because if you have to finance flights, maybe you shouldn't be taking a flight. But to eat their own, it's fine, whatever. I'm not going to, tell you what you should or shouldn't do when it comes to, personal financial decisions like that. But I told her to go ahead and finance, like she could basically finance her flights. It was like $2,000 or whatever round trip. And the only reason I told her to do that because she had 0% APR for 12 months with this card. That was her welcome offer, and she got 180,000 membership rewards point as her welcome bonus, as long as she spent 15,000 on the first 90 days. So basically, she met that requirement. And she did like a payment plan, if I'm not mistaken, for the mentorship. And she did like 52 weeks. But then I gave her a discount and tell her if she hasn't paid off sooner, then I can prorate and give her like a discount as if it was one-time payment or a split payment, right? So essentially, she got approved. She did a payment plan, but then she got approved for American Express cards. And then she was approaching the 90 days, and she's going to lose that welcome bonus. And I'm like, you don't want to lose that 180,000 points, because essentially that's worth like, could potentially be worth like $5,000 you're giving up, and it could even be worth more than that if you put it into a nice stock, sky's kind of the limit. So that's basically what I had her do. And then she's like, well, I have like 4,000. I need to spend 4,000 in the next 2 weeks. I don't have anything to buy, but to get that welcome bonus. And then I told her, I'm like, well, you still owe for your mentorship because you're on payment plan. She's like, oh, you accept American Express? And I'm like, yeah, of course I can accept American Express. So she used that and she paid it, right? And I gave her a discount off that. But that's not the point I'm trying to make. But she made the welcome bonus requirement just in time. But essentially, she financed the flights, and she paid like $120 a month for the flights with American Express, because it's pay over time limit, 0% APR. So something like that, that's not bad. But when it comes to like, say, a firm or any of those, avoid those like the plague, personal or business. And any of those credit builder accounts for personal credit, stay away. They're bad. Self, Kickoff, even Credit Strong. There's so many out there. Any of those credit builder accounts, don't do. They will hurt you. Credit builders actually hurt you. They don't help you. And unfortunately, there should be a law against them or a big disclosure. But if you have like 4 or 5 of those like credit builder accounts, you 100% have a tough time getting approved for anything high limit in the future, because like Self and any of those First Premier, any of those credit builder accounts have a 2-digit code attached to them on the back end as the underwriter side. So they're not labeled the same way. You don't see it on your credit report, but the underwriters see it. And why I'm telling you this, because this does matter for personal credit, and it can matter for no PG business credit as well. So if you have Self, it's fine. If you have 1 or 2 of those, it's fine. But if you have, like, say, Kickoff, if you have a whole bunch of credit builder accounts, and I've had a student like this that has almost 800 FICO score, but his file's very thin, and he has like 5 different of those credit builder accounts, and then the rest are a couple authorized user. But then he wonders why he can't get approved. And I'm like, it's because you're flat out telling the bureaus, you're telling the just like even Experian offers where you can do the reporting your rent and reporting utilities. Don't do that on the personal side. Like, it seems like it's a attractive thing and stuff, but you don't want personal or business underwriters knowing too much of your own personal business. And if you're showing that you got these credit builder accounts, you're basically telling Citibank or Chase or American Express, Fifth Third, you're telling the underwriters that you are not financially responsible. Essentially, that's what you're admitting that to them. I don't know how else to tell you that, but that's what you're admitting to them, because it shows right on your credit report. It's showing, one, the underwriter, even if it's secured, whatever, you're admitting basically and telling them that you're not good with finances and credit. So why should they give you a high limit card? Even if you have nothing derogatory, you did a credit sweep, whatever it is, even you have those on there that's hurting you. Well, is 1 or 2 going to hurt you? No, but they're definitely not helping you as much as you think. They may optic wise help you, like, oh, my score's up. But again, scores aren't always the most important. Literally, that's why I think it should be somewhat illegal or something for these companies to be pushing these credit builder accounts and utility reporting and stuff on the personal side, because they sell it good on a marketing point, but people don't realize it. Like, you don't want people and underwriters to know so much about your business. The more the information that you're actually giving them on the personal, it's like they're going to know everything about you, and then they're not going to give you a chance, or if they do give you a chance, it's going to be a small amount. So why have 10 personal credit cards with $1,000, $500 limit? That's a headache to deal with. I'd much rather have 3 cards that are like $10,000, $20,000 limit. Again, I don't want to be out of touch with reality, but like my lowest limit card right now is like 7,500. My average card is like 27,000, and the highest one I think is an $80,000 limit. But all my American Expresses are no preset spending limit, and I even have the Centurion Black invite only card, but I'm not bragging or anything on that. It's just like I've purposely got a lot of these cards so I could actually show you guys, like, I know how to use them and stack them as well, and leverage them. Do I use all of them? And some of them I've actually closed, but I only have, like, I don't want to say only, because I have too many that I don't suggest anybody to have as much personal credit cards as I have either. But I think I have a total of like 27 reporting on my personal credit file. But I never had credit built up on my personal side because I was so scared. I was like Dave Ramsey. That's what my dad taught me as well. Don't get credit. Don't use credit. If you don't have the money in your bank account, you have no business getting credit. So, and then I see people's life like ruined. They worked so hard, built good personal credit for 40, 50 years. And then the stock market collapsed 2008 and housing market collapsed. And then that's when I started my personal credit repair company, and that's what helped me build up that agency and sold it, got acquired by a private equity VC firm in San Jose, Vista Equity Capital in 2017. I was blessed for that, but I have strong SEO, search engine optimization background. And that's what I've been doing basically since the existence of Google. I first did it back in the Yahoo days, but that's how I was able to sell some of these companies because I rank websites organically at the top of Google, so they can become very valuable online assets. But anyways, all right. I could actually ramble. Can't believe it's been 2 hours and 40 minutes. Maybe I should do this more often, but earlier in the day, because honestly, I could probably go for 3 more hours just talking to you guys, not even about business credit, but just education in general. This is like a really, I love business. I'm a serial entrepreneur. And I don't want to say I do it for the money because I don't think I do. I mean, I do, but I don't, if that makes any sense. Meaning to say, if I had like $2 or $3 billion in the bank right now, I think I would probably still be sitting here doing this with you guys. And I think Jason can attest to that. Like on my other hobby aside of my different businesses, and that's the other reason I live in the Philippines, because I have multiple businesses and those businesses require staff, right? A lot of it is like, say, remote based. So many companies, and a lot of my students even before they join my mentorship, they already have virtual assistants, VAs they hired in the Philippines. The Philippines is the number one country when it comes to, say, even call centers. One of the biggest skyscrapers here in Manila is Synchrony and American Express. It's very big, and the area I'm at is called Bonifacio Global City in Manila. It's a 1-bedroom condo is $250,000, so it's not cheap by any means. So, but it's very much like the financial Asia, one of the financial hubs in Asia, and it's the number one outsourced country for all of US. So if you call T-Mobile or whatever company you're going to call that's big in America, whether it be for credit or telecom or anything, 9 out of 10 times you're going to be getting somebody here in my city here in Manila, because it's only English speaking country. But anyways, back to my point, that's what kind of brought me, aside from going and living in China doing product sourcing. That's why I've also been in the Philippines for almost 18 years, I think now. 2008 is when I first came to the Philippines, when I left China. And then what kind of made me stay is I met my first wife. And that's a whole nother story, but, we were married for 12 years and had 2 kids, but, it's one of the reasons I stay here too, and I only go visit back and forth to the States because, to me, Philippines is much safer than the U.S., anywhere in the U.S. Drugs don't discriminate, like Robert De Niro's grandson overdosed just a couple years ago. my daughter was unalived, I should say. She didn't overdose, but somebody bad basically unalived her. And I made a video about that. And she was studying to be a nurse and doing night school. And she got into a very bad accident. And by the accident, it was not by her doing. Some bad person intentionally caused her to have that accident. And the reason I'm telling you guys this is if I can go through these tragedies, and still come out on top and still be standing here or sitting here talking to you guys, there's no excuses. No, if I can do it, you can do it. I promise you. Tough things in life. If you like, people can grieve, but if you learn to accept it and move forward, then you're going to be stronger, not just with life in general, but it's going to make you stronger and smarter when it comes to even business, period. And surround yourself around like-minded people and cut off anybody that is bringing you down or that is negative. And I don't want to sound like a jerk by saying this, but I've even cut off some of my own step siblings. But, my daughter passes away, 2019, 2020, my half brother was found decomposed behind the Dayton airport. He overdosed. She's fentanyl, heroin. That stuff's very bad, especially around COVID time. It was very bad. But then in 2021, my little sister overdosed, passed away. So in a matter of 5 years, I lost my dad, daughter, brother, sister, and was diagnosed with early onset Parkinson's and had 2 brain operations 2023. So my point is, if I can go through all this adversity and face all this, there's no reason you can't do anything you put your mind to, and that's one reason too, for you guys that don't know much about me. Aside from my ADHD, if you guys maybe understand, like see my movements or my twitching or something, those are just my tremors and stuff. And maybe how my speech is, that's because of my early onset Parkinson's, but I take levodopa and carbidopa, dopamine agonist meds and seizure medicine and all that to help me. And I'm better now than I was when, say, 5 years ago, 4 years ago. So new medication and deep brain stimulation has helped me since 2023. That's why in 2023, I did take a break a little bit from YouTube to go through those clinical trials with the Michael J. Fox Foundation for Parkinson's Research. But anyways, Jason is back. And you guys are amazing. That's all I have to tell you guys, that you guys are amazing. We're not done yet, but I'll get to the point now what this live was supposed to be about 3 hours later. But the fact that you guys are still here is amazing. Jason, you gonna come up or what?
No, I was using my phone's camera for the webcam and it went low battery, but I've been in the streaming software. I just wasn't on the video cam.
Okay. All right. Yeah. And anybody that has to go, like Denise Taylor said, 2:34 a.m. Good night. I'm sorry, Denise, but
watch the replay.
Watch the replay. Pick up where you left off. But I apologize that I rambled. This is, I think, the longest live that I've done in like many years, actually.
I could imagine.
And I can keep going for 3 more hours, but I won't, you guys. But
I
I
learned a
hope,
lot. I know some people in
yeah,
the chat did too.
I hope you guys um, can see how my passion is about this. Like, I've not even scratched the surface yet. Like, I think I could probably do a 12-hour live about just business credit and still not run out of topics about it. I haven't even talked about any of the companies yet besides one, you know, but there's so many things that you can do. But I have like 30 tabs you can see here. I want to cover each one of them, but I'm not going to do that. So let's get into some of the recent students approvals. This is in, I think, the last couple months, last like 90 days. So this is one student that got the Expensify. What happened? What happened? Where did it go? Yeah, there it is. So this is the Expensify. Okay. So this is a good, I don't want to say easy, but it can be easy because they don't look really at business credit. It's a Visa, but it does based on what your business checking account balance is. That's one of the biggest factors. They don't check your personal credit at all, but I would say the range goes anywhere. The lowest I've seen is like $1,500. It's like the lowest. Okay. They typically will give you anywhere from 75% to 125% of whatever is in your business checking account at the time of applying. So with some of these fintechs, you want to strategically apply when you know that things are going to happen for you. Like say, if you only have a couple clients and you have like say you only get paid at a certain time of the month or something. Even if you work a W-2 job, this is the other thing. Like I wanted to tell you guys, there's a lot of students that I have that they don't have revenue coming in or very little, or they're doing side hustles. They do DoorDash and, Instacart or Uber, and they'll either do that full time or they do that on the side as a side hustle. And that's understandable, and you have to work hard regardless of what situation you're in. But I promise you, if you work hard for 1 to 3 years, there's no reason that you can't become a millionaire, even if you start off with say a $10,000 business credit gas card. If you do things strategically and do it right, becoming a millionaire in 2026 is not as hard as it was, say, 20 years ago. Also, $1 million is not worth this really much nowadays compared to what, 20 years ago, $1 million could buy for you, so, but it's not out of reach, is what I guess the point I'm trying to make. So, and some of these students are perfect examples. So this is one student. This is the one also that she actually started doing DoorDash and what was it? Amazon package delivery out of her SUV, mail roll delivery. She got a government contract, but she has hustles, But she literally was started, I think it was like 2.5 years ago, and she joined my mentorship 2 times, But she started off and she was doing like $5,500 to $7,500 a month, just herself doing these little side gigs, hustles and stuff, And I told her, hey, because she had all this, her revenue or even her W-2 job was going into her personal checking account. And I told her, hey, stop that now. Move it over, have it direct deposited into your business checking account. And she's like, but it's not business revenue. It's my own personal revenue. Doesn't matter. Whatever you have, even if it's a side hustle, whatever, or you work a full-time job and then you're doing your own business credit for your own business and you're wanting to eventually be able to quit your full-time job. If you have a W-2 job, whatever, or a side hustle, or whatever it is, get it moved over into your business checking account, at least for a minimum of like the direct deposit or whatever. At least move it over for a minimum of like 90 days, especially if you're pre-revenue, you really need to do that, because the fintechs, the no PG underwriters, that's all they care about is the Plaid data. When you connect your business bank account, if they don't see some transactions coming in, you could have 50,000 in your business checking account, but if there's no activity other than you self-depositing funds, most of the PG underwriters, they ignore what you put in there. They need to see transaction activity, especially it needs to be not self-inflicted transactions, self-manipulation transactions. Well, I mean, there's ways you can manipulate it, but you don't want to just say you have a Chase account, right? A Chase business account, and then you have a Chase personal account. You have your W-2, your personal revenue coming in to your Chase personal account. So it's a lot of my students, prior to them doing the mentorship, they would do this and they think it's helping them, but they like would move $1,000 or $5,000 instantly in the Chase dashboard or whatever. Just move it over, just do a transfer from personal into business. And they would do that like many times a month, and they're thinking that's actually helping them. It doesn't help at all. It's no different than if you never did it. That's not helping. That's not showing, proving anything. So what I tell my students to do, and my viewers, I tell them, if you want to show those transactions, what you want to do is do a bank wire. And it might be a little odd, like, oh, why do I going to pay $20 to do a bank wire when I have a Chase personal and a Chase business account? And even maybe you don't necessarily want to do it there at the bank, because the bank might be like, why are you doing a bank wire when you can just do a transfer? Anyways, it's none of their business anyways, but there's a reason behind it. You want to do it, you can do it online anyways, but you just do a bank wire from your personal, even if it's with the same institution or not, it doesn't matter. But do a bank wire. Let's just say you're going to do you have $1,000 to spare or whatever, or it's your W-2 income, whatever. Instead of money just sitting in a personal savings or personal checking, let it sit in the business account. But if it's sitting in the business account or it's sitting in your personal account, for that to actually count to help you with basically your business banking credit profile, because Plaid keeps track of that. People don't realize about Plaid is becoming a credit intelligence data, almost like a credit bureau. So they're monitoring all this. But you want to do the bank wire, not do ACH. But whenever time you can do it, always do it. But never do it for like flat, even amounts, like $1,000. Don't do that. That doesn't look natural. It doesn't look, it looks like you're trying to manipulate. It's okay to manipulate the data. You're not doing anything illegal. But what you want to do is do it like, say, $978.16 or $1,142.22 or whatever. So you want those transactions to be coming in multiple per week. So if you can only do $1,000 to spare per month to build up your business banking data, then you want to do like one for $400 and like $413 and some cents. Do another one for like the next week, do $172. The next week, do one, and don't always do it the same exact date. Like you don't want to do it on every Monday or something. You want it to be random. And that's how you kind of can, I would say, it's kind of like manufacturer banking, and these are gray line areas. None of this is illegal to do. You're not breaking any law period. And people's been doing this for many years, like especially real estate. I mean, this is like one of the oldest tricks in the book, really. So it's not like I'm telling you to do something that's like people's not already been doing, you know. I mean, even the president of the United States, real estate tycoon, you know, he's done it. George Soros, Warren Buffett, all these guys have done this. And that's how, especially if they're in real estate. I mean, this is, you know, one of the methods that people can use and do and stuff, you know. But now with this intelligence data and Plaid, this is why you don't want to necessarily do these ACH transfers. You can do some here and there, but I'm saying they're not going to help you towards the credit lines, right? So, and also you can do cash deposits if you have a cash business or something, or you have cash or whatever, you can always go into the bank and do deposits. But also if you're doing cash deposits, don't have it be flat money, like $1,000 or $500 or $540. You don't want to do that. You always want it to be a odd amount and some change or whatever, because then you're basically padding your business credit banking profile data, and you're lowering the risk exposure. So by having multiple transactions coming through and they're as bank wires, those are counted the same as like a treasury payment, like a gross revenue, a client that you have, even though it's your own money, but it's treated the same as if it's a client. And you always want more than one transaction per month. If you're pre-revenue, you want to try to do, even if it's $100, $200 a week or whatever, don't let the amount discourage you. It's better to have, 5 or 6, tiny transactions being deposited monthly than it is to have one $700 transaction being deposited. The reason for that is because it's all about the transaction and growth and the risk exposure. The underwriters, a lot of them, they will use the automated systems that analyze this data. Like they use Stripe Radar is one of the ones that a lot of the underwriters will use is Stripe Radar. Stripe Radar analyzes the patterns of the activity of the deposits, and then they give a risk. It's basically called like a cautionary. What happened here? What happened? Can you guys still see? Hello, can you hear me?
I can hear you. Looks fine for me.
My computer is just like changing screens and stuff. Okay. Anyways,
Looks good.
I lost my train of thought. It popped up and said reload or something. I thought I lost the internet connection or something, because I've had internet issues pretty much all day long. Well, the last 2 months, but also for one connection or whatever. But anyways, I almost skipped. Yeah, I have backups, but the primary is the bad one that you already know about. They said they came out yesterday and they said that modem is defective, but then they want me to pay for the modem. And I'm like, why would I pay for the modem? It's your modem and you guys just installed it 2 months ago and I paid the monthly bill for 2 months. It's a headache. So now I have the other backup running from the 3rd floor. But anyways, this, you guys, is just my temporary studio. I have a music studio on the 3rd floor. For those that don't know, some of you guys know, I'm a music producer and also a singer-songwriter. But I just keep that separate than my business stuff. It's more of like a passion, but I'm on Spotify and Apple Music, iTunes, all that and stuff under my other stage names. But anyways, back to where I was. I'll show you guys this though. So anyways, Expensify, pretty easy to get approved if you have that banking data. That's why business credit is not so cut and dry as what it used to be. Don't focus on the business credit scores. Dun & Bradstreet, everyone wants to talk about 80 paydex score. That's the most annoying thing for me in business credit. I still get the texts every day, and I guarantee you by the time this live is over, I will check and probably have like 30 or 40 texts from people that watched the live that came in and out. And I guarantee you there'll be at least one text of somebody saying that they need my advice and stuff and want to possibly join the mentorship and have a consultation because they want to get their paydex score above 80. It's so annoying because it's not you guys doing anything wrong, but so many of these content creators don't know what the heck they're talking about and just like keep shoving it in your head that paydex score matters. And Dun & Bradstreet does a good job before at like making that be a important thing. But there was so much fraud that happened during COVID, and underwriters don't even trust Dun & Bradstreet really. So financial underwriters don't use Dun & Bradstreet anymore. For the most part, they don't use them as their primary decision making. That's why anything financial related, whether it be a MasterCard, Visa, gas card, most store cards, even Synchrony, small business financial, not small business financial exchange, but SBA, anything financial related attached to it, line of credit, anything, 98% time, Experian is going to be the credit bureau that the underwriter uses. Okay. And 100% of the time when it comes to this SBA. So make sure you build up your business credit for what your overall goals are. So if you're trying to get no PG auto loan, and that's actually what I wanted to cover for one of my students, that's what she wants to get, but we'll cover that, I guess, tomorrow. But I'll show the report and audit here in a minute. But some of my students, they have different goals, right? So if you have a goal to get an OPG business auto loan, or you want to do a car rental company or put cars on Toro, you want to get a fleet of vehicles. Like I had one student get 10 G-Wagons at the Beverly Hills dealership, and this was like I think 6 or 8 months ago. He's not with the mentorship anymore, but he did a 26-week mentorship, and I still talk to him from time to time. But he does. It's almost like Uber Black, but it's a high value company that is based out of like Germany, I believe, if I'm not mistaken. But they have contracts worked out with American Express, Microsoft, Silicon Valley. So it's like high value, high level executives. They'll fly into, say, I don't know, LA or San Diego. And instead of them booking or something themselves, because they're so high level executives, they have this concierge company that will send like G-Wagons or, Maybachs or, Bentleys or whatever. They'll send them as their like almost like a livery service. And from what I understand from my student, he was doing Uber Black with a G-Wagon before, and he would get paid. He's out of like, I think, Orange County or not Orange County. Where's Carlsbad at? Or what county is that? Carlsbad?
That's still Los Angeles County.
Is it? Yeah. It's down next. That's right next to San Diego, Carlsbad.
Oh, maybe. Yeah, actually.
Yeah, it's next to La Jolla. But anyways, that's where he's out of. But he basically told me that he did Uber Black originally before I helped him get the G-Wagons, but he had like a 2-year-old G-Wagon, and from like San Diego airport, he would do pickups, say for an Uber Black, and he would take people to say Carlsbad. And typically on say a normal Uber, it's going to be like $85 for that. I'm just using an example. I don't have an exact idea because I've been there, but I don't know how much it costs, But this is an example that he gave me. But then for Uber Black, you're paying a premium for that. So say instead of $85, it's $170, Well, with this company that is based out of Germany that works with high level like companies like Microsoft, is one of their contracts. And just like with my Centurion Black Invite Only card and America's Platinum cards, like most of their higher level cards, you can call the concierge or call American Express and say, hey, I'm going to be flying into Los Angeles or JFK, New York City on April 1st. And can you have a Mercedes for me for pickup or, airport transfer? Well, that's just a perk. You don't have to pay for it. It comes with that. And especially with like having the black card, that's part of the concierge. That's why there's an annual fee of $5,000 a year. Again, I don't recommend anybody try to get that card. Of course, for me, that was more like a marketing expense, but it's a $10,000 initiation fee and then $5,000 annual fee. And so, but anyways, my point is just like that, if I went and had them pick me up with a G-Wagon or whatever, American Express would cover it. They have a contract with this company out of Germany, and they contract out with livery services, like limousine companies and stuff, but they have to be like brand new vehicles, like in the last 2 years. They're very strict. Like I can request a yellow Lamborghini to pick me up in GFK with a black card, that's like part what you're paying for and stuff too. But not necessarily just that, but back to what I was saying, say the G-Wagon, American Express contracts with this company that's in Germany. And then this Germany company, it's a tech company, auto tech company. They contract with these independent businesses. So from what I understand, instead of it being like $180 for Uber Black for say San Diego to Carlsbad for Uber Black, he gets paid like $800 for just like a 15-minute drive or whatever. $800 because it's for like these high accounts. And it still has like, he said there's an app and you can hook it up and everything. And he has now 10 drivers. And the only downside with this company that he works with or does these contracts with is you don't get paid right away. So if his drivers do get called on to be picked up, somebody at the airport today, say in Los Angeles, because he's actually out of Beverly Hills is where he bought the G-Wagons at Beverly Hills Mercedes branch, but he's out of Carlsbad, I think, if I'm not mistaken, or La Jolla, one of the two. But anyways, he doesn't get paid right away. Like if his drivers pick up somebody today, he has to wait. He invoices the company 30 days, so they get net 30 on that. So he still has to pay his drivers either daily or weekly. So he has them work as like independent contractors. And then he gives them the gas cards. That's why he one of the reasons he did the mentorship, because he wanted to get the no PG auto loans, right? So we were able to give him the PG auto loans, but it was a line of credit through Ally. So Ally won't let you apply directly with them for what happened? Where'd I go? I don't know what happened, but they won't let you apply directly with them if it's 5 or fewer vehicles. So you have to go to the dealership and tell the dealership you want no personal guarantee. And I made videos about that before, but you want to do it to the right dealerships too. There's certain dealerships you don't want to go to because they'll try to run your personal credit and everything. But basically, you have to tell them Ally Bank is who you want them to run the no personal guarantee auto loan through. There's others out there, but that's the most, I would say, friendly and easiest one. So he was able to get approved, but because he got 10 G-Wagons, we were able to apply directly with Ally on their website. So, and I will show you guys that probably in the video I'll make tomorrow. That's just a no PG video about auto loans, because I think it's been like 3 years since I've made a no PG auto loan video, but I have like 4 videos out there, and I think they make up close to like 1 million views combined with those videos. I think my channel has almost 3 million views with all the videos, but the auto loan videos, I think, are the ones that make up for like at least 30% of my 3 million views. So it's been a long time since I've made those videos, even though they still get viewed every day right now. And a lot of my videos that are 5-6 years old, but they are still getting viewed. Some of it's kind of outdated, and I was kind of camera shy back then because I didn't know much about YouTube equipment and stuff. But anyways, why I was bringing up the no PG auto loans though is, like him, he was able to get 10 G-Wagons, completely no PG, and his business was only less than 1 year old, but he had about 7 months of solid business credit that we built up. Or no, that's not true, actually. He had some business credit already built up prior to him joining the mentorship, but it was kind of like the scattered credit lines and stuff, So, did he disconnect again? But he already built up business credit for, I think, 3 or 4 months prior to joining the mentorship. He joined the mentorship, and then we did 3 full payment history, quarterly payment trend, and I'll show you guys that here in a minute on the Experian on what you want to have if you want to get auto loans. So that's what he needed, and then we were able to get him that, and it was just over $2.2 million for the 10 G-Wagons that he financed. But he financed it with Ally directly, and I don't want to talk too personal information about him in particular, but put it this way, he did have to put a down payment down, because what do you expect? Not always you have to put down payments. Depends what vehicle it is, how much it is. But it's over $2 million, so he did have to put a down payment down. But it was, I can tell you right now, it wasn't as much as what you would expect. So Ally only required him to put down around 5%. So, again, I'd still a little over 100,000, if I'm not mistaken. I think it was like 111,000 that he had to put down. But, I didn't tell him to do the 10 G-Wagons. He just wouldn't. I said, just get 1 for now or 2, but he insisted. So, okay. And I will always give my 2 cents, and, my advice, even if you're my one-on-one student, VIP student, my advice is optional. You don't have to do everything I tell you to do. Even in the client portal, I'll assign tasks to you. You don't have to do everything I tell you to do, but if you pick and choose what you want to do and you only do half of what I tell you to do, well, at the end of the mentorship term, if you didn't follow what I told you to do, then you can't blame me that, hey, your mentorship program doesn't work or it's not what I expected or something. Well, I keep track of everything in the portal, and like if you don't have the communication with me or you just get marked down on tasks, but you didn't actually comment on the client portal side of what the outcome was. I understand life happens, you get busy, things like that. I mean, that even happens with me. Some of my students, I extend their mentorship because, I got busy or something. I've been coding this new platform and whatnot. But if things happen and you're, say, let me see if I can pull this up more. It's better. I can show it bigger. Okay. Yeah. But, if communication is key, especially now that I have Jason. So Jason's been working with me for a couple of years now, right? And he's like my office manager. But it wasn't until, what would you say, like 2 or 3 months now that you've started taking more of front end role as well?
Probably like 4 or 5 months already. Time's
Okay.
going by quick.
Yeah, it has. Time 2025 was like that for me. Like it was like that year went by way too fast. But yeah, so even Jason does like the consultations. I know a lot of you guys probably want to have a consultation with me, and that's fine. I will do the consultation with you. However, if I get really busy, then you do the free phone consultation first with Jason, and then he can kind of answer some questions for you. And then if everything looks good at that point, and he can give you the pricing and information, explain everything to you more in detail based on your particular situation. And then if you're still interested to go forward with wanting to have a consultation with me, that's fine. He will do a consultation, and then I will do a consultation with you, and no charge for that, Of course, don't just call if you're just looking to get fishing for information, because you're wasting time on that. If you want free information of a particular information of something, please respect my time, Jason's time. Just email support@joshvanhorn.com. Jason, can you put that in the chat section under my email? Just email support@joshvanhorn.com. Or support@getbusinesscredit.com, either or. But if you want free information, just email me there. And I'll get back to you, but don't expect an instant, if you're just looking for advice, then just send me an email. But I'm not going to go back and forth and be your coach and stuff. It wouldn't be fair for my paying students, one-on-one students. But if you just have needed some quick advice, I don't mind advising or something. I want you to be successful, even if you want to join the mentorship, but you're not in a position to do that. Well, regardless, I want you to be able to be on a good start. So maybe in the future, you could join the mentorship in 3 or 6 months or something, So regardless, we both want you successful. Just know that there is a high demand, and we get anywhere from 10 to 20 people a day reaching out. And unfortunately, some people are just fishing for information, and they will even go to the point and say, okay, I approve them for the mentorship. They'll have us set up their account. We enroll them in the portal, and then they do their intake form, go through all that, and then we send them an invoice, and then they're making excuses and stuff, and they don't make a payment and things like that. So this was more past. So it's amazing what people will actually go through and make up so many stories and stuff just to get free information. Hey, just be honest with me. If you want free information and you can't do the mentorship, or I can't approve you for mentorship, just respect my time. Email me, support@joshvanhorn.com, and give me time to get back to you. It could take 1 day or it could take 3 or 4 days. I don't know. But I get over 100 emails a day between all of my business stuff going on. So, but yeah. But anyways, like, you want to build up business credit based on what your overall goals are. If your goals are to get no PG business auto loans, and you want to focus the most on credit safe and Equifax business credit and PayNet, that's the primary bureau that Ford Motor Credit, Ally, Toyota, Nissan Financial, pretty much all the possible no PG auto lending underwriters, whether it be directly with the say Ford Motor Credit, or a secondary underwriter like Ally. 90% of the time they're going to be pulling Equifax, but they may be pulling a secondary bureau to verify Equifax's data. So I've seen this a lot, where it'll be like Equifax as the primary decision factor, but then they'll use credit safe as verification secondary data, because credit safe has a lot of LexisNexis family linkage data and risk data that Equifax doesn't necessarily have. So it's just a second layer for them to confirm. Or they could be using Equifax as the primary decision and then Dun & Bradstreet as a secondary. But it's rarely ever Dun & Bradstreet as a primary. Dun & Bradstreet, mainly, you want to focus on Dun & Bradstreet if you're trying to get manufacturing line of credit. Say, like, you're trying to get, like my dad's spring factory. If you don't have good business credit with the Dun & Bradstreet, then my dad's company wouldn't make you custom springs and wire forms. But I don't think many people that are watching and trying to get business credit are trying to get a net 30 with a manufacturer. It's the only people that really use Dun & Bradstreet as far as like underwriters are going to be like, okay, Granger checks it, industrial supply, like Uline, even Quill, Newegg, like computer parts. It's really industry based. Like if you're trying to get like medical supplies, beauty supplies, like Sally's Beauty Supply, if you want to buy wholesale from them, they check Dun & Bradstreet. Like MSTS, TrevPay, like the Best Buy card. But they also will look at your Experian based on that as well. But Dun & Bradstreet, just think of this. Nowadays in 2026, Dun & Bradstreet is primarily used by manufacturing, line of credit, cleaning supplies, industrial chemical supplies, some equipment leasing. Say you're trying to start a carpet cleaning business and you need to get a carpet cleaner machine. So equipment leasing, or say a trailer leasing, 18-wheeler, like flatbed trailer. Then I don't want to say always, but I would say like 70-80% of the time Dun & Bradstreet's going to be the one used. So I don't tell anybody to ignore any bureau. You should initially work on getting all the bureaus, at least I would say 3 to 4 foundation trade lines. That's why I always recommend Fair Figure and NAV and eCredible as your safe foundation. But then there's other ones, say like Grogy, Coast to Coast. Those all report to Experian. You always want Experian to be your primary one, because I don't care who you are or what your goals are. Experian, you really can't go wrong with Experian, because it doesn't matter what type of business you're in, you're always going to need that working capital, like liquid capital. Visa, MasterCard. Everybody can use Visa, MasterCard, or a gas card, store cards, or open-end revolving lines, draw lines. I've never heard any of my students or potential students contact me and be like, ew, no, I don't like the credit cards. Never heard that before. I don't need lines of credit. I've never heard that. So, I have had students say they want to they need to get an increase with the distribution line because they're a distributor for like government contracts for like the Army bases and county facilities and stuff. What do you call it? Court, like cafeteria, like the industrial kitchen supply. That's what it was. Like Hobart, the dishwashers and stuff, and the ice cream machines through Taylor or whatever, all that stainless steel type stuff. One of my students needed to get their Dun & Bradstreet improved because they had like $150,000 line of, I don't want to say line of credit, but basically 150,000 credit line. And I believe it was with Taylor, the ice cream machine company or whatever manufacturer. And they used Dun & Bradstreet to determine what the credit line or what they will give you basically. And those machines are $5,000 to $20,000, $30,000 each. So that student, she needed to fulfill a government contract, and this government contract that she got required somewhere around the ballpark of like $500,000 that she had to pay to get the merchandise of the machines. And it's potentially was worth like 800,000, I think she said, 700 or 800,000. If she couldn't fulfill it, she's going to lose like $200,000, $300,000 potential profit. And she waited too long to contact me because she was contemplating to do the mentorship for several months, and then she waited until last minute. But we needed to get her Dun & Bradstreet up for the Taylor to increase her line of credit within them, even though it's only net 30, but she wanted that increase because the government would pay quickly or something, is basically what she told me. I have so many different students and so much, so that's why it's like I'm talking about so many different students at once in a way. But in her situation, we were able to get her limit increased, but not as much as she wanted. So what we had to do is actually she had to do a high merchant cash advance line of credit, and they're expensive, but I had her go through Get Loot to get that, and was able to, because there's no prepayment penalty with Get Loot. So the amount that she was lacking, is it here? Let me see. Yeah. The amount that she was lacking, she got with the line of credit with it's Get Loot, but it's actually called Loot. So she was able to get that, and but it wasn't enough to cover everything. So she used that, and if I'm not mistaken, it was revenued. So she basically had to use 3 different lines of credit to fulfill that government contract. And it was like a nightmare, but she still ended up kind of, I don't want to say losing money, but by using and wait until last minute to get these credit lines, she paid higher points than she should have had she just done things the right way prior, because she was like talking to me about joining. We did consultations for like 4 or 5 months. It was her original time when she talked to me. And then it's like every 2 months, she'd be like, oh, okay, I'm going to join. But then it was like going back and forth. And then she would go missing for like 2 months. And then it's like she wait until last minute. And then it's like, oh, I can't work miracles, you know. I can get her, you know, approved, but you know, I don't want my students paying 20% or 18% for a loan. That's crazy, you know. It's okay to pay those high interest loans if there's no prepayment penalties. Like, see, on this, you can actually get a discount if you pay it off early, you know. But typically there's prepayment penalties, and they want you to pay the loan like the full term, because that's how they're going to make money. People think, oh, it's get $100,000 through Reliant or something. Yeah, those merchant cash advances, they will typically give you the money quickly. There's still requirements, but they'll give you the money quickly. But then every day they're going to take, after they give you the 100,000, every day, literally 24 hours after they give you the 100,000, they're going to be taking out like $700 to $1,500 5 days a week out of your bank account, ACH draft. And then when they'll make it seem like it's not very much as far as like the amount you're going to be paying. But if you totaled up for the whole, say, 3 months or 5 month loan, you borrowed 100, you're paying back 140 or 150,000. It's extremely expensive. It's like should be illegal, but it's not. But anyways, I will get into this real quick. I can't believe you guys are still staying here strong. I'm gonna finish this up, and it will only take probably like 15 minutes or less for me to go over this student audit report, and I'll probably do another audit report of hers that's more structured tomorrow, so things are not all over the place. But anyways, without further ado, here's her report. Let me see if I can, I don't know if there's a way I can zoom. Let me see if I can zoom this. What's reading mode? I don't know what I just did, but how do I close that? I was gonna zoom it. In fact, actually tomorrow for that video that I'll do the structured one for this, I will download this as a PDF and then have it zoomed in so you guys can see, because right now it looks all pixelated or whatever. And let me check if we can
Try to hold control and then scroll on the web page.
What is it?
Hold control and then scroll up and down.
Oh, okay. I should have known that. I'm so good with everything, but this is the one thing I forgot about. Yeah, okay. Thanks for telling me that. That's a hell of a lot better.
Yeah, I kind of use that a lot.
It looks horrible on my screen, but it's good on your screen. But on my monitor, it's I have a wide screen, so it's kind of silly looking, like I'm 97 years old can't see because it's so huge. But anyways, okay, so I'm just going to go over this on 2 levels. I'm going to cover basically her. This is actually one of my students, and I don't know if she's still here or not, but if not, she can watch this later. But this is what you're going to see on smartbusinessreports.com, and smartbusinessreports.com is owned by Experian. That's just their business division. So you don't want to go on Experian.com for Experian Business Reports, because that's for the personal side. So
you
want
to cover her name. Is it able to be covered?
Oh, okay. Well, no, I can't really cover it, but so I will make a other video that has that data blurred out. So I'm not going to cover the filmographic data on this video. So tomorrow I would do a live, or not live stream, but the same video about this as a case study, but then I'll just have it blurred out just so you guys can still understand, because this is a perfect example of not necessarily bad, but understanding how the scores, and it's not all about just like focusing on your Intel score. So there's like this score is like showing medium high risk. So this particular score, you don't want to necessarily focus on. Don't focus on business credit scores in general. That should not be something that's even in your necessary vocabulary to think about when it comes to building business credit. It's more of something that you could use as just like a secondary metric to think about, but don't sit there and focus on scores, because I can tell you this right now, it doesn't matter what bureau it is. You can have the best possible score with, say, Experian Business Credit, which is 100 on their Intel score, right? But having a 100 Intel score, you're not going to get approved just based off of a score. A score is like, anybody can necessarily manipulate their score, okay? Anybody can do that. So like what I'm basically, let me move this so it's better looking here. The sun is out big time now. But basically, if you just focus on your business credit score, and say the most common good business credit score that's basically pretty common is, say, 80 PDIC score or a 85 Intel score, right? Almost anybody could have those scores if you start a brand new LLC today, all right? And you register your LLC today and got NAF, Fair Figure, eCredible, Uline, and maybe coast to coast office supply, because that reports to Experian. So if you got all of those, 4 or 5 of those trade lines, had them for 3 months, so you have this quarterly payment trend like I will show here. So here's the quarterly payment trend. As long as you have that quarterly payment trend for those 3 to 5 Experian trade lines, then you're going to have an 80 to 90 Intel score. Okay.
Like, I'm having some camera issues.
Yeah, I know. I just got sidetracked off Wealthcom saying about trade lines being a scam. Well, there's 2 ways to answer that. You can't sell trade lines. There's no way to do that. Like, some people try to sell trade lines. It's impossible. There is some scammers out there. I have no problem calling them out too. I've already called many of them out, but there's like one like Boost Business Trade Lines. I'll try to pull it up and show you guys later. But I know Credit Plugs promoted them. That's a 100% a scam. They do report, but it's a scam. It's flat out fraud. That's like 100% illegal and 100% fraud. That's why that website has no mention of an actual real company, and it's so vague and generic, and you're renting a server, but you don't get access to the server. It makes no sense. But then they're reporting a trade line for like $25,000, $50,000 on your business credit report, but then you have to pay like $3,000 up front. So it's 100% illegal, and if it hasn't already been caught, it will get caught. It's more than likely somebody that works for a major institution, and they work in the accounting department, and then they work to deal out with somebody online, content creator, to promote this. and then they're making that trade line, but then they put it in there so it gets reported. And then as soon as it gets reported, then the person goes in there and deletes it. So then they don't get caught. Like it's a bad employee for some company as a data furnisher. For sure, I know that's what's going on. It's not a legitimate company by any means. So it may report for a couple of months, but then they're deleting it and stuff. Like it's not going to be continuous, There's a reason why they make you pay by Zelle or Cash App too, because there's no way you can get that money back either. There's things that you guys got to know to stay away from. But anyways, there's fraudsters out there.
Should I drop down? My camera's not going to work.
No, you can stay there. You don't need necessarily a camera. You outside behind the bricks.
Stare at a brick wall.
Yeah. So I'll get to you guys. I'll get to the questions here in a minute. I'll just cover this real quick and then stay tuned for tomorrow. And I will make a video basically of what I talked about tonight, but I'll break it into like 4 different parts and one of just this audit. But then, and this is actual one of my students that's here right now in the chat, but I'm going to blur out her like personal name because, that's of course understandable 100%, but anyways, so this quarterly payment trend, that's by far the most important. And then the combined payment trends and the continuous payment trends. So my point is with scores, don't focus on scores because anybody can do what I just told you guys about the starter vendors and getting those reported. And those don't mean nothing necessarily. It's fine as foundation, and I do recommend that. But that alone is not going to get you, you don't know how many times I hear people contacting me and say, I need to get $100,000 loan, no PG. And they have like either little or no revenue coming in on their business. They don't have very great personal credit. But then they're like, well, I got a 90 paydex score. And then some of them will even argue with me, and they're not even my student, and they'll argue with me and tell me, I don't know what I'm talking about or something, and tell me that they can go to a bank like Chase because they heard it from somebody else on YouTube, told them that there's plenty of traditional banks that only look at your business credit only. And I'm like, no, like there's no underwriters that are traditional, like Chase doesn't even look at your business credit, period. Like traditional banks don't even look at your business credit for like traditional lines and stuff. Now, if you're trying to get like $1 million loan from them for like, say, a construction loan or something, they may factor it in there. The banker might, individual banker might, your branch might factor it in maybe about 5% of the decision factor, but it's going to be factored in on your profit and loss statement, your tax returns, and your personal credit, and it's personally guaranteed 100%. So there's just people that think they know everything just because they heard somebody on YouTube say that, you can get this or get that, but then they can't show any proof of it. And then some people believe that nonsense and shenanigans. It's too much malarkey out there. So just like don't get caught up too much on scores, because if you do, you're going to be chasing this nonstop. And actually, when you get approved for actual good credit lines, say that gas cards, and you start using them, and if you focus on the scores, then you're going to call me and be like, you're going to freak out. Your score is going to be like 10 or 13 or something. You're going to not be happy with it because of the score. So mentally don't focus on the scores because it's just not good to do, period. The scores, like I said, do not necessarily matter at all. Okay. It's getting too bright in here, but yeah, the scores don't matter. They matter, but they don't. So the score that does matter more than the Intel score, because everybody wants to focus on like the PAYDEX score. And this is an experience version of the PAYDEX score. It goes from 0 to 100, same as PAYDEX 0 to 100. So you can see here, the average benchmark for other businesses in her industry is 49. She's at 13, but there's reasons for that. And it's not 100% because of her business credit that she has this particular score, because it's also being weighted against the industry, the category, the North America industry sector codes, and the sector industry codes. So there's two different, the NAC codes and SIC codes. They play a role into this score as well. And the area, the address of the location of the business plays a role into it. And their recommendations here of the key score factors, I've learned, and Experian knows this, don't put much weight into exactly what they're saying here, because sometimes you'll see like the key score factors that they list, like it'll be like two of them or two of the four are contradicting each other, you know? So don't put a whole lot of weight. I mean, you can a little bit as far as like a starting point, but some of it can be a little confusing because the number of active commercial accounts, well, that can be interpreted two different ways, because she has several commercial accounts, but they're not saying why. Like, and that if you're not like me and don't have the business credit background, you might be like, what's that mean? The number of actives, does that mean I have too many, or does that mean I have too few, or what, you know? So they're not very, they keep things very broad, you know? So, and then like balance of all commercial accounts, it's like they're just being so vague, you know? The number of accounts with high utilization and stuff, you know? So, I mean, these things do matter, but it's very vague. So to understand it, that's why I'm going to make that video tomorrow to explain more on super detailed about what each of these mean. And not just her report, but I'm actually going to show you guys 3 separate reports. And I'll show you like one of my reports, and then I'll show this one, and I'll show another one of my students, and I'll show a comparison of 3 separate ones. So like one of my businesses is like 17 years old, you know, for one of my other businesses. So it has so much history. So I'll show you guys like, you know, a very aged, and then one of my very new students that's just recently started in the last 3 months. And then this student. So you guys can see like and understand the differences, you know, because I can't really explain everything if I just talk about this student only, because not everything is listed here, you know. So, but in short, don't focus on this score. This is your Intel score. This is your business credit score. This is actually the Intel score. There's several scores that Experian has, but for you as the business owner, you can only see 3 of the 6 scores that they show underwriters. I can see the 6th one. I'm a data furnisher and an underwriter for my other companies, for one of my companies in particular. But even for my mentorship, we are a data furnisher for Equifax and Credit Safe. So we report the mentorship as a trade line as well, but as a service trade line. But anyways, if you guys just turning in regardless, or you've been staying here, I just need you guys to do me a favor real quick, just to show me some appreciation. Just please give the video a thumbs up. That's all I need you to do, because I think there's like 7 thumbs up right now, and there's been over 100 people coming and going in the past 4 hours. So please just give the video a thumbs up regardless. Even if you don't like my rambling, please give the video a thumbs up. Anyway, so this score, like I said, don't focus on. This is not so important. This is the important score, okay? This is your financial, pretty much all the bureaus have this, a score that's a financial stability, either a financial stability score or financial stability risk rating. Like Dun & Bradstreet calls it, not necessarily a risk rating, but a score. And then Equifax calls it a signal score, a financial signal score. So, but they all have pretty much the same type of scores, because they're all competitors, right? So this score is by far more important than the Intel score, because the Intel score is not 100% just about your own personal business credit. It's actually combining some things that you have no control over. Like if you're in a high risk industry, like say trucking or something, or you have the word real estate or investment in your name, then that could be used against you just because of the industry. And that's also similar true also for the financial stability risk rating, but it's even more so true for your Intel score. So that's why I said don't focus on that score as much as you should be focusing on your financial stability risk rating. This score is by far what underwriters are going to be weighting, and they give more weight at this than the Intel score. Okay. And there's so many factors for the financial stability risk rating that I can't go into in this live stream. If I do, then this will be a 6-hour live stream. So I'm just going to touch on a little bit of each of this. So this live will be over soon, so I can answer all you guys' questions, because that's going to take me some time. But I'm going to speed through this real quick. And then you guys make sure you subscribe and hit all notifications turned on so you guys get notified for tomorrow. I'll have that video uploaded. I'll record it probably in the next couple of hours or so. I'll record it and show 3 different reports and show you guys like how you should have your Experian Business Credit profile look and how it should be optimized, so you guys can compare it and see my business credit. For my business, it's like 17, 18 years old. For my law firm marketing business, and then you guys can kind of compare and see. I'll have everything real structured for you guys to see. So anyways, so bottom line, this is score to focus on the most. And I don't want to say focus on scores at all. Like, don't have that be your primary drive. Your primary drive should be your rich filmographic data, which I'll touch on that on the other video. I can't show you on here because it has our personal information and I don't want to put that out there. So just wait until tomorrow, make sure all notifications are turned on, and then you'll be able to see that. But anyways, the rich filmographic data does play a big role into your financial stability risk rating and your Intel score, but it plays a bigger rating into 2 other scores that are recommended weight scores that are given to only the underwriters, and not all underwriters will see all 6 scores. It depends on what contract that they have set up with Experian, because to pull business credit, say you do a Lowe's and it's Synchrony, they're checking your Experian Business Credit or the ConocoPhillips gas card. They have different price It could be anywhere from like $3 to $9, depending if they want to see all 6 of the Experian scores, or if they only want to see the financial stability risk rating or the Intel score. So, but one score that's for sure that all the underwriters will see is this financial stability risk rating. And then right next to the stability risk rating, you'll see a recommended. You don't see it as the business owner, but the underwriter is given a recommended credit limit, the same as like on, I'll show you guys in a minute. Same as on Dun & Bradstreet and Equifax on there. My new portal actually has that integrated in there. Will show what your recommended credit limit is likely, because it's using a combination of all of your business credit reports combined, and then my knowledge database. And then I set certain rules and dependencies in place, and my own I have architect that I've actually filed a patent on for the APIs. So it's basically my algorithm and score logic. And that score logic is basically taking all this data combined along with Plaid data and coming up with a recommended credit limit based on all of the factors. And it should be in line exactly. I would say, I don't want to say exactly, but if Dun & Bradstreet is telling, say, Dell or WebBank, they're telling the underwriter, ABC Plumbing should have a recommended credit limit of 80,000, and then Experian says 74,000, and then say Credit Safe says 90,000. Well, my system is going to be closer in between what Equifax and Experian, closer to that, because Credit Safe, their recommended can sometimes be enormous, and it's like, yeah, right, like, oh, this business is fairly new and it's having a recommended credit limit of like $1.2 million, and then meanwhile a well-established business has a recommended credit limit of $14,000. I see it all the time. So like things like that with Credit Safe, it's not really advisable to be trusting that. But no, ignore Credit Safe, because Credit Safe is very important, especially for auto loans and the no PG. Say you want to do car rentals or Toro, even some commercial real estate. So it's just, there's certain things that every bureau has, just like the fintech cards and platforms, like there's pros and cons to all, right? So that's why I built this new platform that not only made it where like I coded it with I'm trying to think how to explain it to you guys, for you guys to understand in like layman terms, like, because I don't want to talk too technical term for you guys, because I don't want to lose you guys. It's so late. So if you right click on any site, you can view source, and you can see here, right? So this is like maybe I shouldn't even, I'll just shut up about this because I don't want to lose you guys. I'll make a completely different video about that. But when you apply for credit lines, you can actually sometimes see, if you know the code, what to look for. You can actually see potentially through the encrypted data, you can see who they are probably checking, if LexisNexis has a data check, or if it's Credit Safe, because Credit Safe is rarely ever used for the actual financial decision, approval decision. It's usually just used for a secondary confirmation of the primary, say Experian or Equifax or Dun & Bradstreet as primary, and then the credit safe is usually a secondary layer for the risk exposure or to check the family linkage. But anyways, back to what I guess I was trying to get to is the new platform and portal. I made things where it's not so confusing for you guys. And again, the new platform can be used by not just by students. My students will get the first. They're like the beta testers, right? They're getting migrated over in April. And then after that, and have that feedback, we're probably shooting for the first batch of open to the public will be sometime in May, but it'll be actually limited. It won't just be for mentorship, but you can just sign up, hard to explain because I don't want to confuse you guys, but basically it's like all-in-one business credit platform. It's more expensive than NAV. The price point is probably going to be, I haven't decided exactly on the price point because I'm paying for the reports and we have to pay for the reports. Like I said, just one alone is $8,500 a month for the personal scores, and we get charged per poll. So prices will probably be anywhere from $99 a month to $199 a month, depending if you want all your scores, personal and business, or you just want your business scores and stuff. But then that also reports as a trade line to the bureaus. And then there's upgrades you could do as well, but it's going to show everything. So in a sense, we will kind of be like a competitor, I guess, of NAV, Fair Figure, but not necessarily because it's more about education. So they're Fair Figure, NAV, eCredible, they're reporting and it's just about a trade line. What getbusinesscredit.com, the new platform, is more about education, but having all your scores in one place, but then also having all the trade lines and telling you by using this AI and my AI knowledge database from 300 plus of my videos, all of that combined, and then analyzing. The best way I can describe it is it's going to be the very first and only business credit intelligence platform. That's the only way I can kind of, I guess, put it into one thing is all-in-one business credit intelligence platform that analyzes all the metrics of business credit of all the bureaus combined, and not just the business credit bureaus, but your Plaid business data, banking data, as well as secondary bureaus like, say, Ansonia, PayNet. And then also it analyzes your social signals because that's a big part. So it's going to look at your web citations. If you're listed with Better Business Bureau, if you're listed with Merchant Circle, are you listed with Manta? Are you listed with the U.S. Chamber of Commerce? Google Local, Google My Business. So all these things do matter, and they're very important, much more than what people think, especially to the underwriters. So, and having a actual nice looking website does matter with the underwriters. So anything no PG, if you think you're going to be able to get approved and have a ridiculous looking Fiverr junky website, or a web builder website that's like very tacky looking and no like information on your website that's actually like legitimate looking and stuff, think you want to look 10 times bigger than you are, right? So like the new platform, doesn't just look at the data, but I have image coding in there. So I have an image analyzer that actually analyzes visually your business website, abcplumbing.com or whatever it is. It will analyze that too and give recommendations like, hey, Josh AI suggests you to add the phone number at the top right of your website because it lacks that. Or your footer of the bottom of the website is called the footer. So the footer, it needs to have clear your business address. And then if you're using a certain type of address and you're using, like I say, a pound symbol for the suite number, it's going to tell you remove that. It's so detailed, you guys. But it's detailed, but it makes it so simplified, so like everything I've been explaining and what makes people watch business credit content and make you feel lost and everything, that's exactly why I've been building this for a year, almost a year and a half now. Been building this platform to take all the confusion out, almost to the point when we launch this to the public fully, there won't be much need anymore. I solved the actual issue for people. It tells you exactly what you need to do. This is different than the mentorship. This is 100% different. This is a different platform. It's on getbusinesscredit.com. But you can upgrade to, say, a course and mentorship if you choose to do so. But it's just the only AI business credit intelligence tool that I know that exists. There's none out there like this. And then it has my brain basically embedded into it. So you're getting that customized device and stuff. And it's, for me, it's cheap too. Even if we charge, like I said, I haven't set the exact price yet, but even if we just charged, say, $199 a month, you can literally ask it any questions and it's going to give you customized results back based on what I would tell you likely in person or over the phone. And it's analyzing everything. It's like anybody can go on ChatGPT or Gemini and ask it things and show it your business credit report. And it's going to give you some information that may be or may not be helpful. But it's definitely not going to be able to give you the level that my trained AI Credit Josh model will give you, because regular AI is going to just give you the same thing. Like if all 20 of you guys got on ChatGPT right now and asked the same exact question, it's all going to tell you the same exact thing or very similar, right? But then mine, and you go and ask it that same question, it's going to give you a different answer. Why it is? Because it already has my trained database of over 270 videos that I've compiled of my past live and normal videos, and it's combined all that data with actual case studies and actual denial letters, approval letters, and not just from mine, but so many of my students, like over 100 different client portal accounts. I've exported and imported that data into the AI model. So it literally is analyzed the likelihood and predicts what you can probably get approved for based on past data from each of these underwriters and actual real life outcomes. That's all I want to say, because if I say too much, then I know some competitors out there will get trying to steal my ideas and stuff. And they're no longer ideas because it's already done. Like the system is already built. It's just the final tweaks right now. And there's some compliance checks that we're finalizing with the law firm that I hired to make sure that because it's credit and finances and stuff, everything has to have, disclaimers, and we just need to make sure that everything is right. So the FTC, everybody's happy, the SEC, So anyways, I'll go over that here in a minute and then get to your questions. But this is what I wanted to basically cover. So your financial stability risk rating, that's the most important in my personal opinion between the two scores. It goes from 1 to 5, 5 being the worst, 1 being the best. So this student is 1, it's great. You can't ask for better than that. And I will break this down. Where's it at here? Yeah. So this is like my audit advice that I gave her, and I can show you guys this later, but I go through and based on what the report is, came up with some data that I don't want to show too much of that because it's private, but I'll show examples though tomorrow anyways. But that's what I will do from time to time with my mentorship students. I will give you some feedback. I don't give that very frequently because I just give you the tasks every week for you to do, depending on what you're trying to accomplish. But anyways, so this is not directly Experian. This is your small business financial exchange score rating. Same thing as your Experian financial stability risk rating, but this is through the small business financial exchange. So small business financial exchange is not necessarily a business credit bureau. You cannot go directly to the small business financial exchange and pull your report with them. It's like a nonprofit organization that is actually owned by like a handful of the major financial underwriters, such as say American Express, Bank of America. The list goes on and on. It's more of like a co-op, almost like an early warning signal. The banks are competitors, right? But they also are trying to look out for each other, so they don't have as much risk exposure. So this is one way they are able to do it. So if you have, say, American Express Business Platinum card, or like what you call the Blue Business Cash, pretty much all of American Express cards will report on the Small Business Financial Exchange. Sometimes they don't report right away. Sometimes they take 3 months of reporting before it gets adapted into Dun & Bradstreet, Small Business Financial Exchange data, or Experian, or in any of the 4 bureaus, is what I guess I'm trying to say. Just because something reports to the Small Business Financial Exchange doesn't necessarily mean that Experian will include it. It's all completely optional. So this student could have basically, I'll show you guys here. So under this student, the Small Business Financial Exchange, there's 4 accounts, right? So these 4 accounts, they're Small Business Financial Exchange trades. You could probably go, I don't want to say it's guaranteed, but you could go on, you say if you have the premium Dun & Bradstreet Signal account that shows full data and stuff, if it's expensive, more than even Experian, it's not worth it, so don't go do it. But if you did have that, you would see these same trades, Small Business Financial Exchange trades. But there's a possibility this student could have 5 or 6 instead of 4. And likelihood is probably that's the case. So Experian is out of all business credit bureaus, they're the most strict when it comes to their data. That's also why all the major banks and underwriters use them. That's also why they're the most expensive for underwriters. you can pull unlimited reports with Credit Safe for like $6,000 a year. Dun & Bradstreet, you can do that for, I think in the ballpark of like $18,000 to $20,000 a year. You can pull near unlimited reports. Same with like Equifax is around that ballpark. But then to pull like Experian, it's there. It's gets expensive, and you're paying more of a per pull report as well, and per line item and stuff. So, and Experian can charge that much because their data is like so strong, meaning it's much harder to manipulate Experian Business Credit Report than any other bureau. Like you can self-report on Dun & Bradstreet, and it's not hard to self-report a, I would say, fake trade line if you really, you know, got your buddies together or whatever. You could potentially very easily self-report. That's why they got in trouble, basically, because it was people running and selling on Facebook, and I was one of the whistleblowers and reported this like ring that was happening during COVID and stuff, because some of my students back then, they're getting taken advantage of and given bad information. And they're like, yeah, but I got good business credit now because I paid a couple $100 and now I got these trade lines. And it's like, yeah, you got fake trade lines. And then now your company's permanently banned. Like that's what happens with like, if you do bad things with business credit, like fraudulent things, there's no Fair Credit Reporting Act. It's not federally regulated. So if Dun & Bradstreet or Experian feels you're doing something fraudulent, your whole business credit report will actually be active, but it won't show this data. It's actually going to say and warn the underwriter that you're involved in fraud. We don't have enough to prove it to do legal action, but we're warning you that you as the underwriter should not even extend anything to this person or this business, and it should be nothing but prepaid if you decide to do business with them. So on the Experian side, even to become a data furnisher, I'm endorsed by them, but I can't even be a data furnisher with them. Not because they don't trust me or anything, but it's because I don't meet their requirements. I don't have 250 active students and stuff, But we will be a data furnisher with the new system. And once we fully launch that for open to the public. But that's, like I said, separate business than what I currently have for the one-on-one business credit mentorship. So like, I don't take on more than like 60 students at most at any given one period of time, but to become a data furnisher, you need at least a minimum of 250 active accounts, customers, and they have to be in the last 6 months. So, it's impossible for me to be able to take on 250. I mean, I could take on 250 students at one time, but I wouldn't be able to, give them custom advice and results, even with Jason, even it would be impossible, so I want to do things more on a custom. That's why I don't take on too much, but anyways, so this is what's affecting this score of 5 is these accounts. So this commercial card is fine. There's no issue here. It's $50. This one is no issue, no problem. Okay. That's not affecting the bad score and I don't really want to call it bad, but just to simplify it, derogatory or whatever. This one, there's no bearing on that. If anything, this is actually helping, because it's just one more account. But then this one is an issue. I don't know what account this is. I will check your trade line. And you guys, just so you know, I'm explaining to her, this is one of my students. She's in here live. But anyways, I'll talk to you about this tomorrow during our phone consultation status call. But anyways, I'll look at your notes, what you replied earlier. I haven't got a chance to look at that, but whatever account this is, this needs to get addressed. So up to 30 DBT, for everybody to know this, you don't necessarily want this to happen, but it's not showing red. So it's not bad, but it's not great either. So consider this like if you have a payment of a card that is due on the 1st of every month or whatever, right? That's your statement closing date if it's a credit card or whatever. And typically with Small Business Financial Exchange, it's usually always going to be like some type of either store card or credit card or fuel card. It's going to be one of those. And it could be even a secured card as well, depending. But anyways, if the statement is due, closing is say on the 27th and your due date is the 1st of every month, and then see they're not showing the exact report date like on the payment experiences. You can see like they show here, but the next one is the one I can actually show you on more than anything. So if you look here, like commercial card and last 4 digits, it's 2649. Well, you can see here, this payment experience says warehouse, it's 2649. So this is a financial trade that's being reported directly by the underwriter to Experian. Okay. They have an account as a data furnisher and they're reporting directly. Okay. But then you see here, it's the same one, but it doesn't say what supplier category is warehouse here, but then here it's commercial card, so without knowing off checking what she had to do, I'll check, shortly. I'm just looking at comments here. You guys are rock stars. I think this is probably officially my second longest live ever. Still like over between Facebook and YouTube, we got over 25 people still here. It's crazy. You guys give the video a thumbs up. I'm almost done though. And then I'll get to you guys' questions. But the commercial card, you can see they're both the same. This is warehouse and this is commercial, but they have the last 4 digits of the account number. Sometimes that can be the last 4 digits of the card number. It could be on your American Express. It could be that number. And then sometimes it could be like the combination of something in the middle. I've seen it. It's not always the last 4 digits because it does say on Experian Business Advantage, you have to have the Business Advantage account. It's $199 a year, but if you use my link, it's only $99 a year. But you don't need to buy the upgraded things either. Those are waste, and valuation reports are pointless. And if you have a new business, it's also pointless because you don't need to buy this unless you already have a business credit established. But anyways, you're only going to see this last 4 digits with the Advantage account. You're never going to see on business credit reports who the underwriter is. The underwriters can't see it. You as the business owner can't see it. The only people that see it is the bureau. The Bureau does not share positive or negative trade data to anybody, period. They keep it themselves only. So like on personal credit, you can actually see, like it'll show, like the credit card will say Chase or, Capital One Bank or, Web Bank. But on business credit, you're never going to see the name of what the trade line or credit line or Underwriter is at all. You're never going to see that. So they just use supplier categories and account types, and they say last 4 digits of account number, but it's not necessarily last 4 digits. It could be their own internal account numbers that they have assigned by their being a data furnisher. It could be part of their Mass 90 or Sage 500 accounting system that's auto assigning, or it could be, say, an invoice number. There's so many variables and stuff. So I basically don't want you to 100% think that it's always going to be the last 4 digits of your account number. Like for this one, it's -AU3. This account is more than likely a gas card, I think. Yeah, I think this is a gas card. Because gas cards are typically have dashes in them. I mean, not dashes, but characters like letters. So just always kind of keep that in mind. And then this one is probably not an actual card number, the 0002. That's probably some type of, it may be a combination, but I'm just guessing at this point because I asked her for data. Okay, she's here. All right, good. Okay. I didn't think you were still here. Wow, you've been here so long, and sorry kept you awake. AU3 is BP gas card. Yeah, so I figured that. So it's pretty much always going to be like that uses like letters like that is always going to be if it's under the financial exchange or payment financial trades. Letters are always 90+% of the time. It's always going to be a Fleet Core card. So it could be any one of, they have a half a dozen different ones, but it'll be one of these two, like she says. What she has, it's going to be one of those two. Okay. So it's either the BP MasterCard or it's going to be the fuel only card, one of the two. But I think it's the MasterCard, if I'm not mistaken. So yeah. And what's your limit with that? If you're still here, what's your limit with the BP AU3? So I'm going to talk to you about this on our call tomorrow or whatever, but it's actually a good thing that your more derogatory one is, because this is what you don't want to see. You don't want to see the yellow and you don't want to see the red. Like you really don't even want to see up to 30 days, but like even Walmart, if we pulled their business credit, they're going to have a lot of up to 30 days. So it's not counted the same as like a 30-day late on personal credit. Like that's very damaging. This is not so damaging. It's ideally you don't want to be up to 30 days DBT. You don't even want to be there, but it happens. So it's not as bad as like you think. But the 31 to 60 DBT, that's where things start getting a little bit of a problem. And you can kind of counter react and neutralize if you only have a one or two like this. And that's, you need to get other accounts. And one of the easiest ways is like American Express. Like you don't necessarily have to use these cards. You can just get these different financial trades, and then that will help neutralize them so it's not standing out like a sore thumb to underwriters. But good thing that it's actually Fleet Corp, because Fleet Corp is, they're great when it comes to giving you credit line approvals. And if you know how to use them and leverage them, it's great. But them as a company, Fleet Corp, their customer service is by far the worst customer service that you could ever deal with business credit lines or cards or anything. And their sales rep and customer service and accounting executives are very unprofessional. And, like I've had account executives like call me and I can hear like dogs barking and like yelling at kids and this stuff in the background. It's like, wait, you work for this like company and you're publicly traded Fortune 500 company, and like it's very unprofessional. They're not, for what they are, they're not a good company, unfortunately. But they're also a company that, as long as you stay on top of things with them, even their systems are kind of outdated and stuff. The only reason I like them is not anything to do with them as like a company and stuff, but they do give credit lines, and their credit lines, I think why that's the only plus I would say about them is because their algorithm and how they underwrite is still kind of outdated. They're using more outdated information, or their risk exposure is kind of outdated. So whenever they update things, then I probably won't be so favorable and won't recommend any of their cards. But until that happens, I would still recommend them because they do report, as you can see, directly to Experian there and to Small Business Financial Exchange. So that's good. But when there's a problem, like say a fee, and I have a feeling that's what this $75 is some type of late fee, or it's a card fee that they didn't tell you about and they're famous about that, or they'll issue the cards, but they don't make it clear that they're charging you. Like it's different for everybody. So, like literally I have two students, I have Fuelman, and one got charged nothing, and another one got charged $13 a card, and another one got a $49 charge, even if they don't use it. So trust me, like there's they have very bad ratings. It's like one of those type that it's like because they report and they can be a game changer and get you like I said, I bought 3 houses using their gas cards, So, I didn't need to do that, but I've had students literally take their gas cards and their pre-revenue, and without those gas cards, it would be very hard because they don't have good personal credit. It would be very hard for them to be where they're at now. So like I have I have at least 4 students that they're not recent students. This was back in like 2021 to like 2023. Like they had all the cards stacked against them. Like nothing's going their way. But they joined Mentorship, and then we got them the gas cards and stuff, and they weren't huge limits starting off, but, they were consistent, and, we got the limits increased. But then over 6 to 12 months, they were able to turn, $2,500 approval into 4 or 5 different gas cards along with the Corpay card and have 6-figure available to them. So that alone was where Robert's student I'm talking about in particular. And I think he might be watching even, or was, but he was able to. Soon I'm going to have him on. He actually said he wanted to come on and do like a testimonial. You guys notice I don't like having testimonials and stuff because I don't like to make it like I'm trying to sell people or something. I just find it kind of, as my daughter would call it, cringy or whatever. But I guess I should just have people on and let them speak like during a live stream or something, come up or whatever. Maybe we'll start doing that. Not just students, but if anybody wants to come up, maybe we'll do like a live stream block webinar party or something. Because my new StreamYard account, I did have a basic business one, but I just upgraded to like the $100 a month one where I think it allows up to 100 people to come up if you want to on the camera or whatever. So maybe we'll start doing that or do like a webinar. And you guys comment if you guys want me to do like some type of like exclusive webinar where you guys can come up and stuff. Either if you guys are watching a replay, this is live, but if you're watching the replay, which I'm sure a lot of people will, because like the last one, it was like 250 views in like 12 hours after I did the live. But comment if you guys are interested in the live chat or in the normal replay chat. If you guys are interested in like a interactive webinar, if so, I'll set that up for like in the next couple of days, like a registration form for you guys to register if you guys are interested in like a exclusive private only webinar, where it'll be like limited spots and then you guys can come up. You don't necessarily have to show your face or anything. You can just be on microphone or whatever, or use your phone or whatever, but comment if you are interested because, that might be better for some one-on-one help too. I just get caught up sometimes just all over the place rambling, so it might be better to do like a webinar, like a private webinar or something limited to like say 30 or 50 people. And like I said, if we did that, not necessarily, you don't have to be one of my students, but my students obviously would be able to be there at no cost or whatever. But okay, you said that it is closed. Okay. No, I'm not talking about Fuelman. I mean, Fuelman's one of the cards. I'm talking about FleetCor. FleetCor underwrites, like, depending on what cards you're counting, they underwrite 6 to 12 different brand cards. That's BP Business Solution, Universal Premium, Fuelman, Casey's, Arco, Corpay, Universal Premium, 7-Eleven, Speedway Superfleet. So I think there's one more that I'm missing. I think I have it around here somewhere. Like I said, I have way too many cards, like stacks here. If you guys could only see, everywhere I look, there's cards. But anyways, the FleetCor as a company as a whole, they suck. But the customer service, account reps, everything about them sucks. The only thing good about them is they can be a game changer, life changing for some people if you do it right with their credit lines and strategically leverage them to your benefit. You just have to be on top, like super zone focused for your accounts with them because they are very sneaky about different charges and stuff. It could be like a random charge, like $13 or something. It's a $13 card fee or something. And then if that didn't get paid and you don't have auto pay set up, because they purposely don't have auto pay, have you set up auto pay like others, because they want you to charge, they want to charge you the like late fees. They're hoping that like you don't pay on time, because they do these sneaky charges in their card fees, and there's no set fee that they publicly put out there. It changes and stuff, you know, and they confuse you on purpose because they have like 3 different Fuel Man cards. They're all the same thing, but they give you different rates. One's a MasterCard, one's for only, say, diesel, one's for only a certain network. So they do things purposely to confuse you, but they're very sleazy about it. I guess that's the word about, I should say. Like they're on the stock market, and I actually used to have a lot of stocks invested into them, well over like $30,000, because they bought Corpay. And that was a company out of Finland. This was out of Finland before. And FleetCor bought it and brought it to the U.S. as far as the technology goes. And I was actually the first exclusive sponsor, and I pretty much helped launch Corpay. If you go back, you'll see I had a 6-month exclusive contract set up with them. Justin, the president of Corpay as well, which is a subsidiary of FleetCor, but it's still reported the same way as all their other cards, but it can be used for anything, not just gas. But even like till now, they still owe me so much money. That's why I stopped promoting them directly. I really don't want to even promote them now. But I do have like my students, but you see, I don't make too many videos directly about them. Like, go get this card. I don't necessarily do that much anymore because they still owe me thousands of dollars. And there's a couple people out there like that. ADB is the same way. Like ADB owes me like over $50,000. And so I have a couple legal suits that my lawyer is dealing with. It's just like they don't want to pay out people that like send them business, you know, but then they give it to me, like they offer it. Why are you going to offer it if then you're shocked on how much approvals I send you? Like they don't expect I can send them approvals. Well, no other channel on YouTube has high quality business credit traffic. There's other channels that have a lot of traffic, right? But not good traffic, meaning like Credit Plug or others, they could have a lot of views, but 99% of the people that apply for whatever card he's promoting or whatever is going to get an instant denial. At least with mine, maybe lower views, but typically 70% of people that apply using my link end up getting approved for whatever product it is, you know? So anyways, it just helps support the channel. But we will talk about this though, Natalie. But the only good thing about this is going to be easier for us to get removed. This is easier to get removed dispute, especially since it's closed and we can deal directly with them about that. It's still going to be a little bit of headache, but we can actually dispute that. So without seeing your responses in the questionnaire that I sent you earlier, I feel a little bit better about this than I did not knowing. So with it being FleetCor and they're such a sleazy company. Yeah, it's a pain in the butt to deal with, but at the same time, this would be easier to get removed than if it was, say, Wex or somebody else. But this is old from 2023, so this was already here before. But how we can actually get it off is, see how it says like 11/29/23. It's contract, just the terms. Credit card, it's the same account, right? But then this is inaccuracy. So it's showing zero balance on here under their direct financial trades, right? And they're actually still reporting it right here as it's active, and you said it's closed. So if it's the activity date's 2023, why are they reporting it just last month? And they're reporting it as it's opened, but then it's zero. The payment terms are contract basis, but then on the Small Business Financial Exchange. So we would dispute with Small Business Financial Exchange first and give them a screenshot of this and tell them to remove it immediately, or else we have the intent to seek small claims court action for damages. So that's one I don't think it's going to be very hard for us to get to removed. But what was you said the other one's Divi, right? 002. That's not a problem, but let's get that. We'll talk about that tomorrow, but let's not have that happen. It's still open though, right? Okay. All right. Yeah. Yeah. Okay. So I was just reading your comments there. Okay. And what is this? If you don't mind telling me, what's the 2649, the 6,000? I mean, there's no problem with it. It's fine. And you guys, this is exactly what you want to see. Is like, this is a good though, as much as it, like on personal credit, people think it's bad. Like on personal credit, yes, having high balances hurts your score, and that does matter big time with FICO. On Small Business Financial Exchange and on business credit in general, your scores will still go down. And I think this is one of the primary drivers that's affecting your Intel score. Okay. What's affecting your financial stability risk rating is these two more than anything. And this in particular, the BP one is actually probably the most damaging for your scores. But like this, like just balances in general, especially their high balances, they affect scores so much. So that's why I don't want you guys to focus too much on scores. As long as you don't have like these, up to 30 days DBT or 31, 61, or 90, that's what you want to avoid. But if you're actively using the trade lines or the credit lines and you have high balances, it's fine. Don't worry about the scores. Even if the scores are showing all bad, all red, it's okay. Like I've got very big, like Divi gave me 150,000, which is now Bill, but they gave that to me when my Intel score was like 34 and my financial stability risk rating, I think, was 3 or 4. So like the scores aren't like what you should focus on. It's more about that actual line data and the continuous payment trends and trades. Okay, it's Sam's Club. Okay. All right. Yeah. So Sam's Club, is it the MasterCard one or is it the store card? But either or, it's fine. That's under synchrony. And when did you get approved for that? How long have you had that? And what's the limit? I guess I would just check what you told me, what you put in there. But anyways, okay, so just looking. That's the only thing I see it's wrong on here is this in particular, like that we need to get like taken care of because it's so old and it's contradicting because there's two different reports of the same account and one showing 0, the other one showing the that it's current, but then no balance, but then up to 30 and 60, 75. But then it's showing you that it's still open on here because they're still reporting. But then here it's showing it's closed. So, and there's actually no closed. It should say closed. Like here, you're going to see account closed on this one. You should see the account closed here, but it's not. So because of these inaccuracies, that works in our benefit. It's beneficial for us because if there's not these inaccuracies, then it's harder to get these things removed. But the single fact that they're still updating the reporting and there's no comments that the account's closed, that's enough for us to get it removed. Okay. All right. So your Sam's Club card is MasterCard since 2023. And that's probably no PG, I would say, right? Because it was 2023. And it wasn't until March of last year, 2025, is when they moved over to now personally guaranteeing required synchrony. Okay. So now, trade line experiences. These are your continuous trades. So this is going to be like your fair figure, NAV, basically non-financial trades. So like this is going to be packaging. That's going to be Uline. I'm 99% sure that's Uline. No, I'm actually, yeah, I'm 99% sure that's probably Uline, especially since there's 0 balance. And it's kind of like a trick I told people to do this, like that you can even get approved or get denied for their net 30 account. But if you do it the way that I said in like I've said it in like 10 different videos, you can, since like 2020, it's still like a glitch in their system. You can actually get declined for net 30 with Uline, but then they'll still report it as if it's an active account, but just shows 0. It doesn't help tremendously, but if you have a thin file, it definitely helps a little bit, you know. This is fair figure paper products. So make sure that you get this taken care of. Let's see here. Oh, yeah, wait a minute. Yeah, it's definitely fair figure because they changed their pricing and stuff. You need to get fair figure back to active so then I can see your Equifax better. And that's the one, net 30, or I should say business credit monitoring service. That's the one that I would say you should keep long-term, continuous, period. Like it's only, with my code, you can sign back up, I think, and still get the discount, $25 or something. So it saves like $10 off. But that's the one that I recommend that is worth keeping long-term. Like NAV, that's optional. At your point right now, I mean, we'll talk about it tomorrow because this communications one is the one that I think we already spoke about this before. And I think you said this is Verizon or AT&T. I think if I remember correctly, you said it's Verizon. But this one can be a little bit tricky too. But this is exactly what you don't want to see. But the fact that it's only one is not as bad as if it's like a whole bunch, of course. Like if you had like 3 like this, I would say we'd be better off starting a brand new LLC. But I mean, I can say this is going to be like probably a 50-50 chance if this can be removed on first round disputes. It might take 2 or 3 rounds of the disputes, and it can't be challenged directly, typically with Verizon or AT&T, unfortunately. I mean, well, we could actually probably do a demand, do a scare tactic with them. We could draft like a scare tactic demand letter. It's worth a shot, but we need to do it snail mail, like registered mail, and do it all at once, because you doing disputes directly through a smart business fax right here. You can see business credit fax now. Like you can submit data dispute, right? But it's not super effective. Even on businesscreditfax.com, that's the free way to do it. But honestly, disputing like accounts that are derogatory, it's like better. It's rare that I see those outcome get addressed by doing an online dispute. But I mean, you can do them all at once. Like say you email business disputes at Experian.com and do their form submit dispute and registered mail, and you do all 3 like at the same day or the same week. You're going to have better chance for them to resolve it. But definitely there's hope for you to get this back on track. This one, Debbie Bill, I'm not so worried about that one. That's fine. Like I said, some things are going to be expected to be in, like, say, like up to 30 days DBT, days beyond terms. It's like, ideally, no, you don't want that, but it's not like the end of the world or anything. Now, if we're starting to have multiples of them in like the yellow and red and orange, then yeah, that's a different story. But this, I'm pretty confident we can get this removed altogether. The account will be completely removed. It won't even be here, I think, anymore. So that's fine there. And then yeah, so this is like the problem, it looks like to me too. See how these are 23 and it's 0 balance. You only have 2 active trade lines right now. That's one of your big reasons why your Intel score is only 13. Is because you have this derogatory, but then you only have 2 continuous active trades that are recent. And even this isn't even that recent, it's December is the last activity date. So we do need to get you back some active, because you just don't have enough active ones to balance, to neutralize the derogatory ones. But anyways, this is not as bad as actually I thought, now that I'm looking at it more in detail and knowing which accounts are which. So it's able to be, I think, fixed. I don't think it's going to affect your, this is not going to be that big of a deal when it comes to affecting your chances for the auto loan, though, because they're not going to look at this. But that's also why I want you to have that fair figure premium, because I need to look at the Equifax data that is public, that the business owner is able to pull. I can pull your Equifax within my back end because I'm a data furnisher. However, my report data is different than what you're able to see on fair figure. So that's why I want to compare it. And plus, you need to have that trade line anyways active. Yeah, I want to compare that because let me see here. See, it's like they're saying this is where experience sometimes can contradict themselves. How it says like 1% DBT, and then the industry current is at 95 for that month or whatever, right? And then saying 99%, and then industry is 3, right? That's like the industry standard is like, say like you're better than the industry standard, but it's actually showing 0, but then it shows 1%. But how can it be 1% when that doesn't even make sense? For it to be 1%, you would have to have like 90 or 85 other trade lines for it to be 1%. So that's where it can be confusing, and they purposely want to contradict themselves or confuse you. That's why also the new portal is going to break through all this. So it's not confusing, because they make more money on making people confused, because that's the way they can actually sell underwriters. Oh, like we can show you the industry DBT average and the industry current, it's like each of these column lines are ways that Experian makes money, and not just Experian, all the bureaus make more money, not to the business owner, but to the underwriter. That's how they sell. Like they're selling each of these individual column data to the bureau. I mean, to the underwriter, So that's one of the reasons why Fairfigure hasn't got Experian integrated yet into their system, even though they report to Experian. But to show the Experian, it's like Fairfigure would have to actually charge like double the price they're charging now for the monthly service if they show that. So they're trying to work it out, and I think they will work it out very soon. I don't know which one you said you don't know. You don't know why they are not reporting. Who are you talking about? You don't know who they are reporting. And Kylie Pets, this is a normal live. I guess it's not. It's been live for 5 hours. I think this might even be the longest live I've ever done. It is kind of a live, normal live in a sense, because I'm not just helping one person. I'm giving information. Even if I'm helping one of my students, it still applies to everybody. Like, this is business credit knowledge that you should still understand regardless of your certain situation. It's still, think of this like a business credit, like a college lecture or something. Still knowledge. Like if you're just coming in here and wanting to know how to get approved for a credit card real quick and stuff, like just the fancy, like, oh, get right to the point stuff, move along then, because that's not what I do. And you're not going to be successful with business credit if you're just trying to take shortcuts and stuff. I don't have all that fancy like clickbait stuff. There's a reason why my thumbnails don't have all that, like no social security number required and no PG. Everybody gets approved like other channels like Credit Plug and stuff does. Like, you're not going to see that with me. Yeah, but knowledge is power. The more knowledge you know about business credit, the more you can leverage it to your advantage. There's a reason why I have as much as I have, and I wouldn't even advise anybody to get as much as I have. But anyways, okay, let me get to the questions real quick. And Natalie, I will talk about this more privately. And I did not expect 5 hours live. This is insane, actually. And anybody that's watching right now, I'm going to probably have this ended in the next like 2 or 3 minutes, but just because I actually never expected this to go on this long. It's already 5 a.m. and I haven't even slept yet. And still have videos to record and stuff, and this is not even my main business. I have other businesses too that I got to deal with too. Like I said, I do this because I enjoy it. Let me see here. Again, if you guys are just here, it doesn't matter if you're here or not, but please double check, make sure that you hit all, subscribe for one if you're not already, and double check, because sometimes you'll hit subscribe and then you click it again or something and it unsubscribes you, or it turns off the notifications. You don't want to miss later today's notifications, because later today, I'm not going to be doing all the rambling like I did for 5 hours. I'm going to get right to the point, and you're going to understand things a lot easier because I'm going to put it into a PDF. And now that I know how to do this zoom in, you can see it better and everything. All right, so will this be recorded? Yes, so you can replay it. I don't know how many people are going to replay the whole 5 hours, but it'll be available. But definitely make sure that you have the click when you hit the subscribe settings, and then it will be like a drop down, and it will say like, it'll give you the bell option. You select either just normal subscribe, or the drop down will say all notifications. So you want to do all notifications, make sure that's on, because if not, YouTube won't tell you I put out new videos. Like, they just choose to. Like, I have over 40,000 subscribers, but they don't let you guys know unless you hit all notifications. That's the unfortunate part about YouTube. So make sure all notifications are on. And then please make sure you hit the thumbs up if you haven't already for this live, especially with it being a 5 hour live. Okay, let me see here. These are comments from like 5 hours ago. Nice seeing you too. You guys, it's shocking that I have over 15 people here live right now, and it's 5 hours and it's 5 a.m. It's 5 p.m. here. It's 5 a.m. there, Eastern Standard Time. Do you have a date for the new website? Well, prices change. Yes, well, it depends. I don't know what prices, like for my mentorship. Yeah, prices are definitely going to be going up once everything launches. The new portal depends. There's 3 different products. There's a business credit course, there's the business credit platform, and then there's the business credit AI and client portal. So each of those are different products, and they have different launch dates. But my current students, they get access to them first, and some features will be like kind of drip fed out, because I don't want to release everything all at once, because I don't want to over confuse. So I'll probably do like webinar demos, every week or every couple weeks about each of the different features as I release them. But the core foundation and platform and stuff, portal will be the first to be launched live for current students to be migrated over. Only the students that are current and up to date, either if they did a one-time payment and they're active, or the students that if they are on a payment plan, as long as they're current on their payment plan. If you're not current on your payment plan, then it's not like I have a choice over it. It's just the system. It does it in order of the payments, the current portal. So that current portal, the exporting migration, it'll be in the payment order of active accounts, right? Because I have several students that kind of went missing, but they still owe like thousands of dollars. But then they still would do tasks and they still log in, but then they don't respond. So those accounts will be getting closed anyway. So, but anyways, let me see here. Okay, Wealthcom, how much credit line do you have open now? I stopped counting. I mean, I don't want to sound like a jerk or anything or arrogant, but I honestly depends if you count like my no preset spending limit. I mean, like my Centurion Black card. I mean, I've never charged anything more than I think the highest purchase I did with this card was like 120,000 at one swipe. And that was for my law firm clients, Google AdWords monthly ad spend. So, but I mean, if you combined everything that I actually probably still have active, because some cards I closed, like the Wex card, I already closed that. I have a full-time employee that just handles all my spreadsheet of all my accounts. That's the only way I can keep track of them. And some actually closed because of not using them, and I don't care if they closed. Like the BP, my BP MasterCard's active, but this one is not active anymore because it's just a store card only, not a MasterCard. But then, like my row, that's my main. And then my Charles Schwab. So another thing that I need to separate that and do it on the personal side, but the Charles Schwab is actually like a hidden gem really with American Express. And if you're using points, even with business, like you can have your American Express Plum card, it's an underrated card. So I have like the Marriott Bonvoy, American Express, and then the Plum card, you got 60 days to pay. That one you could actually leverage too. And all this you get points for, right? The membership rewards points. And then you convert those over to your Charles Schwab. If you have Charles Schwab, you can convert those over with your Charles Schwab, your platinum account, right? And then literally you can buy the trending stocks, which is like a lot of AI technology, like resource ones, like say tech, NVIDIA, chips, anything like that. That's definitely going to go up. I'm not a financial advisor, but it's not going down at all. So you convert that, even if it's only a couple $100 worth of points, right? Membership rewards points, only a couple $100. I can almost guarantee you that you'll double or triple in a year from now. Like it's just going to go up. But don't hold my word to that. I'm telling you, I made 19,000 in 1 year just from investing in Intel and NVIDIA. But then, the Sky Miles, the Green Card, Gold Business, Platinum Business, and then my, what do you call it? The blue cashback one. Yeah. I'm getting sidetracked now. I'm starting to get tired. My brain starting to shut off, I guess, maybe. But anyways, my point is you can get whatever you want. Answer your question, how much credit line do I have open? Like, it depends if you're counting personal guarantee or no PG. No PG, I would say it's maybe around like one, because some accounts were closed because I don't use them, and some are like, say, open-end merchant, like merchant cash advance lines of credit, like a revolving line. That's no PG, maybe like 1.5 to 1.7. It could be much more than that. I do know it was like a couple of years ago, combined with no PG and PG, I had around, like, it took me about 14 or 16 months when I first started the channel. I think 2.4 or 2.6 million. But that doesn't count the American Express at all, because American Express, most of my cards are no preset spending limit, you know? So sky can kind of be the limit with those cards, you know, like just a black card alone. I mean, I could probably swipe $1 million for, say, I don't know, some exotic car or something, and it would probably go through. Like, I'm pretty confident it would go through, you know? So I protect my American Express relationship, though, because, like, no matter what, like, if I needed to pull 6 or 7 figures of liquid capital quickly, I could do that with all my American Express accounts. You know, I have like 12 cards with American Express combined, you know? So hopefully I never have to use them as far as emergency goes or anything like that. But like I said, it's always good to have more credit than you actually need, either personal or business, as long as you do it strategically. But you always want to not have too much on the personal, because you want to put it on the business if all possibility. Even if it's personal guarantee, you still want to, like, I wouldn't suggest to do like what I did before when it comes to American Express. I think I have 12 or 13 if you count the black card, right? And I think I have 5 or 4. Yeah, I think 4 of those. Let me see. Now it's 5. So I have like the Hilton. Yeah, so I have like the Hilton Aspire or Honors, and then the Delta Sky Miles, and then the personal green card, personal gold, and the platinum. Yeah. So that's 5 that I have on American Express for personal. If I had to redo it, I would probably only have 2 personal American Express, because they're reporting on personal credit, right? And it's not a bad thing, but if I had to use I got to keep all my utilization always at like no more than 3% on all of my cards. Navy Federal, First Tech, Alliant, all of my cards. I always keep 0 to 3%, but I found 3% being the sweet spot to keep my FICO score around 814 to 809, depending on what bureau it is, you know. But if I have everything at 0, it seems to put me, like, you're splitting hairs here, but it tends to drop me down between 799 and 804. But if I use around 2 to 3% on a couple of accounts, then as far as like the statement balance dates posting, that seems to be like the most optimized. It hit me around 809 to 814. And there's some things I can't go any further just because on the personal side, there's nothing more I can do besides my age, you know. It's to get to 850, it's just going to take age, you know. And I'm still not super old yet, obviously. But anyways, why I would not have got so many had I really realized it. Like I just kind of got trigger happy, I guess, as far as like app trigger happy. Like I've applied for like American Express. I think I got like three cards on one phone call with American Express. So I'm like, okay, I want to apply for the green, the plum, and the gold right now. And then the lady just puts them through my account rep. That's the other thing too. When you have multiple American Express cards, you'll get assigned an account executive, and you can call her like mine. She works out of her house. I have video calls with her, not as often as I used to, but still talk to her. But yeah, even when my daughter passed away, they sent over the real nice white rose spread for her casket. But anyways, American Express is a relationship that like these are just my American Express cards. You want to protect that relationship so much because, you know, if somehow I lost all my net worth overnight or something, that could be a way to restart things or whatever, you know. I always like, I can sleep better at night knowing I have a plan B, C, D, E, F to Z. That's just the way I am. OCD and my ADHD and stuff. So, but I'm a hoarder when it comes to credit. So I don't suggest anybody to get even 50% of what I have. It's unnecessary. And try to have all the liability on the business. And even with American Express, why I say I wouldn't have so many on American Express on the personal side is why not have them on the business, because they're going to be reporting on your small business financial exchange trades and your payment experiences. You know, if I use my American Express, say Delta or Hilton Honors, it's not going to help my business credit at all. So that's why I would suggest for, and actually the only thing it can do is bring down my credit score because of, say, utilization. So that's the nice thing about business credit and American Express is they're not like Capital One, like the Capital One Green Spark card that reports on your personal, even though it's a business credit card. So that's why it's better to try to shift, even if you have these cards now or some of these, try to shift. And if you don't already have them, then get them. And if you need my advice, you can reach out. You have my number there. But just try to shift it and put even some of your personal liability onto the business. Shift it over if possible. You know, that's why I have several students even join Mentorship they want help with business credit, but they really want to shift their personal credit debt that they have high utilization, that they use personal credit cards to fund their business because they didn't understand business credit. So they used their high limit personal credit cards to fund their business investment or business products or whatever, inventory. And then they just been like borrowing from Paul to pay Peter, but it's still all on their own personal credit and stuff. They still have good credit, but their utilization's high, and that makes their score go down lower. So they would join the mentorship because they want help to try to consolidate that and move it over on the on the business side, because like one of my students, he joined a mentorship he had like $130,000 revolving between like 3 Chase and Wells Fargo cards. And he had good personal credit. The problem is he's revolving like 130,000, and he does like Amazon FBA and imports from China like a container load every couple months, but he's just constantly revolving it. So even with great credit, you're still going to be paying like 7% to 7 to 10%. If you're not in that introductory 0% APR, or that doesn't last forever. So I know when he joined the mentorship, this was about a year ago, I think, maybe it wasn't a year ago. I think in May will be 1 year, but he joined, and literally in the first 30 days, I saved him. Like, he paid for 1 year, which is not cheap for my mentorship, right? But he did the one-time payment. But he also saved close to $50,000 just by doing the mentorship, because we just strategically moved things around. I got him approvals between fintechs, and then opened his eyes to realize how to use different cards and use Melio and Plastique, and how to use bill pay, and over a year's time, like, he did a 1 year mentorship, but I only talked to him and dealt with him for like 4 months. He kind of went missing, but he was able to get like over 450,000 in a matter of like 90 days or so. Again, this isn't going to be like everybody can do this. I'm not saying that, but just what he was paying just to keep the personal cards revolving, those balances, like, it was worth it right away for him. Like, he saw value in it. Like, and he's somebody I didn't even have to sell. Like, he just like did a phone consultation with me, and it was like, after like 10 minutes, he's like, I already watched you. I don't need to hear anymore. I already know what I need to do. I'm like, okay, that's the easiest consultation call. And then I did the audit, and it's straightforward. Anyways, how much, if you count all the credit lines, I guess, if you count even American Express, the no preset spending limit, and I don't know if you're asking just my one business for the YouTube channel or all my businesses, but I would say close to probably $20 million if you totaled it all up. Like, if you combined it all, like, I would never use all that, of course, but American Express is a big part of that too, though, but if you just say like the fintechs only that are no PG, I know I have at least $1 million. Like Row, like I showed you guys earlier, that's 95,000, and I have like 12 fintech cards. Some are, I think the lowest is like 20 some thousand that I have. So anyways, I don't want to ramble, and I was actually going to go through you guys' questions, but I think a lot of you guys aren't even here anymore that asked the questions. Okay, what company do you suggest to get the business address? Send me an email. Any of you guys that have recommendations, like you want me to recommend something, send me a direct email, because I don't want to just give you the advice right now on something like that, because it's going to depend where your location is too. So there's like two different options, and one's $50 and one's $100. So I don't want to just give like blanket advice like that, you know. And also, like, I could probably save too. Like, it depends if you, depending on what option. Say you use Alliance. If you go through Alliance, then I have a code that you can use. I think that saves you, gives you 0 setup fee, and it gives you like the first 3 months at 20% discount or something. I'd have to look. It's in my other videos. I think you can see in the descriptions. And then there's like Opus 2 that saves you $100 if you use my link. And I think the code's GBC 100, if I'm not mistaken. So just any of you guys have any, like you're wanting a recommendation, just email me, support@joshvanhorn.com. Again, support@joshvanhorn.com or support@getbusinesscredit.com. Either or, just email and just ask whatever question you have. And then, yep, Game Master said he has 800 and got some denials. Quite frustrating. Yeah, I mean, there's so many factors that go into even personal credit, just like business credit. Like, it's not about scores completely, you guys. Especially on business side, don't focus on scores at all. But on personal side, scores definitely matter, but it's still what's on the report. Like, across the board, this is the part that matters the most. See how it says insufficient information to produce newly reported payment trends chart. Well, that's going to be affected, and then your continuous payment trends, your combined payment trends. But this is the most important. Single-handedly, your quarterly payment trends. And then number 2 would be your monthly payment trends. But first and foremost, if you're trying to actually get like a good loan or underwriter, this is what they're going to put the most weight on, is the quarterly payment trend, and those need to be consecutively too, like, I'm not just saying you want to have 100%. That's also going to depend, like it says here, like insufficient information to produce newly reported payment trends chart. So this is like the quarterly payment trend is important, but you can see it. These are just quarters, right? And you can see it's 12/25. So, in April, it's going to update, and then you're not going to see this anymore, but you'll still see it. But what good is the quarterly payment trend if you don't have the sufficient, like it says here, insufficient, because there's not enough data. So you really want to have all 5 of these boxes you want to see, and they all should be like green, but I'll address that with this particular student. And you want to have them be like this. You don't want even 1%, but it can be a lot worse though. But this is what matters more than scores. Let's see here. Do you like cash secured business loans? Yeah. No, I don't like any. I already touched on this topic earlier. I think like Credit Strong, it's like the same. I mean, if you're looking long-term funding play, then yeah, you could get those. That's fine. But if you're trying to get funding in the next, say, 6 to 12 months, I would not recommend doing any type of secured business loan unless you can instantly pay it off quickly and just do it, say, for like 90 days. Okay, do I like Toledo, Ohio market? I actually, that's not far from Greenville, actually. It's very close because, like, my grandma, she's from Lima, Ohio. Some people call it Lima, Ohio, but it's actually pronounced Lima, Ohio. So I don't want to say from, but spent quite a bit of my time. But I was born in Columbus, but lived in Detroit, Redford, Michigan. It's a suburb of Detroit. As a kid, kind of grew up there. And then I would say my adulthood, it was like from 18, I moved to Greenville out in the country and spent a lot of time there. And I have commercial real estate there too. I own a couple downtown Broadway buildings on Broadway. That's why you'll see on like a lot of my addresses, it's I have two buildings that are Broadway, 311 South Broadway. That's like the main road in Greenville. And then I have rentals on them. But I want to rehab the second and third floor and turn them into like high-end lofts one day. I'm just not there, and I don't trust anybody to actually gut and make it the right way without me being there for an extended period of time. But Ohio, yeah, I think overall Ohio's not the great, like, it's not like for investment. Yeah, I think it's good, but I would avoid probably the area I would avoid in Ohio is Northeast Ohio, upper Northeast, in particular Cleveland. I don't feel it's a good market. I've had a couple real estate students buy properties and already lose upside down on rehab properties. And they were pressured into buying them by some real estate mentorship place or a person that had joined. And I would stay away from it completely. That market, especially if you, I would say it'd be okay if you grew up in that area and you know the area, but if you haven't, I wouldn't say it's a safe investment. It's much better for you to invest if you're not in the area or whatever. I would say like Toledo probably be okay. I don't know Toledo market very well. But that's probably, I would say, is a more safe bet. I would say. I've said it'd be probably considered comparable to Akron, Ohio. So, like, yeah, I would say even if it's in that bad area of Toledo, I would still say it's probably, depending on the price, of course. But yeah, I would still say that would probably be a much better, safer bet than Cleveland for sure. I even own 2 parcel lots in Detroit that I bought on an auction like 15 years ago. I bought those on eBay for like next to nothing. And they're worth next to nothing still, but it wasn't a very big investment. So I think that's, we'll see. It may be one day, 50 years from now, it will be turned into something and developer will buy everybody's slots or something. I don't know. Need to update and unlock mine. What was that? Need to update, unlock mine. Haven't found anything on JCPenney's to resell. Yeah, you need to utilize the AI. AI can help you with that now. It wasn't before. Now you can utilize it. Like Gemini will help you do that research. Thank you. I learned a lot about gas cards. No problem. And I think, Joe, you're one of the students, that Jason signed up, if I'm not mistaken. Keep on going. You're on fire. I'm not on fire so much anymore. This is, I think, for sure the longest live I've ever done. Even my ears hurting from the headphones. I know I have the headphones on. I say your name wrong. I'm very bad about pronunciation because my dyslexia and the way I read. Natal? Natal? Am I saying it right? You're probably not here anymore, but Natal. That's why in the one, when I sent you text, I just say Nat, because that's, hopefully you don't get offended by that. It's just like for short. Yeah, Game Master, I know you're a student. You've also been following me, I think, the longest than anybody that's here. Let's see here. Fund on Up. I love the name, as always. I've told you that before. Smash the like button. Duck Motive. Thanks, brother. Appreciate it. And anybody that's here right now, and if you have already reached out and you watched this live, to this point, doesn't even matter if you skipped around a bit, but if you watch this, make sure you tell me or Jason if you reach out to us and you do a phone consultation, because you'll get an extra discount if we accept you into the mentorship, or if in the future, if you say join the platform that's not the mentorship, but say the course only, or the Boostify platform, we'll make sure, like if you watch this, just request a discount and we'll make sure that we get you a discount. Let's see here. You guys, yeah, have no idea what's coming. Like, I think by May, everything, I think, I don't want to say too much, but I think by May or the end of May, we'll have everything fully launched for everybody, even not just students, but if you were to want to do the course, much more affordable than the mentorship, and or if you just want to join the platform for resources, and do the monthly with all the reports and everything that's similar to Fair Figure and NAV, but then it's the education part too, with all the AI and stuff integrated with my AI brain basically in the back end of it. I think that everything will be pretty much launched by early summer, and you guys have no idea what's coming. It's like you guys will be shocked. I know that. I'm even shocked myself on what I'm coding, and I've been working on this for like 14 months now. You think you need to pivot to a new business too? Well, maybe you need to have another business, always have plan B. I wouldn't give up on what you're doing, the Pokemon stuff. I think you could still but just form another LLC maybe, and kind of, you already know enough from what you've already learned, kind of duplicate that process to a sense, but have it be more of a broad name, and start compounding that banking data, even if it's just a little bit, a little bit here and there does help. But as far as that's the part, it's hard for me to really help. I can advise, but I can only help so much. I don't know. You have to have passion for what you do to be successful. I mean, not always, but you really need to have a passion for what you're doing or the business that you're going to start. Because if you don't, then you could get burnout, and then you don't give it your all, and then it's like you're selling yourself short. It's like most people end up giving up when they're at like a couple feet from the finish line, like a pivotal turning point. It's like they're almost there and they don't realize they're almost there. And then they just kind of pump the brakes a little bit and then shift their focus or something, and they would never get there. I don't want to say they'll never get there, but I've even had it happen to me over the years where it's like, I know for a fact, different times and different businesses I started since like 2001. I know there's been a couple of different instances where I know I could have, that I was like this close, you know? And it's like I either gave up to like just almost at the finish line, or I didn't realize that potential of where it was actually going, you know? So, and that's why it's always good to have multiple things going on too. So you always put your main energy into one, but it's always good to hire people smarter than you if you can and have them run your other company, you know? Like even like Boostfy, for instance, I'm one of the co-founders, right? But I'm more on the tech side and the vision of it all and stuff, you know? But I'm going to hire somebody smarter than me to be the CEO or the president, you know? It's just like, this is a company that I know is going to get could potentially be $100 to $500 million valuation company within 12 to 24 months. So it's a service as a service platform, you know? So, I mean, heck, it could even very well get over $1 billion valuation within a year or two. I mean, Ramp is at 8 billion, you know, and I don't know what not Divvy, but Nav is worth, but like the Boostfy platform is like Nav and Credit Karma on steroids times 10. You know, there's nothing like it. So it's hard to compare it to. So whatever like Nav is valued at right now, times that by 15 or 20, I think is what Boostfy would be valued at. I mean, just the domain alone, I had to pay $45,000 just for the boostfy.com. About that 3 or 4 years ago. And Boostfy's been in the works for a long time. It's already been like, I've been planning all this since like 2021, and it's just like, it takes time, and especially when you're OCD, and especially when there's all this technology, and I'm coding it myself. And why we're at that point on my show, you know, so you can see here, like, you know, this is like the recommended, like I was explaining before, like the Dun & Bradstreet has the credit limit recommendation, but you can see they have multiple scores too. You can see predictor and supplier evaluation, and then your paydex score that everybody wants to focus on. But don't focus on the scores at all, you know. Then you see like there's also Equifax, and then Equifax is slightly different as well. But like there's also the business credit limit up to 50,000. That's what's recommended based on the payment history and risk factors. So, and this is just like a demo, you guys. This is not like it's just so you guys can see. This is just like a explaining dashboard so you guys have an idea what it's gonna look like. Some of these features will be there and some of them won't be there on the final product, but like 90% of this is what it is looking like right now, as of right now. See, you know, you can see that credit safe as well. Let's see here. And then you can see Experian, see how Experian's going to have a little bit different, how it shows like high risk and stuff. But this is a different score, right? Like I was explaining, you have to understand the different scoring levels as well. But see how this has like, say, the verified business data. Well, you want all this to be able to be in sync. So the portal is going to show, even if you're not a mentorship student, if you're just, say, one of the BoostFi, say you open up a BoostFi account once we launch BoostFi, then you're going to see all the BoostFi scores. BoostFi has 4 scores. So we have a social score, a financial banking stability score, a risk score, and then a combined BoostFi final score. And that's this score you're seeing here, how it shows 749 to 1,000. And that's basically all the combined data being looked at as a whole. All your business credit reports factored in, along with the credit intelligence system that I built, along with the social signals, your website, and also your plaid, all the banking data. I don't want to say too much, but nobody else has this types of metrics that I built into this. So I've kind of made it where you could just focus on improving your BoostFi main score, because if you focus on improving that score is not made up based on the scores that don't matter. That score algorithm is a mathematical formulation, logic scoring that I made dependency based on the things that actually do matter that I've been explaining here, like quarterly payment trends. And it's looking at everything as a whole. So if everybody wants to get focused on a score, that's why I made the BoostFi score. So the BoostFi score is a score that is basically merging everything together and also factoring in what the underwriters look at. Okay, so and also, like I said, there's so much AI involved too with this and its recommendation. Like 10 people could sign up tonight and you guys could all have similar businesses, but it's not going to give you the same. Like, it's all customized 100%. And it's somewhat automated to a certain extent. Well, it's fully automated, I would say 90 some percent, besides obviously the one-on-one mentorship, because there's some things that a human like myself, there's no way I can code logic at 100% of what I would decide, but pretty close, but pulling the trigger if you have $100,000 and how to use it to leverage it to get 500,000, that's a different story that need to talk to me about if you're one of my students or something, so there's different things. But if you're one of my past students or current students and say I've had timing issues, like, this is going to be like, you're going to feel like you're in heaven or something. Okay. This is crazy. It's already 5 hours and 56 minutes and there's still over 10 people here. You guys, if you guys just tune in, or you guys can watch the replay too if you just tuned in or something, because I've been here since like midnight Eastern Standard Time. Give the video a thumbs up and please hit the subscribe button if you're not already a subscriber. And if you watched this, please, if you're watching this time or you skipped around, and if you are interested, just send us a text, 937-423-9954. It's my personal cell phone. And say you're to do a consultation, free consultation. If you watched this far, then just make sure you point that out to me or Jason, and then we'll factor that in on if we approve you for mentorship, then I'll factor that in and give you a rambling discount, I should say, since you were watching so long. Yeah, exactly. Denise says, don't worry about passion. From the trainings I've completed, your business should be sold. 50 Cent didn't care about water business. You sound sell, then do passion business. I agree, but disagree to a certain extent. It really depends on the type of person too, because if you're, say, somebody like me, if I don't have passion for something, I like the BMW site business. I formed that LLC. Uh, if I kept it any longer, even though it was profiting around like 12 to 13,000, it was doing like 16,000 gross per month. But if I didn't auction it off and sell it when I did, I would say within 6 months, it'd be worth maybe 10,000 or less. But I was able to sell it for 274,000. And it was generating and could have went even further, but I just had zero passion for it. That's why I even hired a 3PL company in North Carolina to handle all the distribution. So it's completely all automated and everything. But I didn't even want to deal with even the 1 hour a month that I did have to deal with ordering and stuff, so it's like, I don't want to sound arrogant by that, but you do need to be passionate. And it just depends on who you are too. Everybody is different, But regardless, you got to grind no matter what. Hustle, grind, even if you're not super passionate about it. If there's a way to make money, it's no problem. Just grind. And yeah, I guess you can be, once you have the money, then you can do something you're more passionate about. But there's no reason that you can't do both at the same time too. The millionaire next door. I like that. Definitely. Let's see here. Credit Savvy Gil. He's another student of mine. He also does personal credit repair, but he's probably out of here already. This was 4 hours ago. I can't believe I'm still alive. This is crazy, you guys. Yeah, exactly like Jay said. Business credit is very complex. You guys don't understand it. Like how everybody else makes it out to being like so simple, like personal credit. Personal credit can be complex, but it's at least easy to straightforward to understand. And it's very score driven, really. Like for the most part, it's score driven. Business credit's on a different ball game altogether. There's so many different variables and factors, and there's personal guarantee, no personal guarantee, different bureaus. Yes, and for personal credit, there's different bureaus, but they all coexist and they all match. On business credit, it's not the same. They all have a different purpose for different underwriters. So it's, and I don't even think people even in business credit that call themselves a business credit expert, I don't even think they even fully even understand what they're even talking about. Just because they don't stay up to date on things, it's like they still are talking about AD Paydex score and Dun & Bradstreet trade lines like it's the most important. Well, that's important 2008 to maybe 2015. It's not important now, but they're still stuck on that. And you'll still see new videos being put out of new people rinsing and recycling the same old outdated information. So yeah. Yep. Natal for sure. Yeah. And there's easy ways to do it too. Like on Charles Schwab even has where you can just pick the, say, 5 stocks that pay dividends, and do those quarterly dividends, and then have it set to reinvest those dividends. Because if you do that, it's just compounding, and you can kind of just set it and forget it. And I can honestly tell you guys, like I told you guys before, like I think I haven't counted exactly, but say the net worth. Let's just say this as an example, because I don't want to confirm or deny exactly that exact amount, but just say my net worth with assets, like I'm not saying liquid, but just assets and holdings and stuff. Say my net worth is around 16 million. Well, I could tell you that out of that, between crypto and the stock portfolio, give or take, probably 4 to 5 million of that is from 8 stocks, I would say. Yeah, about 8 stocks and 2 cryptocurrencies. And it's not Bitcoin. I have a lot of holdings with Tron Coin and Solana. But I started somewhere, and I got into Bitcoin back in like 2014 when I first got into it. And I even have miners too here. I do mine. I'll make another video about that. I do crypto mining. It's just not as profitable as it was before, just because of costs and stuff, with electricity and, the ASICs miners, they get hot and whatnot. But, I dabble in all kinds of stuff, but I can tell you right now that, I've definitely, I would say in the last, I don't even want to say 5 years. I would say in the last, say, 3 to 4 years, I've profited in the 6 figures just from the stock portfolio of just between, I would say 8, but really 4 out of the 8 probably has made up a majority of the portfolio net worth. And I would say profit of that, because I don't take out from any of that. I compound it, because you don't want to take out unless you see it going down. You can do a trade, but you don't want to be taken out and stuff, because you're going to have to pay that capital gains tax. And I don't want to pay that any more than I have to, It's already being reported to IRS, but just, I just let it compound, Especially I have 7 kids, and not cheap to put them through college and stuff. Not that they're all there. I only have 2 boys in college right now, 20 and 21. But my 16-year-old daughter wants to go to Ohio State University and possibly do dental school, and that's like $650,000, So, but who knows? She may change what she wants to do. I just don't want to make it, like whatever my kids want to do, I will support whatever they want to do. I want to be better than what my parents were able to offer me. Obviously, I think all parents want to be better than their parents, and better life than what they had. But as long as my kids want to do something productive and good with their life, as far as education goes, I have no problem doing what I have to do to invest in their future, so then they have a chance at being, successful. But if they just want to get money from me, then no, I'm not going to do that. I don't really spoil my kids, and even I'm comfortably living and stuff. I don't buy luxuries, and I don't buy my kids like whatever they want. I don't believe in spoiling my kids, because if they never have to go through any hardships or struggles or anything, then you're only doing them a disservice to their life. They need to experience real world and not just have things given to them. If I was to die tomorrow, none of my kids would be comfortably like, they wouldn't be instant millionaires. Maybe they would be when they're already older, because I have a trust set up for my living will estate trust where they have trust fund, yeah, but they don't get it when they're young. They get very minimal amount if I was to die right soon or something, right? It doesn't actually get released in big chunks until 18, 21, 25, 30, 35, and then full release at 40 years old. Because I think at 40 years old, you're mentally mature enough to make wise decisions. So that's when they would get like 75% of whatever my net worth is that I left to, say, equally to my children, right? The different payments that would be released to them prior to that, being 40, is going to be minimal, but it's each milestone, it gets released more and more as they get older. Because honestly, if I don't want to say myself, but if like I lost a parent or something, or my grandpa left me $1 million when I was like 18, it would probably be spent on stupid things or bad business investments, because you have to learn things, you know. And I'm an entrepreneur, but if I wasn't an entrepreneur, I know like my friends, they would have spent that probably on like a sports car or going to clubs, girls, who knows, you know, wasted the money, go to Vegas or something, you know, whatever. So that's exactly why I have it set up where my kids won't get a majority of their inheritance until they are at least 40 years old, you know. I obviously don't want them to suffer, but they need to actually work and not have things handed to them, you know. Anyways, RGI, thank you so much for that. Kind words. Welcome. Sorry, guys, I'm just reading. If I get a preview mentorship or providing this. It's RGI. It's a full client portal. So just text me and we can go over it and do a consultation. It's a full client portal. So, and it's all step by step. There's no spreadsheets per se. It's all individual tasks like you see kind of here. It looks similar to this, but it's a different client portal. And yes, welcome. If you don't use the credit, you can get your limits either slashed, like limited. I've had that happen to me with a couple of accounts. If you don't use it, you can lose it, but it's depends what it is. That's why I rotate all my cards. Like I don't use much of my cards, you know, even the business ones, but I'll purposely like do like a big charge, even if I don't need the money, but I'll use like Melio just to do a large transaction. And then I'll just eat the fee just so I don't lose it. But I'll do that like once or twice a year with each of the cards, because I just have no use to spend something large. Like I don't spend much money and stuff, you know. And I have too many cards where even I use it for business expenses and stuff. It's still like, it's impossible. It's a good problem to have though, I guess. But that's why I definitely wouldn't recommend for anybody to do what I did as far as to that extent. You know, you can still accomplish the same thing with 20 to 30 cards or something. And that's a lot too. but definitely not get 100 plus like I have. RGI, you ask a lot of questions. Better to do consultation first with Jason, but just text me 937-43-9954. You guys, I gotta get off of here. This is crazy too. 6 hours and 13 minutes. Definitely, this is the longest live I've ever done. Never done the live this long. This is like when I first started the YouTube channel. I think December 2019 or shortly after. This is the longest. Like I think I did like a 4 or 5 hour live back then, and I was like hooked on, like so happy about doing this YouTube, and I was so new at teaching on YouTube, not new at business credit, but this is crazy. I can't even believe I did this long. But yeah, reach out if you guys have any questions. Support at joshvanhorn.com if you need any recommendation as advice go. If you're interested in my one-on-one business credit mentorship, just text, or even now that's my personal cell phone. I may not instantly respond because I'm actually getting tired, and it's 6 a.m. Eastern Standard Time, but here in Manila, it is 6 p.m. And I'm usually waking up just about now. Am I open to collab with other credit YouTubers? Nah. I get contacted by so many that are bigger than me when it comes to personal credit, and they want to feature me on their podcasts on Spotify and their YouTube audience that they have close to 1 million subscribers. I think one has like 1.1 million subscribers, but I've actually declined a lot of them. It depends who it is. Like I would be open to it, but like I literally just declined a big one that's been asking me for like over 1.5 years to come on his podcast, but I declined because I don't agree with not just his product offering that he does on the side, but I don't agree with his credit theory, and I just have that uneasy feeling about him, like he's not doing things for the right reason. It's okay to do things for money. I'm not saying, oh, you can't make money and teach credit at the same time. I'm not saying that, because time is money and you should be rewarded and paid, but only if you're bringing something of a value and you're not scamming and taking advantage of people. Like I do have a big problem with somebody that will charge $1,500 for something that is outdated and old and only worth maybe $200 at most. That I have a problem with. That's why, like with my one-on-one business credit mentorship, it is expensive, and I do understand that, but you're getting what you pay for. You're dealing directly with me and Jason. And now that Jason's on the front end of things as well, you have him available too to call like nearly like 9 to 9 Monday through Friday. Like he's available. I'm not always available. Even if you're one of my one-on-one mentorship students, you need to schedule the appointment with Jason with me. And because I'm usually booked out at least 3 to 5 days in advance, but at least you can schedule the appointment with him, and then we can do our status calls. But most of my students don't need to talk to me very often. They have the option to, but most of my students don't need to, because I keep them busy in the client portal when I get the tasks assigned, and they need to do a lot of the foundation work in the client portal. Once they get the foundation work done, and then you want to do more strategic things like, okay, how do we leverage this credit line and maximize it for you to get approved for some other credit lines. So that's where it's better to get on phone calls with me and strategize and map out the plan to get the most out of each credit line, because you should be able to take one credit line and have that one credit line, that new credit line you get approved for, should complement the next application that you do. So you leverage that credit line, and that credit line should complement and get you even higher for the second. And then you just keep on stacking, doing somewhat manufacturer spending. But if you do things right and leverage it, you can literally turn like a $5,000 or $10,000 initial approval into $1 million in combined credit limit approvals. I'm not saying it happens overnight, but you can do that. I see it happen all the time with my students. A lot of my students, I don't want to say they give up, but they get so much credit available to them, and then they just kind of go missing. I'm like, hey, where'd you go? You still have time in your mentorship left. It's like they're content or they're happy. And then some people just give up. You have to be dedicated when it comes to business credit. But that's also why I'm happy and proud of what we built with the new client portal, because it's literally taken out the confusion, because business credit can be very confusing, as you know. I wouldn't be on here for over 6 hours if it's not confusing. Well, maybe I still would be because of my ADHD, but even if I didn't have ADHD, it would still be over 3-hour live stream covering everything that I covered without rambling and stuff. So it can be very complex. And the new client portal and the Boostify dashboard and the Josh AI system, that's why it's like literally there's nothing out there like this, period. And it will take everything out of the work, where business credit for you will be almost automated to a certain degree, as automated as you could possibly do when it comes to somewhat done for you business credit. But yeah. Anyways, yeah, I don't know what this is. You think you're on Facebook, I think, because it says person turquoise riding headphones or something. Or no, it's YouTube. Yeah, RGI, I see that's the problem. You have so many questions. You have so many questions where that's why, because you have so many questions, I don't want to confuse everybody else because of the questions. It would be better to do a consultation. So then it would be a lot quicker to get the questions answered, I think, on a consultation. Or even if you just emailed me, if you don't want to do a phone consultation, you could just send an email with line for line of what the questions and stuff. Because some of the things too, I can't just give you a quick answer on, because it's going to depend on, I may need to ask you some questions to be able to give you the right advice, So, and that's one thing I'm always cautious about. I don't like to just put out blanket advice like other content creators or YouTubers do. I put my real legal name out there, and I don't hide behind anything. Other YouTubers, they hide behind a brand or something, and they use fake last names and stuff. I have a name and brand to protect, and I'm also a musician, singer-songwriter, and I have an upcoming tour that I'm going on this summer. So my name is very important to me and my legacy. So I can't do anything to mess it up, and I don't want to give any possible wrong advice, or anything that can be misunderstood. That's why I like to clarify things. And I guess that's maybe one of the reasons too I'm OCD. But yeah. Anyways, yeah, this is crazy. I've never sat 6 hours and 23 minutes on a live. I think this is a record period. I think the longest is like 4 hours. And I can't believe you guys are still here. This is amazing. For anybody that just came in here or just waking up, please give the video a thumbs up. And I'm going to end in a second. Make sure all notifications are turned on and hit subscribe. I have the content releasing since it's morning now. It'll be tonight because I need to get some rest, but it'll be this coming evening. And you definitely don't want to miss this because it's basically the live, but I'm going to re-record and take out so much of the rambling and break it into different chapters and sections so you guys understand it better. But you guys are rock stars for anybody that stayed here even more than 10 minutes out of this 6+ hours. It's crazy. I can't believe between YouTube and Facebook, we have like 16 people right now. It's crazy. And I know there's a couple here there's at least 5 people here, I think, that's watched the whole entire 6 hours and 30 minutes. It's crazy. Anyways, you guys, I hate to cut it off, but it's been 6.5 hours. Please text me if you're interested in my one-on-one business credit mentorship. You can join the newsletter too. It's a free newsletter, and you get the business credit strategic methods. I'll put a link for that here. It's in the chat. You guys can see that. It's on businesscredit.cc.newsletter. But the ebook's not released yet for this strategic methods. My first book that I've actually released. It's like almost done. It is only limited to, what did we say? I think me and Jason said 100, 150, I think. I haven't decided yet. I think we're going to cap it at 150 people that will get the newsletter is free, and you'll get once a month resources and updates and stuff of just some free advice minus the rambling. But the ebook volume 1, that is limited to 150 people, but it's free. We're not charging anybody, but you have to just sign up on the newsletter to get the ebook, and the ebook will be released in April. And you guys can see too, you can, I don't know if you can, oh wait, I thought you guys could see what I'm talking about. I guess you can't. I feel like an idiot. I was just showing you guys. Yeah, so this is what I was just talking about for anybody that was just tuning in. The link is there, and you get this included. It's free. It doesn't cost anything, and you won't get spammed at all. But it's just basic. You just put in your name, email, phone number, and then these are optional. You don't have to select them. Leave them empty. If you're not interested in the mentorship, don't select. If you just want the newsletter only, an ebook, then do not select these. But if you are interested to see the pricing or want to know more about the one-on-one business credit mentorship, then you just check here. If you're interested in BoostFi, the BoostFi Business Credit Intelligence Platform, that's launching, like I said, soon. It's going to be like initially invite only. And you can be notified for early access. Only my one-on-one business credit mentorships students will be migrated and have access to it as beta testers. But it's BoostFi is a separate company as well than Get Business Credit. Okay, separate company. and I am one of the founders. I'm the co-founder. But Boostify is trademarked, and we have 4 different intelligent mode scores. Too much to go over right now. In due time, I'll show you guys that. But anyways, I put the link in there for this as well. But anyways, love you guys so much, GBC family. Please give the video a thumbs up, or the live a thumbs up. This is by far the longest live I've ever done, over 6.5 hours, and I need to take my glasses off because they're starting to hurt my eyes. But thank you guys so much. Appreciate you guys' time, and I do value you guys' time, that you guys spent the time to listen to this very extremely long live. And just make sure all notifications are turned on, because like I said, and 12 to 14 hours from now, I will be dropping 2 different videos. One that's about Experian in particular, and showing you my business credit report that's 17 years old, and the trade lines, how and what I did. And then it's going to be 2 others that are compared to a 2-year-old student and a new student, so you guys can compare and see what you need to do and what you need to make sure that you avoid and don't do. And don't pay attention to scores. Focus on what matters the most, and that's not the scores, but the actual filmographic data and the type of trade lines. Don't just get any trade lines, get the right trade lines. And it's not about quantity, it's about quality of the trade line. Like I said, I much rather have 3 good trade lines that are solid, that I'm using month after month because I actually have a need for them, than having 10 Experian trade lines that are just starter crap vendors, 50 here, 100 there. That's not good. Just avoid that. And there's a lot of them that actually don't even report, and they claim to report and they don't. I can give you a whole list of them, like the Red Spectrum, Strategic Network Solutions. I just went blank, but there's at least 7 or 8 that are claimed to report, and they don't. They lost their data furnishing license. Anyways, you guys, it's exactly 6:30 that I went live, that I've been live and haven't even took a break. I can't even believe I haven't even had to go to the bathroom in 6 hours. But anyways, I'm done, you guys. Appreciate it again. Give the video a thumbs up, share, comment as well. Comment on the replay, because the more comments, YouTube will push it out in the algorithm. Any little thing helps, you guys. Seriously. I'm revamping the channel, and I'm trying to get, YouTube has kind of punished me by not pushing out as much content in the last year or so as I used to put out. But now I'm getting back on track with the content. So please, if you can, comment so it signals to YouTube to start showing me some love again, like it was before a couple years ago. Okay. Till next time, you guys take care. I'll try to do a live. I don't know about tonight or tomorrow, I should say, but maybe I'll do a live Saturday. You guys comment on the replay if you guys want me to do a live, and also comment if you guys are interested in a private exclusive webinar where you can come on YouTube, but it would be private, invite only, or members only, or something, like a limited to maybe 30 people only, or something like that. If you guys are interested in something like that, comment, and we might put something together and do it this weekend or something, and if I do something like that, obviously it'd be free for my students that are in my mentorship. But if you're not one of my students and you just want to talk one-on-one, but do a group webinar, Q&A or something, then we can possibly do that this weekend and do something where it's very affordable, minimal fee. Because I want to try to help people that don't qualify for the mentorship and aren't able to have the means to do that, but maybe for a small minimal fee, just for the time, basically, we could do something like that or something. But anyways, you guys take care. Love you guys as always. Appreciate everything. Just send me an email if you have detailed questions that or you need recommendations on, or just text me. Okay. I'm tired, guys. Text. That's my personal number. Bye-bye, guys.